Term trade.
Or a long-term investment.
All you have to do
Is ask Profit.
Good morning and thanks so much for tuning in. You're watching All You Need to Know on NDTV Profit, and my name is Alex Matthew. Let's take you through the key headlines this morning. US equities gain ahead of key jobs data. All benchmarks rise about 1% or so. Investors are also focused on earnings. Apple announces a $110 billion buyback of shares. Stock rises even as iPhone sales fall 10%. Back home, action is stock-specific as investors look to book profit and consolidate trading positions. RBI lifts the ban on Bajaj Finance's digital lending products. The stock might just open gap up. You can catch all of the action right here. Adani Group companies power ahead in the first quarter with strong earnings. Ports exceeds guidance and Q4 revenue and margins surge. Turkey halts all trade with Israel because of what it calls a worsening humanitarian tragedy in Gaza. US equities gained in a risk-on move overnight with the tech-heavy Nasdaq leading the charge. It gained over 1.5%. The Dow and the S&P 500 gained close to 1%. And that was accompanied by a surge in bond prices ahead of some key US data, which includes the jobs data. Market watchers are anticipating will support bets of Fed rate cuts this year. That's despite signs that inflation is proving to be stubborn. The yield on the 10-year Treasury fell about 4 basis points to 4.59% overnight. Now, one of the big talking points on Wall Street yesterday was Apple's earnings, and even that was overshadowed by the tech company's announcement of the largest share buyback in US history. The company's board approved a buyback of shares worth $110 billion. With the announcement, Apple tops its own record for the largest buyback announced in the US. In 2018, it had authorized a $100 billion share buyback program. Now, meanwhile, oil is headed for its biggest weekly decline since February on signs of weakening demand, increasing speculation that the OPEC Plus will prolong output cuts to support prices. The West Texas Intermediate traded very close to that $79 per barrel mark and is heading for a weekly loss of more than 5%. And Brent is trading below $84 to the barrel as we speak. Almost 90% of traders that were analyzed or rather surveyed by Bloomberg have predicted that the OPEC Plus will extend curbs when they meet on the 1st of June. In more international news, Turkey has confirmed it would halt trade with Israel until the country allows uninterrupted and sufficient flow of humanitarian aid into Gaza. Turkey has decided to expand last month's restriction on some Turkish exports to Israel due to worsening humanitarian tragedy in Palestine, according to a statement that was sent out by the Trade Ministry not too long back. It also said that work was underway to make sure that Palestinians were not adversely affected. Now let's turn to the Indian equity markets, where earnings is going to be front and center today as well. But let's take you through the major cues from the F&O space. We went through the weekly expiry yesterday, Agam, the first one of the new series. How does it look today?
Well, it was a quiet one, surprisingly, Alex, and I reckon that we're going to see a little bit of a continuation in the trend that there could be consolidation on the cards going forward, but we're going to continue to test new life highs, considering the fact that the Nifty is, in fact, trading in that range at the moment. A 0.2% advance for the Nifty yesterday. A 2.5% increase in open interest towards what looks like fresh longs for the Nifty futures. The Bank Nifty futures also seeing, well, a decline in open interest, along with the fact that the underlying came off by around 0.3%. So longs unwinding in the Bank Nifty. For the Nifty to move up higher, where it's certainly going to need a lot of support from the Bank Nifty constituents, but that's going to be a wait and watch. In terms of the options market, what we saw yesterday was a lot more consolidation around the 22,700 mark on expected lines, considering we didn't see too much movement there. And when it comes to your overall distribution, as we move into a new week, and this one, after a very long time, is going to be a week which will not be truncated because of holidays. That's where we're keeping an eye on the 22,700 call and put, where we do have maximum open interest at the moment, and which means that a lot of straddles have been written around at that mark as well. By that I mean calls and puts being sold simultaneously. Of course, on the higher end, we're also keep watching out for 23,000, which is a lot closer for the Nifty now, and on the lower end, 22,500 in terms of the put accumulation. Coming down to stocks, where once again, a lot of focus will continue to be on earnings. Well, we do have weakness in Hindalco, Coforge, along with IGL and Pidilite, all of them looking at shorts coming through. Coforge will, of course, react to numbers today as well, where it's an operationally weak and below expectations. And in terms of stocks, we saw unwinding. Let's pull that list up. We saw about a short covering for Canfin, Home Starter Chem, Federal Bank, Shriram Finance, and Biocon. But as Alex, you mentioned, we continue to keep an eye on a handful of Nifty counters, as well as a lot of the other counters from the broader markets in terms of earnings.
You know, I'm going to go ahead and call it. Maybe I'm wrong, but I think that I might just be right. The stock of the day is going to be Bajaj Finance.
Yeah.
For the reason, Agam, that there is a significant respite. Thanks so much for getting us those details on the F&O space. But talking about Bajaj Finance, there's a significant respite because the Reserve Bank of India has lifted restrictions placed on its digital lending business. We've got Pragati to tell you about how significant this is for the company. Pragati, morning. What can you tell us?
Right. So last evening, RBI lifted curbs on Bajaj Finance's two products. That's the e-com and the Insta EMI card, which came as a significant development for the lender because it is whenever RBI has placed any business curbs on any entity, it is rare that is seen that just in a matter of 6 months, based on a company's remedial action, RBI has lifted these curbs. And we got to know this via an exchange filing that the company had filed. The curbs were lifted with immediate effect. In fact, the company also said that it has started sanctioning and disbursing these loans under both the products. So the very interesting bit here is that it has also started issuing the new cards once again, and the development comes after the lender formally submitted its request to the RBI in order to review these curves. Now, to bring in some context for our viewers, these curves were in actual placed in November, around November 15, because RBI found the company non-adhering to certain guidelines, and these guidelines had to do with the non-issuance of a key fact statement, which is very important. That is that the KFS was not being issued to certain borrowers, and in fact, there were some deficiencies in KFS which was given out against other loans by the companies as well. While immediately in the third quarter, an adverse impact was not seen in terms of numbers because the curbs were just placed in about mid of November, and we can pull up the numbers in front or on our screen as well for the benefit of viewers. If we look at the B2B loans from these EMI cards in the third quarter, that is the change between the second quarter and the third quarter, the impact was seen about 18.5%, and the EMI cards that were acquired in the app because the curbs were placed in November, they were also down to about 30-odd%. But the real impact was actually seen in the fourth quarter numbers, which was very interesting because even in the analyst call, Rajiv Jain ended up saying that the new loans booked were booked only at about 7.8 million in the quarter, and that was primarily due to the RBI curbs. So the loan growth happened just about 4% on a year-on-year basis, which for a lender like Bajaj Finance was quite significant. But since now RBI has lifted these curves, it's going to be quite interesting to see how the business revives.
Thanks for that, Pragati. Let's shift focus now and talk about earnings. Coal India has reported its March quarter numbers, and its net profit rose as much as 25% to over 8,600 crore rupees. Kanika is joining in to break down the numbers for you. Kanika, what are the key numbers to focus on?
Good morning, Alex. So Coal India beat the Q4 consensus estimates. Now its revenue was down 2%, while its EBITDA and net profit was up more than 20%. Now what played out in favor of Coal India were mainly a high dividend yield. Now, the board had recommended a final dividend of rupees 5 per share, which led the overall dividend for FY24 at rupees 25.5 per share at a 43% payout. Now, there was also good visibility around the production ramp-up, where production of raw coal was up 7.8% in Q4 year-on-year, while the offtake of raw coal was up 7.9% in Q4 year-on-year. Additionally, the company also engaged in output enhancement, where it engaged with 15 mine developer operators for a targeted capacity of around 170 million tons. And it also engaged in cost savings and evacuation and infrastructural improvement projects. Now, a few other key highlights over here. Firstly, the e-auction premiums for Q4 averaged at 65.7%, where the expectations were that it would be between the range of 45 to 50%. Another thing is that the full year employee cost was higher than the management guidance. Now, there are a few notes on Coal India that have come in. Firstly, MK, which maintains buy on Coal India with an unchanged target price and a 21.7% upside potential. Now, it believes that the company had changed the accounting policy on stripping activity, which has resulted in a positive restatement of earnings. Now, it awaits more for clarity on this accounting treatment from the management. Secondly, Citi has maintained neutral on Coal India with an 1.8% upside potential and sees that e-auction prices may be range bound despite the rising power demand, as the company already has adequate coal inventory.
All right. Thanks so much, Kanika, for getting us those details. Now, we are going to be focusing on a few stocks that will report their numbers today. And among them, you've got Britannia. To tell you about what key numbers to focus on, we've got Mahima joining in. Mahima, Britannia first, and then we'll go to Titan. What's up with Britannia?
Right, Alex. So for Britannia, we're expecting muted Q4 in terms of net profit. A 3% decline is expected. Now, a few things to watch out for will be modest revenue upticks on the back of volumes. A 5% increase in volumes is something that we can expect. EBITDA will be impacted because of price mix and impact of higher ad spends. And there are some kind of price cuts that Britannia has taken. So because of this, there will be some kind of impact on EBITDA and EBITDA margins. Now, in terms of PAT, as I earlier mentioned, flat growth and a 3% downside is expected, and increase in competitive intensity might impact the overall results of Britannia. So key monitorables will be raw material cost and outlook along with the market share trends, commentary on the downtrending of new launches and distribution expansion in rural markets.
Got it. Now, let's talk about Titan, because there are quite a few aspects to focus in here. I'm curious about the CaratLane business as well. But what are the key numbers, and then what are the key takeaways that you want to take from the management?
Right. So, Alex, Titan is expected to post a robust Q4 on the back of the jewelry business expansion. As you rightly mentioned, as per the business update, CaratLane is expected to grow at 30%, and overall jewelry business is expected to grow at a robust 24%. Now, in terms of numbers, they're expecting an uptick of 20% overall in their net profits, and EBITDA margins are to be improved from 11.8 to 12.2. Now, in terms of key monitorables, you'll watch out for solid jewelry momentum and aggressive network expansion that they're doing. Something that will be on the radar will be consumption trends, and the same store sales growth is expected to achieve a double-digit growth when it comes to jewelry business. Something to watch out for will be large opportunities that are there in the lab-grown diamond segment. Demand trends will be something to watch out for in terms of the festive season that went by, and competitive intensity and margin trajectory is something that will be a key monitorable. And as I mentioned earlier, jewelry business and CaratLane business growth will be something that will be really to watch out for, because both of these are expected to post a double-digit growth.
Absolutely. Thanks so much, Mahima, for getting out those details. Let's shift focus to the real estate space now and talk about Godrej Properties. Of course, it was in the news not because of the earnings, but because of the amicable split of the Godrej family. But it's set to report its Q4 numbers today. And Anushi is joining in to tell you about the key monitorables. Anushi, what can you tell us?
Hey, morning, Alex. So I'll start off with the P&L key measures that The street is pegging now over here. The revenue may see about a 35 to 36% of a decline, while the margins are expanded to expand to about 26% compared to about 21% earlier. Well, this is on the back of the higher realizations that are taking place in the real estate industry in general. So that would be a watch out for. While the net profit may again see about a 10 to 11% of a decline. But more on this, while we do have to understand that the P&L measures are important, but for real estate, the companies follow a percentage completion or a project completion method. So the revenue that they recognize is lumpy in nature. So again, a lot of focus now falls onto other key measures like the pre-sales numbers, the collections, the debt levels. So if you look at the pre-sales numbers, the company had reported about a 135% jump in their pre-sales in Q4, with the MMR region recording up to 4,000 crore of pre-sales. If you look at overall FY24, about 84% of a jump over year, with the company exceeding its guidance of 20,000 crore in FY24, while it was about 61% above the initial guidance at the beginning of FY24 that they had given. But what led to this upbeat Q4 or FY24 if you had to look at? So 4 projects have achieved an annual turnover, annual booking value of over 2,000 crore now. This included the Godrej Zenith in NCR region and Godrej Reserve in MMR region. So that should definitely be watch out on what's the progress going forward in these projects. Now, key monitorables for the business. One is the biggest monitorable that we will be speaking about is the management commentary on its land development in the Vikhroli with the family split that has happened. So that would remain as a watch out. Debt levels considering the increase in the land prices that we are seeing, especially in the NCR region. So that remains a second. And third is the kind of pre-sales and the collection numbers that they give for FY25 that would remain on a watch out.
Right.
So this is what the Godrej we should be expecting for.
Godrej Properties. Thanks so much, Anushi, for giving us those details. Now, Adani Enterprises came up with its fourth quarter earnings yesterday, and in addition to giving Q4 numbers, Adani Group's Chief Financial Officer Jugshinder Singh offered several business updates about key Adani verticals. Listen in.
In our Adani New Industries green hydrogen ecosystem, our target of 10 gigawatt green hydrogen integrated manufacturing is progressing well. Validating the backward manufacturing integration, we have successfully commissioned India's first ingot and wafer line with capacity of 2 gigawatt. This line will not only reduce dependency on imports, but also enhance better control on module production and prices. On its wind manufacturing division, order book stands at 254 sets, and during the first full quarter of operations, the division was able to supply 47 sets. Moving to airports portfolio, we have inaugurated phase 1 of the world-class terminal of Lucknow Airport, which can cater up to 8 million passengers per annum. During the quarter, 10 new routes, 7 new airlines, and 18 new flights were added across all 7 operational airports. Passenger movements at our airports increased by 19% to 88.6 million. Navi Mumbai Airport project is on track for completion in financial year 25. Finally, in our roads portfolio, 4 out of our 10 projects are more than 70% complete in line with target schedule. The Greenfield Ganga Expressway project is progressing well and is on schedule. This leaves Adani Enterprise Limited well poised to launch its incubating portfolio, eventually as independent listed verticals in their own rights.
All right, and with that, we have to slip into a very quick break. We'll be back on the other side with more stock-specific action, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial?
Welcome back. You're watching All You Need to Know, and what you see flashing at the bottom of your screen is the fact that Rahul Gandhi will now also contest the Lok Sabha elections from the Raebareli constituency. And in fact, Kishori Lal, what you're seeing on the screen right now is, there you go. So Rahul Gandhi is going to be contesting from a Raebareli constituency. He has already filed his nomination, remember, for the constituency of Wayanad, and the old Congress stronghold of Amethi is something that you would want to watch very closely as well. Of course, we'll bring you more updates over the course of the day as we get them, and in fact, there you go. So you also have the Amethi seat that is spoken about. Kishori Lal is going to be contesting from Amethi. But let's move on to some stocks that you should watch out for on the back of earnings. And Varsha is joining in to tell you about the likes of Coforge as well as Aztec Life and more. Varsha, what are you picking up?
Starting with Coforge, so if you see, revenue was up 1%, while EBITDA was down 4%, and EBIT was down 74 basis points. Now, new business came at lower margins, which impacted gross margin improvement, while order intake for the entire financial year went up 56% year on year, and management suspended FY25 revenue growth guidance due to uncertain environment. Also, company has signed a definitive agreement to take over Signity Technologies, and Coforge believes that the acquisition will help them to grow at $2 billion by FY27. Then we have KEI Industries, wherein revenue was up 8. So numbers were in line. Revenue was up 18%, while EBITDA was up 20%. If you see the key highlights for the company, there was degrowth of 2.3% in domestic institutional wire and cable sale, while domestic institutional EHV cable more than doubled, and total institutional sale including export increased 13%, and sales through dealer distribution, which contributed almost 45%, increased 24%, and pending order is approximately 3,531 crore. And lastly, we have Aztec Life Sciences, wherein revenue was up 21%, EBITDA was up 135%. Now, if you see, Aztec witnessed slowdown in its enterprise solution portfolio in both domestic as well as global markets. Revenue from CMO segment grew 57%, which actually contributed to the EBITDA margins also, and sustained weakness in key enterprise products severely impacted Aztec revenue, but this was compensated by contract manufacturing of new products, due to which margins improved. And if yesterday there was a deal wherein Adi and Nadir Godrej family had made an open offer for 26% stake in the company as part of family settlement. So these are the stocks based on earnings that we should watch out for today.
Right, and there are even more, Varsha. Thanks so much for getting us those details. Puneet is joining in to talk about the likes of SIAT as well as Ugrow Capital. SIAT, by the way, has seen a decline in the net profit despite a 4% uptick in revenue. Puneet, why is that?
That's right, Alex. So there's an exceptional item of roughly 58 crores that the company has booked, which has led to a profitability fall. Now, EBITDA margins were good, up 6% compared to the previous year, while margins are up 30 basis points. The company has said that there was a notification by the Ministry of Environment, which has led to a regulation which the company has provided for the past few years. So this is one of them, that the company booked an exceptional item this quarter, which led to the margin fall. Also, the company has recommended a final dividend of rupees 30 in this particular quarter as well. When you look at Ugro Capital, there are a couple of updates here. One was the Q4 earnings, the second was an acquisition. They also raised significant equity of roughly 1,332 crores via CCD and warrants, where Samina Capital invested roughly 500 crores, and they are also an existing investor. They have acquired MyShub Life, which is a fintech startup for 45 crores. Do note that MyShub Life had earlier raised at a valuation of 240 crores. This is a very, very steep downgrade for the startup. On Q4 results, the loan book has reached roughly 9,000 crores, while total income is up to 330 crores. PAT is also up 133%. And finally, on JBM Auto, decent set of numbers, but a big fall because of rising expenses in the profitability. Profitability is down 62%, coming in at just 10 crores, while margins are down 358 basis points, coming in at 4.91%. So those are the few other stocks, apart from the ones that Varsha covered, that we're tracking this morning. Back to you.
Absolutely. Thanks so much for getting us those details. Puneet, that brings us to the end of this particular edition of All You Need to Know. But up next is India Market Open, and we're talking about a lot of the stocks that you just heard about in a lot more detail. So I'd encourage you to stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money. Welcome to India Market Open. It's the last day of the week, and it looks like there could be some Friday cheer for the Lal Street. GIFT Nifty indicating to a pretty good start. Whether it's Friday cheer consolidation is going to be anybody's guess for now.
It's not been bad at the end of a truncated week, and even globally, 3 days sort of a losing run has been snapped. But Samina, I must say that things have held out fairly well in a week where the Fed sort of gloom was there. What will they say next? It's turned out pretty okay, and most of the result season is also looking quite positive.
Yeah, I think that's the positive fallout of not being dependent on FPI flows.
Yeah.
Right? This market is driven by domestic investors, and very obvious, like Tamanna said, despite cues that have not been very great globally, our markets have held out, and it's largely been earnings. I mean, look at REC, PFC, case in point. You've done a good quarter, and the markets are going out to reward you.
Yeah. So markets are rewarding. Markets are also going to reward a lot of other stocks this morning, and we're going to talk about all of that on India Market Open. But let's set you up first with what's been happening globally. So the first things first, US markets have ended completely in the positive after a 3-day sort of a losing streak. Those Fed blues sort of behind the market, with Powell making it very clear that there's no question of a rate hike. When the cut will come, well, it's delayed but not derailed, is a quote that I read, and that probably explains what we saw in the US markets overall. So the Dow over 300 points up, the NASDAQ up, because tech companies are gaining from a softening of the bond yields, and that's what you're seeing over there. But Apple was the star of post-market sort of coverage, because the numbers came in post-market and better than expected for Apple. Sales of iPhone have, by the way, slumped 10%, but nevertheless, the buyback that they announced has really enthused the market. About $110 billion. It's their biggest ever buyback. So Apple was the excitement over there, and there you have the Apple chart as well. Apart from that, I would say the bond yield cues have also pointed out to a fairly sort of a benign mood in that sense. The big trigger, though, of course, is going to be the non-farm payroll data, which is going to come up now. It's about 4.59, sub 4.6% on the 10-year. So that has eased off a bit. So has crude. Crude actually recovered slightly after quite a bit of a downtrend. It hit a 7-week low. Brent is now below $84 per barrel. So there's no real surprise why you're seeing your implied open looking that positive perhaps this morning. And just pull up Asia. Asia's largely opened up in the green as well, on the back of the cues that Wall Street is telling us. Implied open is what we should see, and yeah, you're looking at a pretty good start on the implied open, 113 points up. So the global setup, Samina, looks positive. What are the big sort of factors or the indications that the street is going to watch domestically?
Yeah, just one very quick mention, and this is how things change, right? I looked at an article this morning and said the yen has had its best week ever. This comes in after, of course, we all reported that the yen has been at its lowest level in 34 years. So you had a little bit of intervention. You had the Fed retaining its stand on rate cuts. The dollar, of course, weakened on back of that and gave a little bit of support to the yen. But that's how things work these days. It's either best year, best month, best quarter, and of course, worst as well. But in terms of market action, yesterday was interesting. What we've really seen this week is that new records were made in the early part of the week, but there was a little bit of pressure at higher levels, and that led to consolidation. So what happened on Tuesday was the markets did a very sharp U-turn. Wednesday, we went into a holiday. When we came back to trade yesterday, the markets were unsettled, nervous, not really knowing what direction they were going to move in. This, of course, came in on the heels of the Fed, like Tamanna said, delaying rate cuts, not derailing it. The markets tried to find their feet, stuck in a tight range. 22,600 became an important level of support, which was not breached even once through the full trading day in yesterday's session. What stood out for us in yesterday's trade was that Bank Nifty continued to see profit taking. So they made a new record high very recently. Conversations are on about how 50,000 could be in sight for Bank Nifty. But for now, 49,231 is where we closed our trade at, with underperformance on Bank Nifty. Of course, this is going to be once again in focus this morning with stocks like Kotak Mahindra Bank. Remember, Kotak took a little bit of a backseat in trade yesterday. They also report earnings tomorrow. On the flip, stocks like Bajaj Finance could contribute well to the financial or the Fin Nifty in today's trade. So Bank Nifty will be something you want to watch out for. Broader markets have had a good run, so mid-cap stocks did quite well in trade yesterday, largely reacting to earnings. So like I had mentioned earlier, you had stocks like PFC and REC topping the list in terms of outperformers. Chola, which reported earnings, KIF and Tech, PFC, like I said, Trent, Ashok Leyland, was some of the counters in the broader markets that had a good run and contributed quite well to the index and trade. As we gear up this morning, the VIX is up quite sharply. So while the GIF Nifty is indicating to a massive gap up in early trade, what you want to watch out for, a couple of factors. 22,800 is where you've seen maximum call OI, which means that's going to be the immediate level of support, resistance coming in for the market. So while we may attempt a move above those levels, you may see some stalling at 22,750 to 22,800. The VIX is up 32% in the last 6 days. So that goes to show you that there is a little bit of lack of direction and uncertainty on the street. Along with that, what is worth noting is some of the IT companies are done with their earnings. IT has been a laggard. You had Cognizant reporting numbers yesterday, which weren't very impressive. So tech may continue to see a little bit of weakness. But largely speaking, Tamanna, it's going to be reactions on earnings, reactions on news flow, and the broader sentiment will be range bound. But the bulls for now, I think, are feeling fairly comfortable, even though the VIX is indicating otherwise.
You know, what I find interesting, Samina, is how we are in the midst of an election, one of the hugest political events in 5 years, once every 5 years. This is the biggest political event from the Indian perspective. And markets seem pretty ambivalent about responding to what's happening electorally. Just to add one interesting cue before we get to the top stocks that we're going to watch, and an interesting update. So Rahul Gandhi will be fighting a second seat from Rai Bareli. Remember, that's traditionally the seat that Sonia Gandhi has fought and won on. She has bowed out of active politics because of health reasons, but there is no Gandhi from Amethi. So that's an interesting sort of political tidbit in the middle of this market morning. But let's get to the big stocks and the big movements you're going to expect this morning. And I have to start with Bajaj Finance. Bajaj Finance, one way or the other, is going to see quite a positive move. So here's what's happened. The RBI has lifted their restrictions on their e-com and or online digital Insta EMI cards with immediate effects. Now, remember, this is something that the RBI had imposed in November last year when there was action on a large number of institutions. The RBI was taking action one way or the other on several institutions. Bajaj Finance was among them. And those restrictions have now been lifted for Bajaj Finance. Now, that means resume sanction and dispersal of loans under this section. This is essentially your preloaded 2 lakh rupee loans, which Bajaj Finance was giving out, and the RBI was a little sort of circumspect about some of the details and how these loans were being sanctioned, etc. They had put in this restriction. Now, the way I see it, the fact is that they have lifted this restriction within the last 6 months. And Bajaj Finance was pretty clear in its last earnings call about the impact of this. They said that we're talking to the RBI. The fact that the restrictions have come back in fairly short amount of time is also pointing out to the ability of the management to course correct quickly. Remember, no big stigma on being pulled up by the RBI because there's a whole host of banks and BFSI segment companies which have by now. So this will be seen as a positive today. I think Coal India is another one that I would look at, and Coal India in terms of their e-auction prices might be a bit of a negative over there. So in terms of numbers, profits were slightly better than Bloomberg estimates. Revenues also slightly better than Bloomberg estimates. Margins were at 30%. Revenues have come down though. About 1.95%, not too much. EBITDA seems to be below estimates as well. There's a Citi note out there which says EBITDA is below estimates on lower e-auction volumes and higher employee expenses. I think net the big concern with Coal India is that there's enough of a supply with power producers, and even though traditionally now going forward power demand will go up in the summer months, there doesn't seem to be any real shortage as of now. So maintain or expect not too much of an up move on Coal India, maybe a bit of a negative sentiment, at least initially. And likewise for a Coforge. I was interested in Coforge and wanted to put it on my radar because even as the IT pack has been having quite an up and down, Coforge has consistently been one of the top performers, at least in terms of how its stock has done. And we should pull up Coforge in the last 1 year or so. And it's done fairly well relative to the other IT companies, and there you can see it on your charts. But the numbers have not been great. EBIT has been down 4.1% by 74 bips. Net profit is down 5.6%. So it is soft Q4, I would say, for Coforge. Revenue and margins both are below estimates. And what's important is that the management hasn't given an FY25 guidance. They haven't given a revenue growth guidance. They've suspended it due to an uncertain environment, though they expect contracts, etc., to improve in the coming financial year. So I think Coforge might have a bit of a rough day at start as well. Yeah, a lot more stocks to talk about.
Yeah. Just very quickly, Tamanna, on Coforge, Citi actually is a sell, and what they also announced was an acquisition, which will be revenue accretive. So watch out for that one. They've paid a hefty sum, but they've acquired 54% stake in Signite Technologies at 1,415 rupees per share. This acquisition has costed Coforge about $250 million, and the revenue that Signite will bring to the table is going to be $220 million worth, which is 20% of Coforge, which is going to contribute 20% of Coforge's top line. EBITDA margins are at 14.5% for Signite, and this acquisition, as per the management call takeaways, was that it will be EPS accretive despite the QIP. They also very clearly stated that there'll be no further equity dilution. They're not looking at going out and buying any more companies. And while business for them is looking good at this stage, the fact remains that new business is coming in at lower margins. So while BFSI looked like it was in a sweet spot, the fact remains that new business comes in at lower margins, and that's what makes Citi a little nervous about Coforge. Their price target on the counter also not looking very impressive, but the revenue guidance which was suspended was the other reason why they sold it, and they don't seem too impressed with Coforge's Signite technology buy. Along with that, a few more that we want to watch out for today is going to be smaller companies, but worth a mention. I want to start with the MOIL. The reason this one becomes important because it was up 9% in trade yesterday. From the get-go, the counter saw very significant buying that emerged and picked up in the second half of trade. The stock is up 40% this month, and the numbers are there to reflect why traders and investors have been holding on MOIL. They did increase their production by 22% YOY to 1.6 lakh metric tons, while sales for MOIL have grown by 17% YOY again. So that's what the markets have liked. Record numbers coming in on production and sales. The stock was up 9%. It'd be interesting to see if you get some more follow-on buying on the counter in trade. Along with that, RailTel Corp, and the reason I bring this up is while it may not be very large, but it's quite the theme that the markets have been excited about for quite some time now. Stock did okay in trade yesterday, but the numbers were not amazing to say the least. While the revenue was okay, it was up 25% to come in at 833 crores. EBITDA has seen a hit of about 10%. We will be connecting with the management midday to understand what led to the decline in EBITDA and the fact that margins have taken a big hit. So 540 basis points is a huge loss in terms of margins for RailTel. Reported margins come in close to 14% versus 19.39% that we'd seen for the same company. Profits, on the other hand, are up 25%. So there's a good chance that there could be a non-cash item or something outside core business that's contributed to profitability, or revenue or new business has come in at low margins. But I believe Harsh will be talking to them at some stage. We'll get a better understanding of what went wrong for RailTel. Along with that, Ajanta Pharma, numbers were okay. It'll be good to see how the stock does. Revenues were up 20%. EBITDA was up hugely, actually, 86% higher to come at 278 crores. Margins have also improved substantially. I mean, you're looking at 26.4 versus 16.93. So I think it's not an okay number. It's actually a great number for Ajanta Pharma. And that stock could be one you want to track. Net profit also up 66% at 203 crores. So Ajanta Pharma, in my opinion, Tamanna, could be an interesting one. Small, but fantastic numbers.
Yeah. And interesting because in the pharma space, it has been quite tepid otherwise. A lot of the players have not had a great sort of quarter. So Ajanta Pharma, definitely an interesting one. Just a few more. KEI Industries, I thought would be interesting to look at. Their EBITDA is up 21%. Margin is also not massively up, but has stayed up about 19 bips, but profits are up 22%. Now, KEI Industries has been having a pretty good time because order wins as well. This could be a further boost to look out for. That's one you should put on your radar. CEAT is the other one. Now, CEAT has actually seen profits come down, but that's because of exceptional expense of 58 crores. Board has recommended a dividend as well of 30 rupees per share. Their revenues have gone up, but not massively, about 4%. EBITDA is also up about 6.5%. So tepid numbers, and at a time when auto is definitely on top of everyone's radar. So might not see a very positive reaction for CEAT. Keep an eye on that. The other one, again, from the same space, CIE Automotive, and the numbers look quite negative on the face of it. Revenue is down, not massively, but about 0.5%. EBITDA is down 5%. Margins have also dropped slightly. Net profits down about 17-18%. So expect a bit of a downer over there. Just Blue Star, one more, and again, we'll be talking to the management. One which we should watch out for, because this is traditionally a good quarter for them. Blue Star has been doing well, but their profits have come down about 24%, even though their top line is looking decent, and so are margins. So we'll have to wait and see what the reasons for those are.
Yeah, I'll just add to that list, and these are good numbers. So I'm just like Ajanta, it's going to be Aztec Life Science you want to track in early trade this morning. Revenues were up 21%, EBITDA was up 136% to come to 12 crores. Small company, like I said, but again, good earnings coming in from their stable. Margins were up 500 bips to at 8.5 versus 4.24. They did post a small loss of 96 crores versus a 5 crore profit. The estimation of Bloomberg was about 1 crore, so more or less in line with that. So on top line, while the numbers have looked okay, very obviously we've seen some pressure on their bottom line. Yes Bank, watch out for this one. We will of course know exactly at 9 between in pre-open trade what's going on. But if there are reports to be believed, Carlyle is looking to sell 2% stake worth 1,500 crore today, 1,500 crore rupees today in Yes Bank. Remember, in Feb as well, they'd sold 1.4% stake in Yes Bank worth 1,057 crores. CA Pask Investments, which is a Mauritian-based SPV, had sold about 39 crore shares at 27 rupees a piece. So this will be active. It'd be interesting to see who picks up this stake sale or the stake that Carlyle is looking to offload. Along with that, another smaller company but worth mentioning is Ugro Capital. Their profit has come in, they've actually reported a pretty good set of numbers, 133% uptick in the March quarter. But what's important to note is that they are looking they've acquired or looks to acquire fintech lender MyShub Life for about 45 crores. They are also looking to raise about 1,333 crores via CCDs and warrants. So this one also should be on your radar. The stock gained quite sharply in the last half an hour of trade and could be one that continues to see activity as we see it this morning. So I think more gainers than losers, at least in terms of reporting earnings.
Yeah, absolutely. Just one non-earnings pace, Mazagon Dock. Maybe you should talk about is they've got an international shipbuilding order worth 42 million to construct 3 hybrid powered vessels. Not too many details right now on who that order is for and where, but Mazagon Dock definitely one which pops up now and then, so could be interesting today to watch out for. But let's get to the big stock this morning and the big story this morning, which is on Bajaj Finance. This sort of revival of restrictions or the lifting of restrictions by the Reserve Bank of India definitely been seen as a positive. Now we're going to look at it from 2 angles. One, what Bajaj Finance has been saying, what the RBI has done and why they've lifted the restrictions. And we're also going to be looking at it in terms of the financial aspect and what the impact really is going to be positively for Bajaj Finance. So let me start with Pragati and Harsh both joining us. Pragati, let's begin with what exactly the RBI had done and give us some context about why these restrictions were placed in the first place in November last year.
Good morning, Tamanna. Yes, on Thursday evening, RBI lifted the curbs from Bajaj Finance. This is 2 products, that is the Insta EMI and the e-com cards. The Insta EMI card and e-com products both were a big hit among the customers. In fact, the curbs were lifted with immediate effect. That's what the company informed us via the stock exchanges. In fact, it said that not just the sanctioning and doling out of loans has been restarted, restarted on these two products, but also the issuance of new cards has been restarted. Now, the development comes after the lender had submitted its request to the RBI for the reviewing of these curbs. The timing is actually very interesting and significant here, because in the past, whenever we've seen business curbs being put on companies in cases of HDFC Bank, IIFL Finance, Paytm Payments Bank, and so on and so forth, we've always observed that it takes the regulator at least 12 to 15 months to lift those curbs. But in this context particularly, just in about like 5.5 to 6 odd months, the curbs have been lifted. So definitely it becomes a positive for the company. But let me bring in some context as to why the curbs were put in the first place. Now, as our viewers can see, the curbs were placed due to the non-adherence to certain guidelines, and the curbs came into effect in November 2023. In particular, it was the non-issuance of a key fact statement to the borrowers and also some deficiencies in the key fact statement. That's what caused the curbs to be put in the first place. Obviously, there was some business impact as well, and a significant impact was felt in the fourth quarter numbers because the new loans that were being booked was significantly lower. In fact, while there were about 4 crore EMI cards in force as of September 23, that's the last figure we had before the curbs were placed in November. After that, if we have to see if we can bring the numbers here once again, as we said, that the new loans that were booked were just at about 7.8 million. These are the quarter 4 numbers that we are showing our viewers. They were up just about 4% on a year-on-year basis. Quite a significant impact, clearly showing that a lot of business was coming from there. Harsh, why don't you run us through what other impact you are assessing and what the brokerages are in fact making of it now?
Sure, absolutely, Pragati. So just picking up from where you left off, 8 lakh odd loans is what Bajaj Finance missed out on in Q4 in terms of growth. 12 lakh overall in FY24. So while the numbers in terms of number of new loans booked looks large, as component of the AUM, it's not as large because it's just about a 4% impact on profit before taxes as of Q4 FY24. That's what most brokerages are saying. Also, in terms of the biggest positive here is the fact that it's the issue has been resolved in 5 months. This, and I quote Citi on this, is commendable in their words, and that could possibly be the key positive on the stock, even from a sentiment perspective. So let's pull out what Citi is saying. What they are saying is this 5-month rectification of deficiencies is what is commendable. That's what they are saying. The other key takeaway is that they believe that in terms of the guidance, things will start to get front-ended and the guidance will go towards the top end of the band. Now, mind you, 2 metrics on guidance. AUM growth, 26 to 28%. What Citi seems to suggest is now AUM growth has been switched over to more on the top end of the guidance, 28% likely. The other piece is what Pragati correctly pointed out is with regard to customer acquisition. 1.2 to 1.4 crore customers was the guidance. Street not happy about that, which is what the reaction on the stock price suggested. And therefore, what Citi believes is that that will also be at the top end of the guidance. So around 1.4 crore customers likely to be acquired in FY25, given that this has happened so early in FY25. Citi obviously positive on it, 8675 the target price, 26% upside here. MK on the other hand seems to suggest that the re-rating will also be from an earnings standpoint, which is a positive. Of course, the embargo lifting so quickly is a positive surprise in itself from a sentiment perspective. Likely a reaction on the stock. 4% of PBT was the Q4 impact. That will get reversed starting probably Q2 FY25. So plenty of positives in the near term, which were negatives just about in the short to medium term, and that's what's probably going to drive the stock price. MK has a 9,000 rupee target price on this one, 31% upside.
Yeah, all right. So Bajaj Finance definitely there on the radar today. Thank you for that, Harsh and Pragati, breaking it all down for you. Now, the other sort of big development, and we are in the middle of election season, but Congress leader and Wayanad Member of Parliament Rahul Gandhi will be contesting Lok Sabha elections, this time from Rai Bareli, second seat. Remember, he's already contested from Wayanad, and polls have already finished in phase 2 in Wayanad, but he's now filled up his ticket from Raebareli as well. And Congress's Kishori Lal Sharma will be contesting from Amethi. NDTV Sunil Prabhu joins us with more. Sunil, there was a lot of suspense about this decision, that will there be a Gandhi contesting from Amethi, will Priyanka contest from one of these seats, and who will contest from Raebareli? Tell us what this final decision, what's the indication it gives us in terms of confidence of the Gandhis?
Well, it was, as you rightly pointed, down to the wire. Only this morning, the official announcement has been made that Rahul Gandhi will contest from Raebareli. The fact is that the Gandhis were extremely diffident to contest from the Gandhi strongholds, or what was perceived to be their strongholds in Uttar Pradesh, Raebareli and Amethi. Priyanka Gandhi Vadra was urged, appealed. A request was made by the Congress president, no less, Mr. Karge, till late last evening after he had a meeting with Rahul Gandhi, wanting both of them to contest from Amethi and Raebareli. But finally, given the ground level situation, he left it to them to take a final call. It's now been decided that Rahul Gandhi will shift from where he lost last time, that is Amethi, to Raebareli, where his mother has vacated and joined the Rajya Sabha from Rajasthan. So he will be contesting from there. And the constituency manager, KL Sharma, who has really been looking after both Raebareli as well as Amethi for Sonia Gandhi, as well as the Gandhi family, has now been nominated to contest from Amethi. So that's the backdrop. After a lot of persuasion, finally the Gandhis have revealed. The big question now will be, if he does get elected from Raebareli, will he keep the seat in Raebareli or give it up? Or which will it be? Either Wayanad or Raebareli.
So he will have to give up one if he wins from Raebareli. But tell me about Kishori Lal Sharma, Sunil, if you can, because now he goes up against Smriti Irani from the seat of Amethi, and that has been a sore point for the Congress and the Gandhi family, right? When Smriti Irani won Amethi and won it again. And which is why who the candidate from Amethi is also becomes very important. So is this now a tough fight, or how is it seen, Smriti Irani versus Kishori Lal Sharma?
So, first of all, Smriti Irani contested in 2014, lost against Rahul Gandhi in 2019. She recontested and this time won against Rahul Gandhi. So it's in this context that Kishori Lal Sharma now emerges. He's been somebody who's been looking after the constituency for decades. He's a family loyalist. The last time round, somebody has contested who has been a non-Gandhi has been Satish Sharma. After Rajiv Gandhi was assassinated, he contested from Amethi, and it's in this context now that it is. An election is a contest till it is till it's not. We'll have to wait till it's finally over. But definitely, a lot of homework will have to be done in Amethi, in Uttar Pradesh, in particular. It's a tough fight for the India Alliance against the BJP, and it's in this context that we are seeing this huge, battle of nerves in the Gandhi pocket boroughs, which used to be at one point of time a cakewalk for them. Now it's becoming extremely difficult and not a fortress anymore for them.
That fortress has definitely been lost. Raebareli now is the next question. Thank you for that, Sunil Prabhu, and for joining us for that quick political update as well. We'll take a short break, but on the other side, Agam joins us with the entire F&O setup.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly.
Welcome back. This is India Market Open. Well, we're taking stock of how things are panning out in the futures and options space. It was a relatively quiet expiry yesterday, and the Nifty advanced by around 0.2%. And along with that, what we did see was a little bit of an increase in open interest as far as the May futures go, up around 2.5% to what looks like fresh longs at the moment. But it was quite a very different picture when it comes to the Bank Nifty. The Bank Nifty, in fact, came off by around 0.3%, and there was unwinding in open interest to the tune of around nearly 4%. Well, in terms of the options market going in, considering the fact that we have seen increased activity around the 22,600, 22,700 mark, we saw a considerable amount of writing in both those calls and puts around the 22,700 strikes. Where does that leave that in terms of your overall open interest distribution picture? Well, we do have significant amount of open interest distribution around the 22,700 calls as well as puts, though a lot coming through as far as the 23,000 call is concerned as well. And of course, on the lower end, also keeping an eye on the 22,500 put. That's the rough range that we are working with as far as the weekly options go moving into the next few weeks, or rather next few days. Now, in terms of stocks, we did have plenty of reaction in terms of earnings. Shorts for Hindalco, Coforge, IGL, and Pidilite. And REC, of course, looking at fresh longs, and a lot of unwinding and about a short covering, in fact, for Canfin Homes, Tata Chemicals, Federal Bank, Shriram Finance, and Biocon. So it was a mixed day of trade. The question really is that what do we do with these factors going in? Well, let's get in an expert for now. We have Amit Goel of Amit Ventures who's joining us on the show. Amit, good morning. Thank you so much for joining in. Let's start with your assessment of the benchmarks. The Nifty specifically, what's your view here, and what kind of an option structure are you deploying here?
Hi, good morning, Agam, and good morning to all your viewers. Nifty has been in a structural bull run, and every week that we meet, have essentially advocated the fact that it is a buy on dip opportunity, and we have seen a good new all-time high on Bank Nifty as well. From next week's expectation, what I'm looking at is, I tend to agree with you from the options chain. 22,700 seems to be a tug of war situation, with 23,000 on the upside facing, acting as a resistance, and 22,500 as a support. So I don't expect any tearaway rally in the market as of now, because there are no major data points hinting to it. Even the FOMC meet was kind of a non-event for the markets. So what I would expect to do is I would expect to play on the theta decay aspect and set up a short strangle in Nifty, wherein I would like to sell 23,000 call and I would like to sell the 22,400 put. I'm just being a little careful on the put side because we all know that when the markets fall, the IVs tend to rise. So I'm looking to make a short strangle with a combined premium of about 2,000, 2,200 rupees. The exit for this trade will be very, very strict. I breach of either of the levels, we should exit the trade. I'm aiming to make about 1,500 to 2,000 rupees on this trade. And, I don't advocate anybody to be in this trade on Thursday, which is the last day, to, milk that final few points, simply because of late what we have noticed is there have been a lot of spikes, a lot of unnatural spikes in the premiums, and which could cause a runaway on a run on your mark-to-market losses. So I would advocate people to exit the trade on Tuesday or Wednesday latest, and not be on the expiry day to make that final few points.
So, well, that's the view on the Nifty. Amit, moving on to the Bank Nifty, what's the view and what's the way forward?
Yeah, Bank Nifty did give a smart rally in the last week, but it tapered off kind of after printing a new all-time high at close to 50,000 levels, which was essentially my target when we met a couple of weeks back. The kind of rejection it has faced there, forming a shooting star sort of a formation on the candlesticks, along with the confirmation yesterday, tends to give me some bit of insight that probably 50,000 and 49,500 could act as strong resistances in Bank Nifty until and unless there is a key trigger. So what I would like to do in Bank Nifty is play a little bearish to sideways sort of a trade, wherein we could look to sell the 50,000 call for the next week's expiry, which will fetch us about 2,000 rupees, and we will keep a rupee stop loss here of about 2,000 rupees. So any breach of 49,500 or 700 levels on at least a 15-minute time frame should trigger our exit here. So I'm a little sideways to bearish on Bank Nifty, while more neutral on Nifty.
Okay, fair enough. So that's your view on two of your key benchmarks. But well, moving on in terms of stocks, Amit, what do you have on your radar?
Yeah, so I'm trying to play a slightly contra game here in FMCG major, which is Asian Paints. Asian Paints has been, on a momentum, on the upside momentum in the last few sessions, primarily led by, softening of crude prices also. Though the results are very close by. So I am I suspect this rally probably would not last long because I see on the charts a fair bit of resistance at about 3,000 and 3,050 levels. With results around the corner and the overhang and the headwind of Grasim entering the paints business also continues to be a dampener for this stock. So I'm not very bullish on the stock, and I suspect that this rally might not last long. So the way I would initiate is, and even if you look at the option chain, Agam, 3,000 level has seen 3,000 calls have seen an addition in spite of yesterday's up move of about 3.5%. So this tends to, I tend to believe that probably this would, get faded away. So what I would like to do is, if I see that during the day today, if there are more additions in this call and the resistance getting built up, then I would like to initiate a put butterfly. It's a limited risk strategy. I would advocate all traders to initiate limited risk strategies in stocks, because news flow is very strong, and you could have very, very strong opposite gaps also. So what we would like to do here is we would sell 2 lots of 2,900 puts and buy wings of 2,800 and 3,000 one lot each, giving a max risk in this trade of about 3,900 by expiry of this month. So we have enough time to be right. And I would like to, start off with trailing a profit of about 4,000 rupees and trail from there for a little bit of more profit. So it's a limited risk, slightly bearish to sideways sort of a view on Asian Paint, Agan.
Well, a very comprehensive strategy on Asian Paints as well. Remember, the stock has been on a little bit of an up move, and we already know that there was a little bit of a resistance around 29.50 and thereabouts. And now that the stock is starting to move upwards, of course, that's one of the themes that Amit is also looking to work around as far as Asian Paints is concerned. But on that note, Amit, pardon me, we're taking a moment to thank you for joining us and taking us through your views on the benchmarks as well as giving us option structures on Asian Paints. And with that, it's over to you, Samina.
Thank you, Agham. That was the view on the markets and a couple of trading calls coming in from Amit. But the sector in focus is going to be the tech space. It's been on the sell side for the last couple of days, and it's Coforge that reported numbers that were a huge disappointment. They've been an acquisition which brokerages don't seem too enthused about. And more importantly, also Cognizant reporting its first quarter numbers for FY25. Numbers were, of course, lower than expected, but better or at the outer end of the guidance, which actually helped the stock in terms of performance. Apurva Prasad, Institutional Research, IT, HDFC Securities now joins in. Apurva, we wanted to understand from you what the IT sector is looking ahead at in FY25. But before I go into that, a quick word on Coforge's earnings. I think a few positives are that they've picked up a few deals in the BFSI segment, but most of these deals are coming in at lower margins. So margins is a pressure, non-committal in terms of conclusive deals being done. And more importantly, the acquisition of Signite Tech. I know Jefferies believes that they should have done an acquisition in the new tech space. How do you feel about both of these, and what's your call on the stock? Have you gone back to revise your call on the counter?
Hey, I don't have a rating on Coforge, so can't really comment on that. But I think the idea that the company is really going forward is to move towards a 2 billion target by FY27, which is what they have stated out. So I think it's gaining that. But broadly, I think some of the factors, if you see in the sector, that persist pretty much, whether it is in terms of discretionary being softer or deals that are taking longer to ramp. We've seen that with some of the larger companies. Cognizant that you were just mentioning. They held on their guidance, and I think some of the factors are pretty much similar to the concerns that were laid out the last 2 quarters. So I think that pretty much stays.
Purva, I understand that it's probably par for the course as they look to, of course, hit that revenue number. But a couple of other important news developments that have happened at the start of the new financial year, and it's LTTS that I want to pick up on. Numbers were disappointing. Street was not excited, but they've come out and announced a pretty significant deal to the tune of $48 million. And it's a 5-year deal, I believe, with an automaker in Germany, start of many more deals, and of course, opportunity to increase wallet share. I'm assuming the stock will be one that investors would like to know what to do with. Do you have a coverage on LTTS?
Yes, we do. And I think that certainly adds revenue visibility to the company. I think more importantly, the deal that they signed a few months back, the cybersecurity deal in Maharashtra, I think that does give them good incremental revenue. I think which is what could potentially the 8 to 10% that they've guided for FY25 looks fair certainty with some of these things. Our concerns on LTTS is more on margins because some of these deals coming up or just the change in business mix is having implications on their margin profile. The company is expected to get back to 18% plus, but I think that's going to take a lot longer. And if I look at the fact that where margin profile currently is headed to for the next few quarters, the valuations are not something that we are comfortable. But yes, I mean, the short answer to your question is that the deal does add visibility to the company to deliver the 8 to 10% guidance.
Yeah, hi Apurva, good morning, Tamanna here. I just want to take the conversation a little forward looking, and let's base it off Cognizant numbers which came in. We're looking like we're set for maybe another rough quarter for IT companies, and Cognizant sort of heralding what is in store for our big names as well. Would you say that's a fair assessment? And those same problems persist. Deal wins not really translating into revenues, the overall sort of environment being a bit of a dampener. Is there more of the same in store from what you've seen so far?
Yeah, so I think it's a bit of that, and it's a bit of also the relative competitive factors, because Cognizant has underperformed a big way to Indian IT past few years. So how much of this is really reflection of market versus the competitive swing? Because I mean, let's not forget that for most of these larger companies, there is senior management changes that has been very recent. So the competitive factors only gotten a notch higher. And the environment is pretty much where it is. But I think Cognizant did highlight some green shoots in the BFS sub-segment. And that's a segment that they were impacted. We've also seen some of the larger Indian IT companies talking about BFS bottoming out. So I think the comparable is going to be favorable. So I think that is what allows most of these companies to accelerate gradually as compared to FY24. So we do expect a slight acceleration. So I think we're confident to say that growth is certainly bottomed out, but the rate of acceleration is something that needs to.
So, Apurva, I take your point that Cognizant has underperformed Indian IT majors, so it's not necessarily that what we see from Cognizant is what we'll see with the rest. That point is taken. But what about the issue of large clients and squeezing down on discretionary spends? Whatever is being spent is now more focused on AI-backed solutions. How do you see that panning out? And if I were to ask you what Q1 is looking like for Indian IT and for, say, the top three, what would you say?
Yeah, so I mean, we are building in a relatively softer Q1 for Indian IT. This is some of the more recent deal flows, and I think the discretionary environment that we discussed hasn't changed too much. The translation from pipeline to bookings and bookings to revenue, some of those ebbs and falls. I think that's likely to be weaker than the normal Q1 seasonality that we see. So that's what we're building in. There were a certain set of assumptions in terms of discretionary at the beginning of the year. I think some of those have dissipated with the anticipation of negligible rate cuts now. It's probably correlated to that. But yeah, I think the benefit is going to come because the base will start to get favorable. So it's a bit of an arithmetic there. But think of it like this. I mean, a CQGR growth rate, a quarter-on-quarter growth rate, which can be similar even for next year, and yet growth could accelerate from 8%. I think the near term is likely to be weak at an aggregate level.
Right. Very lastly, Apurva, your top pick in the IT sector from the large cap names and one from the mid and small cap.
Yeah, so TCS is what we like within the larger ones. I think the execution track record, relative outperformance and growth, and most of the advantages persist. So we like TCS within the bigger names, and within the mid-tiers, we like persistent systems. Continue to lead with upside potential and margins to provide superior earnings growth relative to peers.
Thank you so much for that, Apurva. So if I heard you correctly, you like persistent systems, is it?
Yes, persistent systems.
Okay, and between the top three, what's your ranking? Infosys, TCS, Wipro?
TCS, Infosys, Wipro, we have a reduce.
In that order?
Yeah.
All right, in that order. Thank you for that, Aditya. They're talking about the tech pack. Another tough quarter up ahead is something that you can expect. But also, I thought one interesting takeaway is that all things Cognizant is not necessarily telling you what is going to happen for the Indian IT space. Kush Bora, founder of kushbora.com, with us this morning to help us look at the charts and pick the right stocks. Technically, Kush, very good morning to you. Great to have you here as always. Let's start with your Nifty and Bank Nifty take.
Hi, Tamanna. First, a very good morning to you and everyone on the panel. Well, the way I would summarize the texture of the market currently is 2 steps forward and 1 step back. This market has been giving you those dips to buy regularly. It's also giving you that opportunity to go ahead and book profits. But it's imperative that you book those profits because the kind of volatility we've seen, you might see some sort of losses if you can't really handle the volatility, and the dips also have been sharp. But I think the strategy that is playing out is 2 steps forward and 1 step back. So every time you get that step back, it's a good idea to go ahead and buy. I think 22,800 and 23,000 on the Nifty are very real targets. 50,000 on the Bank Nifty. But what's interesting is that there could be a near-term top for the market, and depending on the election outcome, it could be either just before or just after. So that's something that I'm a little watchful about. So from a positional standpoint, the risk-reward ratio is not favorable for taking a big position on the market, but the kind of momentum that we are seeing and the kind of moves that we've been seeing on the market, I think it's a good idea to stay long. The gap up that we are seeing today will perhaps eat into most of the gains that you could have had today. So I wouldn't chase the gap up. If I am carrying any long positions from yesterday, I'll book them and perhaps start my weekend a little early.
Okay, so start your weekend a little early, maybe TGIF mood, and overall long positions make sense this morning. What about your picks, Kush? What would be your top picks right now?
Two of them from slightly different setups. One is BSE. Now the stock was on a tear away, rally, and we would want some sort of a pullback. Perhaps not the kind exactly that we would have liked, and not on the news that we would have liked. But I'll take it with both hands. The kind of tip that we've seen, just bringing the average cost price lower for me. So BSE is something that we would suggest to have in your portfolio if you didn't up until now, or if you did, not a bad idea to add some more. So Bombay Stock Exchange is that is a stock that we're looking to add at current levels. 2950, 3050 are the near-term targets. 2750 is where I would place my stop loss. Also happens to be a medium-term support zone for the stock. The second one is Hind Copper. Here the stock's been on a rally. We're seeing some sort of a consolidation, but I think after this consolidation, the stock is ripe for a move past 400. So from a near-term, 398 and 405 are the targets, and 385 is where I would place my stop loss.
So Hind Copper and BSE. BSE is an interesting sort of a bet, because after quite a slam dunk post the SEBI regulation and the SEBI sort of demand on regulatory fees, it saw a bit of a recovery. Vineet Bulinshkar joining us this morning, Head Research, Ventura Securities. Vineet, great to speak with you. Welcome. Let me begin by getting your take on Bajaj Finance. How much of an upside do you see, and how much of an actual impact on the top line for Bajaj Finance now that RBI has lifted its restrictions? Would you say that this is largely going to be sentimentally positive?
It is sentimentally positive, but it's not going to add too much of growth to the counter. So we don't, while this is positive and the company will make great headway, because one large incumbent, that is Kotak, has been put on the on the back burner. So I believe that Bajaj Finance will still be range bound until they can materially show some kind of back to growth, aggressive growth kind of trajectory. Because if your growth are declining, your PE multiples are very high, and then they are going to adjust if your growth is going to slow down. So we would like to see from Bajaj whether in the coming quarter they display a kind of a rejuvenated growth in AUM.
Kush, what about your take on a Bajaj Finance today?
Let me just put the disclaimer out that I still have some holdings, of this stock in my portfolio. I've pared them significantly. And, I think last week or perhaps before that, I said that Bajaj Finance put is a trade that continues to give. So for now, till the level of, 7,300, perhaps 7,350, once that is taken out meaningfully, perhaps I will reconsider changing my view. But in the near term, any kind of bounce that I get will perhaps be an opportunity to go fresh short. So I am not too constructive on Bajaj Finance move from here on, especially if I look at the comparison. When I have the likes of Jio Finance, where the potential for returns is now significantly higher, perhaps something like what Bajaj Finance has done over the last decade or so, then perhaps the the tilt towards something like a Jio Finance is a little more. Bajaj Finance on rise is it's a sell on rise kind of a setup for me, at least at the moment.
All right, Bajaj Finance, you would say, let's move away. Another stock, Vineet, that I'd like your view on, and numbers, maybe a tad below expectations, would be Coforge. We had a conversation right now on the whole IT space, and Coforge definitely was one of the weaker ones. Would you say that this is a space that you'd stay away from, and any specific take on a Coforge?
So I think it's one of the it's a very mature industry now. And while there is great expectations that AI would add to their revenue stream, what is going to happen is that although the digital and AI is going to build up, the other segments are going to drastically slow down. So we will continue to see this flattish kind of growth across the segment. And hence, we are not very, very comfortable owning this sector completely. I have been staying away from software services for almost 5 quarters, and we continue to hold that view. However, one stock within this space which could buck the trend is Persistent. They have got a very, very strong, aggressive growth guidance, and we believe that they can outperform the sector quite well.
So Persistent still remains your top pick. This was something mentioned by the IT analyst we also spoke to. But on Coforge specifically, we may see a downturn today. Would that be an opportunity, Kush, to accumulate?
Not at all. The stock has been under some serious pressure, broken below its, key support zones. 200-day moving average was broken, some time back, so that really doesn't hold. Even the key support zone, which was close to 5100, 5050 levels, was also taken out. There isn't really much suggesting that turnaround is on the cards, even if the stock opens lower today. Still some distance from the oversold territories also. That too perhaps will add to the fact that you won't see any kind of a revival anytime soon. So perhaps a 4800 kind of a level is something to watch for. If we come close to that, then depending on the setup, we might consider maybe a contrarian trade only for a dead cat bounce sort of a trade. But then why venture into something as risky right now when you've got plenty of other options in the market which are trending much higher.
All right, so Coforge is an avoid. Persistent, any view, Kush? Since Persistent seems to be name cropping up again and again in this IT space. Would it be on your radar if you wanted to come into this space?
So, Tamana, I agree with Vineet for the most part for this sector. The most part of the commentary for this sector, and Persistent also I agree to some degree. It's just that the price action right now is not comforting for me at all. I'll wait and watch, let's say, for another week, maybe 10 days. The stock is close to the 200-day moving average, and barely holding on to it. So if we see some sort of a revival from here on, I'll perhaps go in and buy from a positional standpoint. At the moment, I will just wait and watch. The entire sector's been under pressure, and while Persistent remains our top pick, we've seen a serious price cut, or rather a downward price action in Persistent also. So my pick in this space is actually KPIT Tech, and that's a stock that I will accumulate on dips as well. Persistent for sure, one of our favorites, but I'll just hold on for some time to go ahead and accumulate.
So tech, if you're looking at tech, KPIT Tech is the top sort of call as per charts by Kush. Persistent is another favorite. Time for a short break, but we'll be right back with not just pre-open rates, but a closer look at the auto sector as well. Auto numbers are out, a lot cooking in this space and a lot revving in this space. We'll come back with more after this very short break.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting
Welcome back. Less than a minute to go for pre-open rates to hit. You're watching India Market Open. I'm Tamanna Inamdar and with me is Agam Vakil. We're talking auto now for the next couple of minutes. Auto data has come in, sales data for the month of April. Jay Kale, Senior VP Equity Analyst, Auto and Auto Ancillaries of Elara Capital is joining us now on the show. Jay, very good morning and great to have you on. Let's begin with the sales numbers that we saw. And auto has been on a complete tear. If I were to break up two-wheeler and passenger vehicles, how would you rate the two?
Yeah, good morning, Tamanna, and good to have, thanks for having me on the show. Also, on the passenger vehicle and two-wheeler side, if I have to break it up, if I have to see the core retail growth, and I would like to assess the core retail growth based on March plus April on a YOY basis, because there has been a shift of Navratra this year. Two-wheelers continue to, tread the strong double-digit growth. They're close to around 17-18% on March plus April YOY growth. Whereas passenger vehicles have been a little sluggish in terms of growth, around 4 to 5% on the retail side. On wholesale side, of course, two-wheelers again are pretty strong at around 20-21%, and passenger vehicles are lower. Going forward, I think in May specifically, there are lesser number of marriage dates this year versus last year. So growth will moderate significantly. But overall, if I have to think about March plus April plus May, the growth should be good for two-wheelers, followed then by passenger vehicles space.
All right, in passenger vehicles, you've spoken about, and I was reading your note, you've spoken about how Maruti and M&M are your best picks. Now, I'm wondering why, considering they've both run up significantly. In terms of valuations, do you still see potential here?
Yeah, I think, yes, they have run up significantly, but, different, both of them have different levers in terms of, positive narrative. If you see M&M, I think there are a few new launches expected in this year, and their last couple of years launches have been quite successful, and that has aided them to have the highest market share gains in the last 1.5 year. Same with Maruti. I think Maruti's new launches have done pretty well, and their acceptance in the 10 to 20 lakh price category has been quite good. What has hampered them is the stress in the first-time car buyers, which we believe overall, over the next couple of years should come back. If the passenger vehicle industry growth, story is intact in India, and with the per capita incomes improving. So overall, I think, the core penetration levels of India passenger vehicles is quite low. And Maruti and M&M with their strong product profile are the best plays from a medium term in terms of high growth profile. Plus the margin profile has also been quite satisfactory in the recent quarters. So you should see close to a 15 to 20% earnings growth for these companies going forward, which will be supportive of valuations as well.
Right. Jay, good morning. My question is to do with tractors. At the moment, what we're seeing is a curious divergence between Mahindra and Escorts. Now, if you just consider the month-on-month growth, Mahindra's growth has been 47% as against 10% of Escorts. Is there a reason behind this divergence? Is there anything that stands out for you here?
I think, tractors, it's very, I would not want to see the month-on-month growth because it's quite seasonal. There are shifts of inventory, addition, deletion, what each company takes. There is some seasonal pattern as well because Navratra is more prominent this time of the year. Navratra is more prominent in the northern regions, etc. So I would be, I would like to see tractors more from a at least a 6 to 8 month perspective. And tractors historically also, if you see, the market shares have been quite sticky in this segment. While many of the players have tried to do a lot of interventions, product interventions, market interventions, but market shares in tractors are quite sticky. So our view, we need to take a call on the tractor cycle rather than any market share differences between one player or the other.
All right. Well, Jay, what's also been very reflecting in the stock prices is the volumes for two-wheelers at the moment. Of course, TVS Motor Company clearly an outperformer, but we haven't seen, something like a Hero MotoCorp or, for that matter, Bajaj Auto, well, take a step back. What's the way forward? Your preference in this list, and let's not forget Eicher Motors either.
Yeah, I think TVS Motors has had a stellar kind of run in terms of both volume, market share, margins, as well as stock price movement. And I think going forward, one would expect that trend to continue. We will see a few new launches coming in from TVS Motors. And mind you, in the last year, there were not many new launches that TVS had, and still they increased their market share on a yearly basis. So two-wheelers is a more of a sticky product brand industry. So once you have a successful model, it runs for quite some time, and you don't need as many product interventions once you have 2-3 products that are sticky with the customer. Preferred picks would be Bajaj and TVS in the two-wheeler space.
Right, Jay. Then let's talk about the other big theme that is, potentially on the cards for India, and that's the new India EV policy. We have all sorts of news coming around Tesla, though nothing specific with respect to it. Still, there's a possibility of a lower duty coming in as far as imports are concerned. Surrounding these themes, what analysis, what assessment are you making at the moment?
I think we need to see how this pans out with the new entrant coming to India. Of course, the government has laid down their policy and has made it quite attractive for players, not only for Tesla, but the others as well, to kind of get their act together in the EV ecosystem in India. So it will be interesting to see how the global players try and capitalize on this EV policy and try to make a mark in India. Not many global players have been successful in the ICE category in India. So I think the EV category will be an interesting thing. But whatever happens, I think the policy is good from developing the EV ecosystem in India. So that's something that is important, because passenger vehicle EV market is quite large globally. In India, it's still in a nascent stage. You still have penetration hovering around 2.5%. And this space is expected to be seen from a medium to longer term perspective, and not necessarily from the next 1 to 2 year perspective. And I think entry of new large global EV players in India, if at all it happens, is definitely good for the overall EV ecosystem, and it will be positive from the overall ANGS as well as the OEM space.
Yeah. Jay, just wanted your take on JBM Auto numbers. On the face of it, looks fairly good. Ahead of Open today, would you say this is definitely a pick, or how would you assess the numbers that have come in? It's already doing fairly well pre-Open.
I think JBM is definitely a play on the EV buses. They've garnered quite good orders on the EV buses side, and they're doing a lot on the electrification, components, etc. Currently, we don't have any coverage on JBM Auto, and hence would not want to give the stock view on that.
The profits are down, 62% margins contract, but overall, the stock has seen a good at least a response in pre-Open because the operating margins have been fairly stable. Just broadening the scope of what we've said, and we've taken your top picks, Jay, as far as two-wheelers are concerned, but in the passenger vehicle space, what would be your top couple of picks? And also in auto ANGS, I wanted a view from you on Exide as well, if it's on that list at all.
Yeah, I think from the passenger vehicle space, like we mentioned, we have Maruti and M&M as our preferred picks in the passenger vehicle space. And in the ancillaries, our picks are Samil, Sona BLW, and Uno Minda. And yes, Excite has done well to get the orders from Hyundai and Kia that was announced a few days back, and that actually opens up the passenger vehicle lithium-ion cell opportunity for players like Excite, which earlier probably the street was a little more apprehensive of that whether they will be able to crack that. This definitely is a positive development for Excite, and people will now start valuing the lithium-ion cell facility of Excite a little more favorably than they were doing earlier. Currently, we have an accumulated rating on Excite.
All right. A final question from my end, Jay. We have an impending IPO from Hyundai. We are expecting an evaluation of around $22 to $28 billion at the moment. It does seem like it's at a significant premium, but does that mean that we could likely see some of the other PV players like Maruti potentially see a re-rating on this account?
Yes, I think partially that is kind of playing out in the last post the news of Hyundai's IPO. The valuation multiples of the other passenger vehicles have been seen favorably. That is definitely a possibility, but of course it all depends on the valuation of Hyundai, what it eventually comes at, and all the nitty-gritties around it. But in the lead up to that, definitely, we have seen that positive rub-off effect for the other passenger vehicles.
All right, thank you for that, Jay. Great to have you with us here this morning and that extensive conversation on the auto space. Just a quick look at where pre-open rates have settled before we move on. I just want to pull up Bajaj Finance because that is the stock this morning, and the stock, at least in pre-open session, is up about 6.5%. So is Finserv. Hindalco is looking good. The auto pack definitely shining, and M&M was one of Jay's top picks. It's up in the green, at least in pre-open rates. But a lot more to talk about. Let me quickly go across to Harsh, who's picked the top brokerage reports to focus on. Yes, Harsh.
Let me start off with Adani Ports. Came out with numbers yesterday. Bernstein has come out with a report lauding the numbers in a certain sense. They continue to maintain their outperform rating. What they are suggesting is that the numbers have beaten guidance on pretty much all metrics, and despite a higher capex of around 7,400 crore which Adani Ports has done, they've done very, very well with regard to their debt. So their net debt to EBITDA is now below the 2.5 times mark. Also, they believe that given that it already handles half of the countries, in terms of a country the size of India, as large as India, is what they reiterate. Despite them doing that, they believe that there could be significant volume upside going forward as well, and they continue to deliver well on volume growth. The FY25 guidance that the company has given, largely in line with what Bernstein estimates suggest. Target price 1,500, roughly a 12% upside from here. I want to switch over to Coforge. That's the other one in focus. Citi maintains a sell on Coforge. Target price 4,550 from the 5,155 number which they'd given earlier. Downside roughly 9% from here.
Right.
They believe that revenue margins are below.
Yeah.
FY25
and
guidance is suspended.
Harsh, it's showing in where the stock has ended pre-open, at least 10% down on a Coforge. Very quick take from Kush. You said to stay away from Coforge. What if you're stuck at this point? What do you do?
Pray, perhaps, but then other than that, I don't. Stay put. I mean, I don't think you'll even get an exit if you have an F&O position.
Yeah.
But don't venture adventurous trades up.
Don't go near it. Very quickly, any top last sort of calls before we hit the opening rates?
Cochin Shipyard is looking strong, so I think that's one stock that traders and viewers can have on their radar. 1375, 1400 are the near-term targets that we're looking at, and perhaps a 1290 is a strong support zone, so should act as a stop loss.
Right. Well, I'm not sure if we have completely spoken about the auto sector with Vineet. Vineet, I want to talk about two-wheelers specifically in this case. Your observations, your valuations, and perhaps the best in the pack that your preference is when it comes to the two-wheelers.
So best in the pack is absolutely TVS, very strongly focused portfolio. Its portfolio has a very nice overlap with the EV portfolio. So, their modeling and styling is very contemporary. So I believe that, they will have a very easy run going ahead, followed by Hero Motors and Eicher Motors in that. So that will be my pecking order of the stocks to buy in the two-wheeler auto space.
All right. Kush, let me come to you on REC. This one has seen a surge, and in fact, it does seem like it's breaking out, or from its previous highs at the moment on good volumes too over the last couple of sessions. Do you think that there's more legs to this rally?
Absolutely. It's just that what will happen is that the risk reward ratio from here on will not seem as attractive for a trade. So a buy on dips for anyone who wants to enter fresh. But if you're holding this position, I think you should continue to hold. The momentum is fantastic, and as you said, the volumes in the last couple of sessions have been significantly higher from the last few months averages. So I think a good top comes in at 550. Hold on to the position that you're having. Ride this wave. The near-term targets that we're looking at, even after such a gap of opening, is 570 and 585.
Kush, a quick last call on Ajanta Pharma, if at all.
Well, range bound. I wouldn't say go out and buy just yet, but if you have, you can continue to hold.
Okay, Ajanta Pharma looking fabulous, at least in pre-open, and that's on the back of results. That's going to be the big factor this morning as we wait another 29-30 seconds odd for markets to open. The first thing that we need to watch out for definitely is what's happening with Bajaj Finance. It's had a great run pre-open. We're expecting a gap up. The question is that where do we sustain? Can we sustain above, those 22,700 rates that you've hit at least in pre-open? So it's looking like maybe set up for a good morning at the end of a tumultuous week and a truncated week as well. Once again, where the results hit and how the results are rewarded is what will be seen. So there you have it, the first rate hitting, and not bad at all. The Nifty opening about 0.5% up, as is the Sensex. Bank Nifty recovering after yesterday's downturn. I want to just pull up Nifty IT as well and see what's happening over there. Mid caps also doing fairly okay, and let's pull up the small cap index as well after the Nifty IT and see what's happening there. So you have about 0.5% up on all your key indices. Nifty IT is flat this morning. Let's pull up the heat map and see where the action is. And yes, we talked about Bajaj Finance. What an upswing between the two twins, Bajaj Finance and Bajaj Finserv. 6 and 4% up. Hindalco looking smart for another day. The Bajaj pack in that sense having a good morning. Bajaj Auto as well up in the green. But apart from those two, if you notice, not too much of an upswing. The sharp moves really on the Bajaj twins. At the lower end, also you have at the most a power grid, Maruti cooling off. You have some of those auto packs cooling off, but not massively, I would say. Even a Coal India, which otherwise not a great set of numbers, not reacting too negatively. So the market sentiment looking more positive this morning than anything else. And of course, Bajaj Finance, the star, 7% up now as we lead on. So that's the big story of the day. But a lot more, Agam, that we're seeing, on the broader end of the markets as well. What are the specific stocks on your radar?
Yeah, well, not too many. Not too much away, too far away from the new life high on the Nifty, and in the broader markets will continue to be focused on account of earnings as well. So let's pull up the list of all the stocks which are in fact reacting to earnings. Well, right at the top, of course, we will have a reaction from something like a Coforge, where the numbers have been disappointing, and well, it's taking a knock of around 6.5% at the moment. And Ajanta Pharma, on the other hand, is advancing by around 11.5%. Railtel, well, we're quite flat at the moment, but we clearly have already, of course, identified Coforge with the weakness and the kind of expectations going forward. In fact, rather lack of expectations, because, well, the company has suspended guidance going forward. And Ajanta Pharma, on the other hand, looking at very strong numbers coming in. Let's take a look at a handful of other counters as well. So, well, we do have CEAT. which is looking at about 3.7% decline there, under some amount of pressure. Blue Star perhaps was a quarter which was on expected lines. And JBM Auto, that's something that again, we're looking at a 3.5% gain there. Again, a steady quarter, but a lot of that has also been priced in, remember, because of the kind of traction that we have seen with respect to the order flow coming in. Let's move on and talk about the other counters as well. And we have KEI Industries, again, flattish, but a fairly steady quarter coming in for KEI Industries. In fact, we have seen an operational improvement. Aztec Life Sciences as well, up around 1.7%, but Ugro Capital, look at that one, that's up around 7%. So another one of those counters which is actually standing out in trade. Well, moving beyond earnings too, there are two counters that we are tracking based on the monthly business update. So MOIL has come up with its production numbers, on the back of which it is advancing by around 3.9%. But remember, MOIL is also on a tear. In fact, it has momentum on its side. And IEX, where its monthly volumes have also been substantially better. In fact, looking at a 17% uptick there. So that's another one of those counters which is in fact doing well in trade. All in all, Tamanna, at the moment, when it comes to the broader markets, the breadth is also favorable, more advances than declines. And I reckon that should this sustain, it'd be a good end to this truncated week.
Look at some of your, I would say, defense kind of names, your PSU kind of names. NHPC doing well this morning. Mazagon Docks was on our list and on our trade setup stocks, 2.5% up, nearly 3% up right now. They have two international orders, which perhaps is seeing that move. Sona BLW is doing well, so is Macrotech. Let me quickly go to Vineet and Kush for their first takes after market open. Kush, what are you really liking right now? And again, I come back to Bajaj Finance. The stock is having a completely fabulous morning. Would this be a situation to book some profits, or what would you do with the stock right now? Up about 6.5%.
I'll take the option A, book profits.
Yeah.
Because, if you see the highs that the stock made in September and draw a trend line from there, bang on, almost precisely, the falling trend line has been hit. And, from there on, we're seeing some sort of profit booking. So for me, this is going to still take some convincing to say that, we can go long on Bajaj Finance, at least from a positional standpoint. So anyone who's got, a profit in this stock should perhaps consider booking out here, if not completely, at least partially.
Just one more to Vineet again on Bajaj Finance and on the entire. Look at Chola Finance right now. Look at Shriram, HDFC AMC, Muthoot, ICICI Bank. Your top 6 gainers on the Nifty, all from this space. I'm just wondering if the market is seeing a larger sort of message here that the regulator is willing to review its decisions if they see action taken, and not necessarily taking 6 months to a year to do it. I just want to pull up Kotak Mahindra and see what's happening there, because Kotak Mahindra Bank has had a rough time, and even that is 0.5% up today. Yes, that question for you, Vineet.
So I believe that the inherent strength is very strong in terms of, your GDP growing. All your data points are very, very positive. GST is positive. So obviously the finance sector is going to perform. And we are seeing largely the entire financial sector participate with this rally. Specific to Bajaj and Bajaj Finserv, as I told you earlier, we would like to see some material numbers where we can say that the growth is back. And Bajaj is not priced for normal growth. Bajaj is priced for hyper growth. And the hyper growth numbers were kind of slowing down. So if the company can elucidate through actions that, the growth is back or the hyper growth is back, then only this kind of valuations can sustain. In the meantime, I believe that other players, Shriram Finance, also Federal Bank, came out with some stellar numbers yesterday, barring for the fact that, cost to income ratio shot up, but they've increased their employee count. Otherwise, it's a great number, great stock to look at, and I think that we could see some action out here.
As we speak, we're looking at the Nifty making a new life high at the moment. And of course, this is perhaps on expected lines as well. Vineet, before we let you go, a final question on Zomato. This one is once again approaching the mark of 200 rupees per share. Of course, a lot of expectations riding on the fact that there will be an improvement in the performance going in for the quarter gone by as well. Where do you stand on this one?
Extremely bullish. I think if you want to own a consumer stock, I think this is one to go with, primarily because they demonstrated significant traction in the quick commerce business, and they're extending even into the durable space. So just a flash in the pan was there. A couple of things with the Symphony ACs that they sold, or the PlayStation deals that they've done. So they've demonstrated remarkable ability to mine the adjacencies with scale and also with a frenetic pace. So I think that Zomato is going to turn out to be a giant killer for a lot of the adjacencies who thought they were very cushy in their space.
All right. On that note, Vineet, taking a moment to thank you for joining us and taking us through your views in the markets at the moment. While we let Vineet go, just a handful of more questions with Kush. Kush, the other stock on our radar is Action Construction. Now, what's really happened is that a few weeks ago, it saw a sharp knock. It again, recovered, and since then, while it has made a new high over the past maybe 2 weeks or so, it's consolidating. The question really is that at the moment, what levels would you watch out for a long? Do you think that it's a bit too late in the game to perhaps go along on this counter? If yes, then what are the risk levels on the downside that you're watching out for?
In fact, Agam, I believe that the current consolidation is perhaps a base formation for the next leg of up move. The stock has given phenomenal returns over the last couple of years. We all know that, and even if you look at the kind of up moves, that the stock has seen, the stock tends to hover around the 20-day moving average. Take some support, perhaps lifts a little further, lower. But from there on, the rallies are also equally sharp. I think this consolidation is perhaps in anticipation of election outcomes, if at all. But I think this will prove to be, the launch pad for the next leg of up move. So I think this is a good point to enter, at least start accumulating at these levels. For me, a positional stop comes in, close to 1450 levels. And on the upside, we're looking at 1650. And if that is, as and when that is taken out, perhaps a 1700 also is on the card. So ACE, Action Construction, in our books has been a buy for a while, continues to remain so. I don't see a structural damage. In fact, this consolidation is healthy.
The call on the Nifty, the hero of the morning, is the index itself at a record high, Kush, at 22,780. What would be your call right now? You started by saying be a little careful ahead of elections, but stay long. Would you review that take after the kind of open we've seen?
Tamanna, that was 25 minutes ago, right? I mean, nothing much has changed in my view in the last 25 minutes. In fact, I maintain the fact that, if you've got a long position, book out and start your weekend early, then you get a day extra. On a serious note, the 22,650 to 22,800 is actually a resistance zone for the Nifty. If it does cross this, then perhaps 23,000 will be seen sooner rather than later. But given the Friday effect and given that we are in resistance, also just to add that on the daily setup, we are seeing some negative, divergences, negative RSI divergences. So some profit booking might play out. So for the day, I think the bulk of the move perhaps is done. So I would take some money off the table. If I do get a slip of, let's say, 50 to 70 points on the Nifty, closer to 22,700, 22,650 also, I would consider buying. But other than that, I think for the day, I think the bulk of the move should be considered done.
You are definitely in a mood to start your weekend early because that's the second time we've talked about. But what about on the Bank Nifty? Because the Bank Nifty is also a bit of a driver of this today, nearly a percentage up, a little short of, but about 300 points up. What about the Bank Nifty?
Absolutely right spot on. That is where the bulk of the money is still to be made.
Yeah.
We've seen a sharp run up on Bank Nifty, but if you see, a 12-month comparison, then the Nifty is up somewhere close to 26, 27%, if I'm not mistaken, and the Bank Nifty is up just about 16%. So I think what the Bank Nifty is doing actually is just a catch-up play. You can't have such a big divergence, on both the indices. So I think there is still room for upside. As I mentioned in my opening comments, 50,000 is more of a psychological mark for me. The next level that I'm looking for the Bank Nifty is actually 52,000. There is a bit of a resistance of the upward sloping channel, on the Bank Nifty, and hence you're seeing the 49,500, 49,900 kind of zones acting up. But I think, come next week, we should see some sort of an up move here. Positionally, I'm looking at 52,000, as the next level for the Bank Nifty.
Can we pull up the constituents of the Nifty and take a look at where the pull and the push is coming, in fact, in today's day of trade with respect to the contributors on the Nifty 50? Let's take a look at where, in fact, there is, further pressure and where, in fact, that pressure is being taken over, and what are the stocks that are, in fact, pushing the Nifty higher. So naturally, the Bajaj Fin Twins will be right at the top of that list, as you can see on your screen there. Along with that is ICICI Bank. What we do have is further pressure in Kotak Mahindra Bank. We also have a little bit of pressure in Bharti Airtel and L&T. But, this pressure is hardly anything at all if you consider, in fact, just 13 or 14 odd points on the decline. And as against that, we're looking at 150 odd points on the up move. And that is how things are shaping up this Friday morning. The only hope for the bulls would be that this this positivity doesn't dissipate towards the end of the session. That said, at the moment, it is essentially the Bajaj Fin Twins and the ICICI Bank leading the gains coming through. Kush, my final question for you is on Kotak Mahindra Bank. A tough spot to be in. In fact, even in the long term, if you had invested in Kotak Mahindra Bank even back in COVID, you would have been sitting with a pretty loss or pretty profit of 0% at the moment. The way forward here for everyone who is potentially looking for an exit?
Well, now that the stock's actually gone solo, perhaps an exit for anyone who's holding may not make sense almost immediately. So I think you could continue to hold on. The stock might see some sort of, a revival, at least, from the oversold territories, which it is yet to approach, by the way. But as far as fresh capital deployment goes, don't take this as an opportunity. See, a lot of times what we've seen is the stocks tend to move higher when some sort of a sell-off comes in because of the bad news. This stock was already under pressure and got beaten down because of the bad news, and that's why perhaps we're seeing that extended selling pressure. So in my books, for a fresh allocation, Kotak is still not on the radar. If you're holding and you're making losses, really a bit of a spot here, but perhaps you could wait a little. About 100 points jump from here could be an opportunity to sell, but no fresh capital allocations listed.
All right, thank you for that, Kush. Great to speak with you as always. We'll take a very short break, but on the other side, we have a slew of conversations. We're starting with Patel Engineering. We're talking about their fresh QIP launch and what they plan to do with that money. All of that after this short break.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India,
Welcome back. You're watching India Market Open, and while markets are off to a positive start and fairly strong start, actually lifetime highs on the Nifty, we're focusing now on specific companies, and Patel Engineering on our radar this morning. Rupen Patel, Chairman and Managing Director, joining us now. Mr. Patel, a very good morning. So we're talking about your 400 crore rupee QIP that you've closed, you've launched recently. Let's start with what are the plans with these funds? Where is the focus on this fund allocation?
See, the fund allocation will be towards working capital and part towards reduction of debt. We have been consistently reducing debt. Last year, we reduced debt by 200 crores. This time, we target to do the same. Our industry is right now facing a boom, primarily the hydro sector where we specialize. And we expect very, very large works just after the elections, because the government has doubled what it plans to build in terms of hydro projects over the last 70 years is being planned in the next 10 years. So you're going to see a huge amount of projects come up. So what you see is the company preparing for the working capital for upcoming projects. So large, over 50% of the money will be used for capital expenditure for these projects.
Mr. Patel, in terms, I just want to take that point forward, where I think you're essentially shoring up the dry gunpowder ahead of the next capex boom post-elections. Now, what are the kind of timelines that you see? Because you're going to have, election results June 4th, new government coming in, then a budget. Do you see all of this coming in towards the end of this calendar year? Or where do you see a lot of this new set of projects being apportioned?
I would see that the bidding would start somewhere around August. The bidding for the large projects in the hydropower sector would start around August, because the government outlay for this year is 11.5 crores, which has to be spent. 5 months are going to, 4-5 months are going to election and results and appointment of the cabinet. So you will see a huge plethora of work come up just after the elections, 1 month after the elections are over.
Patel, if I can, come in on, your plans going forward. Now, you already suggested that the government will start coming up with a lot more in terms of influx of projects post the upcoming and impending budget as well. You also mentioned that there will be a lot more in terms of order flow. Based on that, I reckon that your capital requirements will also increase. And considering that, since you are already raising funds through a QIP, perhaps 3 months or 6 months down the line, with your requirement or anticipation of an increase in working capital as well, do you think that there could be a chance that you would need to raise more funds via debt or equity?
No, the company strategy has been to reduce debt consistently. If you look at the last 3-4 years, we have been reducing debt from the sale of non-core assets, primarily from about 150 crores to 200 crores per year. So we do not plan to increase debt. In terms of working capital, what we have done now is we have prepared for the future, the amount of work that is going to come. So we have planned in the company, what you see is the company planning in advance, as opposed to getting the work and raising the capital. The company has risen its employee strength from about 1,200 people, 1,500 people to about 3 years ago, about 4,500 people. We have implemented SAP so that controls can be better. So what you see, and even financially, so what you see Patel Engineering doing, the company doing, is management-wise, finance-wise, prepare itself for the next 3 years. So I don't think I think we are good for the next 3-4 years. We will not require additional. I don't believe that we will require additional working capital, either in terms of debt or in terms of equity.
Mr. Patel, if I can also come in on your current order book, where does it stand? I'm not asking you for your earnings, but in terms of execution of the order book, how much of your current order book would you expect to execute in FY25 going in?
The order book is around 19,000 crores with the aging of about 4.5 crores. So based on the current order book itself, you will see the company grow at around 10 to 15% per year. That means if Patel does not have to take more work, even on the existing order book, it can grow at 10 to 15%. So what you will see, the current order book going into play, we will grow at 10-15% the coming this year. And then you will see the order book really coming into play, and we should grow at around 25 to 30% in the coming years.
Mr. Patel, I know we can't really talk about your numbers yet, but I was just, wondering and wanted to get a sense of what's happening with your margins. For your 9-month performance, everything looks good. Net profits have been up significantly, nearly 100%, but that margin squeeze sort of remains. And I want to understand if that's systemic or something that happens in this business. Do you see margins improving? You can't give me a number, I understand, but what is your outlook on margins?
Yeah, see, as we go on, as we become bigger, the turnover increase, economies of scale will come in. As we reduce debt, margins will automatically improve, net profit will improve. In terms of EBITDA, we have been consistent at 14-15%, and that will continue in the upcoming years. I don't see them going down. I would probably see them either stay stagnant or improve.
Any kind of outlook you can give me on EBITDA and margins?
On EBITDA, 14-15% will be consistent, so that will continue. In terms of profits and turnover, we clocked about 3,200 crores a year before last, and a profit of 154 crores. This year, in the 9 months, we finished about 3,200 crores and a profit of 140 crores. So I think that there's only up, it will go north.
In terms of number of your ongoing projects, we have 48 state, central and international business. 48 ongoing projects. What is the breakup there, and where do you see, what number do you see those number of projects improving to?
Core competency has been tunneling and hydropower projects. 75% of our order book is tunnels and hydropower projects. About 75% is hydropower and tunnels. About 20% is irrigation works, and the rest is miscellaneous works like roads, buildings, etc., etc. I would say that we would keep the hydropower sector at around anywhere from 65 to 75%, and we would expand on irrigation or hydropower. So combine the two, we would definitely keep it up to maximum to 80%, 80 to 85%.
All right. Mr. Patel, your expectations, well, I know that this would perhaps be preempting, but should we see the incumbent stay in power? Your expectations from the upcoming budget, because the Prime Minister seems to suggest that there could in fact be more Big Bang reforms in play should the government come back in power. What's the way ahead? What are you making of? What are you hearing on ground?
If I look at the Prime Minister's vision of becoming the third largest economy, some considerable amount of money will be spent on infrastructure. And I would see a lot of SOPs for green energy, primarily hydro and solar, in the upcoming years, at least in this budget, and a lot of government spend in these areas.
Thank you so much, Mr. Patel. Great to speak with you. Patel Engineering there on their outlook, and they expect new bidding to come in from August after the new government is settled in, cabinet has been announced, etc. So that's one to watch out for. Meanwhile, let's turn our focus to markets. Have hit a lifetime high on the Nifty. How close are we to 22,800? Not that far, actually. Pankaj Murarka is joining our CIO Renaissance Investment Managers. Pankaj, very good morning. Always great to speak to you as always. What do you think has been the big booster for markets? Is it that a fairly decent corporate results season, or now once you have phase 3 of elections coming in, you know that that kind of a momentum will also grow.
Morning, Tamanna. So I think what you said as rightly, Tamanna, that we've had a fairly decent set of earnings. Now we are almost past mid-cycle of the earnings season where most of the large companies have reported, and we've seen fairly healthy earnings from them. More importantly, the outlook continues to remain strong. So I think what is driving market at one level is clearly a very strong underlying resilient economy and a fairly optimistic outlook for the growth going forward as well. More importantly, I've always said that we continue to remain in bull markets. India is probably an outlier economy in a world where growth is challenged, and given that we can still do low double-digit nominal growth and mid-teens kind of earnings growth, I think in a bull market, markets will give positive returns year after year. So I think directionally, the outlook for market continues to remain positive. As you rightly said, election outcomes in India is considered to be a certainty, given election are completely lopsided at this point, this time around. So I think markets are already baked in a incumbent government coming back to office, and that also helps the market momentum.
I think even this announcement this morning that the Gandhis have pretty much given up on Amethi could have had a sentimental boost, because that's, like waving the white flag in what was once your bastion. But having said that, Pankaj, I wanted your take on what has been firing up the markets today. And it's not just Bajaj Finance, it's the Bank Nifty, it's that entire space, the banking financial space. Is there also a sigh of relief in terms of how quickly, in relative terms, the regulator has lifted the restrictions on Bajaj Finance? Is that what we're seeing?
Yes, so in case of Bajaj Finance, I think last evening the regulator lifted the restrictions, so that has been a positive news flow which is popping up the stock this morning. But I think it also gives us a message that it's a regulator which is somewhat different than what I've seen for the last so many years. It's a regulator which is far more proactive. It's a regulator which is far more conscious of the risk in the system, and it's a regulator which is far more agile than what we've seen in the past. And I think all of that is pretty positive for the system. As far as banks are concerned, I think we've had pretty decent earnings season from the banks, and the demand for loan in the system continues to remain strong. Bank as a sector has underperformed over the last year. So valuation in the sector has become extremely compelling when we look across sectors within the market. So my view is larger banks and banks which can deliver decent growth should do well going forward from here.
Yeah. Would you prefer your public sector banks to private banks? Is that theme still sustaining in your view?
Absolutely. I think state-owned banks, if you recollect over the last, except for the last 1 year, they've been beaten down very badly. So the starting point of rally in state-owned banks was very low because most of these banks were trading at valuations which are more like 0.3, 0.4 times price to book. Well, we've seen significant re-rating in these banks, but the good thing is that now when you look at these banks, their numbers are pretty robust. Most of these banks are doing ROEs on top of 1%. They've already started doing mid-teens kind of ROE, which are pretty healthy, and probably do a mid-teens kind of earnings growth as well. So I think still valuations are extremely cheap. If you compare it with the previous cycle, I'm going a slightly little back in the history. In 2007, when state-owned banks did well, most of these banks were trading at 1.5 to 2 times price to book. So they still have valuation room when we compare to the previous cycles. So I continue to believe that state-owned banks will keep participating in this rally, and probably some of them will actually outperform private sector banks from here as well.
Speaking of valuations at the moment, and I reckon that rotation continues to happen from time to time in all sorts of portfolios. But in the portfolio that you'd probably look in an ideal one, in what sectors would you look to perhaps book out, and in what sectors would you perhaps want to increase your allocation going in?
So, Agam, we have continued to remain positive on domestic cyclicals, which includes autos, cap goods, has been a big overweight for us for the last 2.5, 3 years, and that continues because I think the underlying growth in the sector continues to remain very strong. We are seeing strong investments by the government into the infrastructure sector, and probably we are at early stages of revival of private sector investment cycle. So I think the outlook for that sector continues to remain very strong. Apart from that, as I said, we like banks and we also like healthcare as a sector, because last year the sector has done well, but it's still early days. I think we are in a long cycle as far as US generics price stabilization is concerned. So I think pharma as a sector will do well. One sector which we've been underweight almost now for last 2 years is actually consumers. One, valuation in the sector is extremely rich. Last year was a sharp slowdown in consumers across the board, and it got accentuated because of poor monsoons probably. So we should have a cyclical recovery in consumers in the second half of the year, but we still think valuation in the sector in context of the growth remains very rich.
Okay, Pankaj, we'll leave it at that. Thank you so much for joining us and taking the time out for a quick call on that valuations and market check. Of course, that's Pankaj Muraka telling us about how he is approaching markets here on, even as the benchmarks make a new lifetime high. And on that note, we slip into a short break, and on the other side, we get your conversation with See It. Stay tuned in. You're watching NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
This is India Market Open. We're taking stock of earnings from See It. Well, it's been a quiet quarter. That's possibly how we can perhaps qualify the Q4 earnings for the tire maker, the tire major, in fact, where we're looking at a revenue growth of around 4%. Its EBITDA margins, sure, they have expanded to going over 13%. And net profit, on the other hand, has declined, but that is on account of an exceptional item. Well, to talk to us about the quarter gone by and what we can expect going forward, we are in conversation with Kumar Subbiah, the CFO of the company. Welcome to the show and thanks for joining in. Well, my first question is to do with the kind of volumes that you're seeing as far as the quarter it's gone by. What are your observations here? Because we do see a substantial pickup overall in the automotive space. Is that something that is going to eventually translate into the coming few quarters? What's your observation here?
Now, as far as last year is concerned, we managed to grow in two of the three business verticals. We grew very strongly in the international business. We grew in mid-single digits in the replacement business. and the OEM business was kind of flat. Okay, and regarding your question relating to how we see ourselves, the market looks there is a momentum in the market, particularly in the replacement market, and we see lots of opportunities in the international business. And we lost some volumes in the OEM business based on our own plan. We expect some recovery. So we expect, to see some growth momentum starting from current quarter onwards, and we would be participating in that growth. Okay, and we would be delighted if we could grow faster than the market.
Right. Well, in that case, if you could also give us an idea on the current rubber prices, because what we're observing is a little bit of an inch up there. What sort of an impact could it potentially have on your operating margins going forward? And what sort of a lag effect does that have when it comes to incorporating that in your pricing?
See, rubber prices were hovering around 150 rupees per kg in the Indian market as well as the international market till November of last year. And since then, there has been a gradual upward movement in the rubber prices. As we speak, it's hovering around 180 rupees per kg. So therefore, it will have impact on our costs, and therefore, if the realization remains, it will have some impact on margins. And even on petrochemical derivatives, where the crude plays an important role, except in the last 2 or 3 days, otherwise crude largely hovered around $90, closer to $90 level, and that has had some impact on crude derivatives. In general, there is a lag of up to 3 months. Over a 3 months period, any movement in the raw material prices progressively impact our costs. So therefore, we expect our raw material costs to move up by about little over 4% in Q1 versus Q4. And our intention is to neutralize this through some price increase as well as through cost efficiencies that we intend to execute during the quarter and beyond.
Good morning, Mr. Subbiah. Tamanna here. Just wanted to come to you on the net profit number and this exceptional expense of 58 crores. Because while margins and EBITDA, etc., were in the green, net profits have been down 22%, one assumes, because of these exceptional expenses. What are these? Are these the EPR related provisions? And what is sort of the timeline of this?
Now, there are 2 items in the exception list in the Q4 numbers that we have reported. Approximately about 8 crores in that exception amount is on account of some voluntary separation scheme that we launched in one of our factories. So, and therefore, that contributes about 8 crores. Balance is the provision that we have made towards extended producers responsibility notification that was issued by the government in 2022-23. So, and we are calling it out as an exception because this amount pertains to the year 2022-23. In addition to that, we also have recognized the cost in our own normal expenses, large part of it in Q4. So this EPR regulatory changes in terms of manufacturers will have an obligation based on what was produced 2 years back, either to recycle tires or go and buy certificates from the recyclers.
If I may ask, Mr. Subbiah, so if you say 58 and out of 58, 8 crores is employee VSS voluntary separation costs, so about 50 crores for the EPR segment. When does this liability end?
No, liability is not an end. So it's about 36 crores is what is there in exception relating to EPR pertaining to the earlier year. It has just begun and it will be there in the cost base from here on.
So it will be a recurring sort of expense here on. What would it be on an average per year?
Okay, it all depends on the value of amount of money that we incur for buying those certificates. It could be up to about a percentage of our selling price at a company level.
Okay, so if it's 38 crores, this is for FY23. What period is 38 crores for? And for FY24?
FY24, it's almost double the amount.
So for FY24, it will be about 70
Double the amount, about 70 odd crores.
And when will this have to be accounted in? So you have a two-year gap, is it, to account for this?
Yeah, it has already begun. Okay, in the year one, it is about 35%. Year two, it is about 70%, which is current FY24. FY25 onwards, it's about 100%. So therefore, and the amount would be higher in FY25. And from there onwards, it will sustain.
Sir, what is the amount in FY25?
FY25, we expect it to be about 1% of our turnover, overall basis. That's what the impact would be in terms of that. So it could be closer to about 100 crores.
Okay, thank you, Mr. Subbiah. We've run out of time, but thank you so much for speaking with us. That was really the key takeaway, and perhaps why you're seeing the stock a little depressed today, because all things considered, this EPR cost is going to now be a standard feature for tire makers and for CEAT, and for FY25 it could go up to about 100 crores. That's what the CFO just told us. We'll take a very short break, but stay tuned. On the other side, Ramkrishna Forgings speaks to us about their numbers.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or
Hi, good morning and welcome to NDTV Profit. We're joined by Mr. Naresh Jalan right now with the Managing Director of Ramkrishna Forging. We're discussing the back of the Q4 earnings, which were reported by the company, and a strong show shown by currently the company showed a really strong revenue growth of roughly 15 to 20%, while on EBITDA, and here was the key numbers, of roughly 22% the company has clocked in. It has maintained margins as well, coming at roughly 200 crores of EBITDA, while PAT was up roughly 31% compared to the previous year, coming at roughly 87 crores. Now, do know that the company has been in the news on the back of mergers of its subsidiary with itself, while it has also, put up a new facility in Mexico. So we'll be talking about all of this and more with the management and with Mr. Naresh Jalan. I'll just check if the guest is already logged in. Yes. Hello, Mr. Jalan. Good morning, and thank you so much for joining in today. Let me just start off with the numbers. The strong EBITDA profile maintained by the company. Could you just run us through the basics of how Q4 panned out, and what is your expectations for financial year 25? If not on numbers, just how you are seeing the industry as well.
I think Q4 has been extremely strong in the backdrop of the geopolitical issues as well as the domestic commercial vehicle downturn. And going forward, I think we expect to at least have a 15 to 20% volume growth going forward into FY25.
Got it, sir. And you have in this particular, I wanted to just start off with talking about the Vande Bharat order also that you received in this particular quarter. Is this part of the JV with Titagarh? And if there is any commentary on how do you see this JV with Titagarh also panning out going forward as well?
I think the Vande Bharat order is not a part of JV.
Okay.
It is our own RKFL standalone basis, the manufacturing of the underframe which we have received from BHEL. BHEL is under a consortium with Titagarh, but the order has been received on a standalone basis. And the joint venture which we have with Titagarh, which is known as RKTR, is the wheel project which is being set up in Chennai.
And is the investment of this particular green project already complete, or is it ongoing in this particular financial year as well? Because I know that the company in its presentation has given a detailed guidance on investment going forward as well as the capex plan. So is this going forward, is this completed, or is it going to be some component as part of the investments as well for financial year 25?
This is part of our investment, and I think we have mentioned in our presentation. Last year, we have invested close to 62 crores in this investment, and total we envisage around 240 crores of approx investment in this going into 2 years, next 2 years, as a part of equity, and balance is going to be funded by Titagarh and as well as debt for completion of the project.
And do you expect any such more orders also coming in for from the Vande Bharat segment for Ramkrishna Forging on a standalone basis as well?
Yes, I think the current order which we have received is only for 32 train sets.
Correct.
The total private sector order is close to 200 train sets. So we have in October we will submit the samples for validation, and we hope that once the validation is complete, we will have an opportunity to service the industry for entire 200 train sets.
Understood, sir. And what is the kind of competition that you're seeing in this segment? Do you see other forging players in this segment, or is there any other players who service in the auto industry who also compete in this particular order?
No, I think none of the people in the auto segment compete us in this order. I think there are other people who are there in this segment, but they are not part of the auto industry.
Understood, sir. Now, I just wanted to take some move a little bit global. I think the share of revenue, I think between Asia is roughly around 59 to 60%, as well as North America and Europe is also a substantial share. The company has also put in a new plant in Mexico in this particular financial year. I just wanted to ask, firstly, will you be servicing a lot of North American clients from this Mexico plant? And over the next 1 to 2 years, where do you see the share of revenue of North America as well as Europe move from here?
I think this Mexico facility is not yet set up. It is in process, and I think in next 3-4 months the setup is going to start. And I think we are looking at almost only 8 to 10 crores of revenue from this plant. But next year in FY26, we are looking at significant revenue. And this facility is primarily being put to cater to the passenger vehicle and the local manufacturing out of North America.
Understood, sir. And could you also just brief us about what are the EV plans the company has been doing? I think you had mentioned in last year that, if I'm pronouncing it correct, this, you had a 51% stake in Suyo. Apart from that, and including this, if you could just summarize what the company is doing on the EV front. We've seen a lot of auto component makers, starting making parts already and putting in the EV plans. For Ramkrishna as well as for the industry, how do you see with the evolving landscape of electric vehicles for passenger vehicles as well as two-wheelers, if anything? Could you just guide us on that as well?
In EV, we are migrating slowly but steadily into EV. And I think we are looking at in next 3 years, a double-digit growth from EV in our balance sheet, and primarily driven by two-wheeler and four-wheeler market. And some part of it is going to be from the light commercial vehicle. So we are building up a pipeline of orders, and I think you will be able to see this in coming quarters and months, how this shapes up.
Got it, sir. And I think you had mentioned that the equity commitment for Titagarh over the next 3 years, I think from 64 crores to 100 to 113 crores as well. Could you talk a little bit about the kind of orders that you're going to go for here? And any kind of, if not quantification, how do you see the space evolving? Could you let us know a little bit about that as well?
No, in the wheels project, we have already bagged an order from Indian Railways.
Yeah, correct.
Chilling of 80,000 wheels per annum, and there's a take or pay kind of agreement with the railways up to 2047. While it is only 80,000 wheels which railway has guaranteed, but with the infrastructure growth and the railway investments in modernizing railways, we feel that there is going to be huge domestic opportunities in the wheel project, as well as there is a huge opportunity globally also. But right now, we are not filling in any orders because this project is going to be up in production by end of FY26. So we would wait for right opportunity time to start filling up the orders. Our first and foremost want is to start manufacturing and delivering wheels to Indian Railways.
And so just one quick 20-second answer if you can squeeze in. You had a QIP which we raised for 1,000 crores. You have informed the exchanges of utilization of this, and I'm guessing this is for the paring down of debt. How quickly do you see over the next few months or the next quarters to finish paring down the debt? And what is the kind of the timeline for this, if anything?
No, I think we have already given a detailed statement of the cash flow in our presentation, which clearly states the current debt status and what is going to be likely in FY25 and FY26. So our statement in the presentation is extremely clear in terms of the overall debt management and the utilization of the QIP proceeds.
Say no other fundraise over at least till FY26 on the equity side?
I think we are not looking at any fundraise with the current cash flows.
Got it, sir. All right, sir. Thank you so much for joining in today and running us through all your numbers and being so upfront with all the answers. We will be talking to you soon as well as for the next quarter as well. Thank you so much for joining in today. So this is time for a quick break here. We'll be back with a lot more. Stay tuned to NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check.
Welcome. This is NDTV Profit. You're watching Talking Point. We're in conversation with Gautam Shah, founder and chief strategist at Goldilocks Premium Research, who's joining us on the show. Gautam, good morning. Thank you so much for joining in. And no better day to have you than on a day when the benchmark is making another lifetime high. Well, Gautam, at the moment, the Nifty, well, it's trading at wherever it is. The way forward, what is your assessment here?
Good morning. Thanks for having me. Well, I think for the last 4 months, we've gone through a lot in terms of local and global developments. And despite all that, you have the Nifty coming back every single time. And I think the test of character is really in difficult times, and the manner in which the indices have handled the difficult times in the last 6 months, I think is quite commendable. And I think, as we keep saying, liquidity plays a very important role in protecting the markets. So I think the setup is still quite strong. The leadership is returning. The momentum is back. Participation is excellent. And there seems to be a musical chairs within the index heavyweights, because there was a time when the IT sector did so well and kept the market higher. It has taken a bit of a backseat, and now you see the banks coming back so strongly in the last 15 days. And that's really propelled the Nifty to levels of 22,700, 800. But if you really look at the Nifty itself for the last 4 months, it's been in a sort of a band. So 21,800 on the downside, 22,800 area on the upside. There have been a few attempts to break out and break down, but they have really not worked. But in this period, stocks and sectors have done exceedingly well. So I do believe that if the Nifty is able to get past this 22,800, 23,000 area, which is an important resistance based on multiple studies, you could see the next big move on the Nifty. But till that does not happen, it's just best to stay with specific sectors and stocks and ride this market without really overanalyzing and without looking at the day-to-day action.
Gautam, you spoke about rotation within the Nifty and you also spoke about the strength in banks. What's surprising is that the banks are showing a little bit of strength despite slackness from the largest of them all, HDFC Bank. The way forward here, because I reckon that it will still have to play an important role in the Bank Nifty overall in general, even though ICICI and Axis Bank are pulling their own weight. What is your assessment on the Bank Nifty and the banking constituents?
Yes, as you rightly said, HDFC Bank has a huge bearing on the Bank Nifty, and that was one reason why the Bank Nifty did not do as well. In fact, even Kotak Bank, given the news flow of the last 1 week, but with the comeback of ICICI Bank, I think that's pretty much made up for the underperformance of the other two banks, and that's probably the reason you have the Bank Nifty now at the doors of 50,000. So I think the trend is pretty solid. Kotak Bank, any which way, has been an underperformer for a couple of years. HDFC Bank does not have much to lose. I think at some point of time, appreciation will come, but there is not much to lose. So I think in that sense, the Bank Nifty is protected. But within the Bank Nifty itself, I think our top picks have been ICICI Bank in the private banking space and SBI in the PSU banking space, which has been an absolute favorite for almost 6 months now. And we do see both these stocks delivering supernormal returns even from current levels. On the Bank Nifty itself, I think once the level of 50,000 is cleared, which is a psychological and a technical barrier, you could potentially see a move towards 50 to 500. But the way the banks are placed, I just get the confidence that the Nifty is in still in fine form. And if Reliance were to start contributing, that would be the icing on the cake.
Gautam, I just look at the India Volatility Index, and what I observe is that the index is not as substantially high as one might expect in election season. It may potentially also indicate, certain perhaps foregone conclusions. But in your opinion, under such circumstances, given the kind of environment we are in, of course, we are in election season, going in, what is your observation based on experience, given the fact that the benchmarks are near lifetime highs or are at lifetime highs, and the India Volatility Index is not substantially high in comparison?
The low volatility has been a characteristic since COVID hit us. I think since the time Nifty started rallying from 7,500 levels in March 2020, you've had an environment where volatility has been low, corrections have been shallow, and I think that's the new normal on account of liquidity. But if you really look at elections and the expectations, and if you compare it with the past, I don't think it's comparable, because when have you seen in the last 25 years that we run into elections with 19,000 crores of domestic liquidity coming in every single month? And in some sense, I think everyone has a view that the election is a non-event. So I don't think the market is very concerned about what's likely to happen in the first week of June. Having said that, definitely there could be some volatility. And as I keep telling my clients, it's life before June 4th and life after June 4th. So you don't really plan too much, in advance. I think the market should remain in good shape. We have our own positives apart from elections, which is playing out beautifully. And volatility, I think, is not a factor, because still the India Volatility Index is between levels of 11 and 16, all is fine. It's only when it starts moving above 16 is there a problem. So I don't see that happening anytime soon.
Gautam, you did suggest that there are plenty of positives beyond just the election which are playing in favor of the markets at the moment. What are those? If you can, help us list them.
Well, sometimes price action takes over everything. So I could talk about fundamentals, I could talk about earnings, I could talk about India's demographics, India's valuations, and the sweet spot that India is in comparison to world equity markets, because we are still one of the best performing markets in the world. And if you divide India by the rest of the world on the ratio charts, you will see that we have been in an uptrend for the last 3 years. So I think all our positives are there. I think some quarters in the market have raised that we are overvalued or we could be in bubble territory. I don't think that's true, because if you look at the historical valuations, we are slightly above mean and we are nowhere close to bubble territory. And with the earnings pickup of the last couple of weeks, and we saw the GST collections in the last couple of days, all of this just speaks volumes about the confidence the Indian market trend has. So I think put all of it together, it does seem as if this bull market will continue. There could be short, sharp corrections from time to time. We have seen this, but you have to stick to quality. I think that's the key message to your viewers, that in this market, anything that's substandard gets hit very quickly. So stay with quality, and I think your portfolio will be safe.
Gautam, let's talk about sectors beyond just the Nifty and the Bank Nifty, and one of them I want to touch upon is metals, which of course follows the commodity cycle in general as well. But there has been a little bit of resurgence of late. Your observations here, perhaps ideas that you like in this particular sector.
Well, metals has been our favored sector for almost 4.5 months now. In fact, we caught it very early because we got the indication on the charts, on the ratio chart, that things are changing. And thereafter, it's just been, one step higher, every single week, because stocks have participated well, fundamentals have picked up. Now you hear about all the tailwinds, the China factor is kicking in, and you have smart money, which is aggressively into some of these metal stocks, which are not overly valued. I know they are considered cyclical in nature, but right now I think they are structural is what we see. And I do see, looking at the ratio charts, that the metals index has the potential for another 10 to 15% upside from here. So all the top stocks, right from JSW Steel to JSPL, Nalco Sale, which we've covered multiple times in the past, Tata Steel are looking good for 200, Vedanta, which we covered in the past and looking good for a lot more. So I think this entire space has caught the attention of market participants. And with the fundamental tailwinds coming in as well, I think it's a sector where one should stay committed. So while auto, banks, pharma, chemicals also look good to us, but you need to have a very serious allocation to metals.
Gautam, the other sector which has been a quiet mover of late is the pharma sector. And again, there are a handful of names in the sector which just continue to move gradually upwards and don't even show that much volatility while they advance and they continue to advance. Your view here?
The pharma again has been a favorite sector for a year and a half now. I mean, look at the trends that you've seen in the pharma space. Look at Sun Pharma. Every single week has been a higher high for a very long time. Look at the movement in Cipla, Zydus Life, and now with Divi's Lab and Laurus Lab coming back, I think the pharma sector is also in a sweet spot at this point of time. In fact, as we speak, we are almost at lifetime highs. I think, and we are coming out of almost 2 months of consolidation. And if the breakout does happen, you could see another 8 to 10% upside, for the pharma index. So it's a sector where you stay committed. It's low beta in some sense because in difficult days for the market, it doesn't fall much, but in good days of the market, it does well. And I think all the top names, including Dr. Reddy's, we like and we feel that, one should stay invested in them.
Right, Gautam. The other thing that I wanted to also address was the broader market indices, which continue to advance even in this financial year. I know we've just been about a little over a month in this financial year. Of course, in the previous financial year, we had continued to see that huge outperformance from the small cap index specifically that was followed by the mid cap index. The way forward here, do you think that that trend could likely continue moving into the next few quarters?
Well, honestly, there are no indicators because if you overanalyze in the mid caps and small cap space, you will miss the party. I think that's been the case for a lot of people in the last 3 months because every time you thought that, okay, now the big correction is coming, you had a shallow, a dip, and then, all the quality small caps and mid caps came back strongly. So even now, I think the setup is pretty strong. They are at lifetime highs. They continue to outperform. And mind you, in the last 4 months, the Nifty hasn't gone anywhere. We started the year at 22,000, so we are 3.5% higher. But if you look at the mid caps and small caps, they continue to maintain a series of higher tops and higher bottoms. So I think this mid cap, small cap outperformance is here to stay, and I think is likely to stay for the rest of this year, but stay in the top quality mid caps because that's where the money is flowing in every single month. So the handful of 50, 60 quality mid caps, small caps is where the real focus is. And I think they will continue to outperform over the next 6 months.
Right. Gautam, for fundamental reasons, the IT sector is clearly out of favor at the moment. Your observations and your opinion, at what point in time do you think that it would make for a significant, lucrative bet?
See, the whole of last year, we were quite a bull on the IT space. In fact, we played the entire rally in mid-cap IT. And thereafter, a couple of months back, things just changed gradually. And we managed to identify the same, and we pretty much went overweight into the IT stocks. I still like them from a longer term perspective. If somebody's looking at 12 to 36 months, I still like a TCS and HCL Tech Mahindra, and I think they can do well. But, mid-cap IT has been very richly valued. So you can't be committing into them. And I think smart money has moved away from this pocket to some of the other pockets. And obviously, there are some global challenges that we are facing. And this whole debate whether AI is going to disrupt the IT industry worldwide and India, I think that's a very valid debate as we speak today. But right now, I think it is out of favor. In this market, you don't touch underperformers. So simply stay away and focus on the other pockets.
Okay. And perhaps a final question then, Gautam, if I can take this one up for you. The auto sector. Again, a little bit of resurgence playing out for fundamental reasons. But your views when it comes to charts here?
Well, it's seen a phenomenal move. I mean, you look at the charts and you realize what a great move the entire auto space has seen in the last 1.5 years. I think it is still going strong. It's just that there is some sort of musical chairs here as well, because Tata Motors has taken a bit of a breather, whereas Maruti, Eicher Motors, Escorts, Ashok Leyland have now started to do well. And I think they will continue to see further upside. So you have to be stock specific. You can't buy anything and everything in auto. And the other space that we like, and I think we didn't speak in detail about it, is chemicals. I think chemicals is making a very strong comeback. And this breakout is here to stay. So we see immense alpha being created in chemicals over the next 3 to 6 months.
Would you like to make a few names here in the chemical space, Gautam?
At Goldilocks, we like to stay with that absolute top quality. I think that's what we do, fundamentally strong and technically strong. And having said that, I think SRF, Deepak Nitrate, Gujarat Fluoro, and Aarti Industries are our top picks, and we see them doing very well.
Fair enough, Gautam. We leave it at that. Thank you so much for joining us and taking us through your analysis and views on the markets going forward. Well, there you have it. That's Gautam Shah telling us about the current state of the markets and what we can expect. And on that note, we are out of time on this edition of Talking Point. But on the other side of this break, we get you the F&O show. Stay tuned in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India,
Benchmarks lose gains after staging a sparking rally to scale fresh record highs in early trade. Sensex trades at 74,500 while the Nifty trades at 22,600. And respite for Bajaj Finance as RBI lifts ban on Bajaj Finance digital lending products. Stock climbs 6%. Meanwhile, Coforge falls over 7% as the company's profits takes a hit in Q4. On the other hand, CEAT also takes a hit as the company incurs an exceptional expense of 58 crores. And more earnings on the block. Britannia, Titan and Godrej Properties are set to report their March quarter numbers. Hello and welcome. This is the F&O show. I'm Agam Vakil, and in this show we take you through all the stuff, all that's happening in the futures and options space in Indian equity markets. A very quick look at how things are panning out as far as markets are concerned. Well, the Nifty has given up all its gains after hitting a fresh high, not unlike what we've seen in the previous couple of sessions. In fact, it's now turned into the red, marginally so, but in the red all the same. And the Bank Nifty is also down by around 0.2%. So it's turning out to be yet another volatile Friday, and well, we need to keep an eye on how things are panning out as far as the markets are concerned. The broader markets are well, they're mixed. At least as far as the constituents of the broader markets they are mixed. So you have something like the mid-cap index, which is well up flat as well, and the small-cap index is also not doing as much, but it is looking at well, again, just 0.1% advance coming through. So we've seen a giving up of sorts across Indian equities. Let's take a look at how things are panning out in the futures and options space, futures specifically, and how things are well leading in there. So as far as the Nifty futures go, and there you have it, we are looking at a 3.5% increase in open interest. The Bank Nifty futures are also looking at well, some amount of traction towards the upside, even though the index is marginally in the red at the moment. We have not too much to go for, but you do have ICICI Bank, which is in fact up and about and providing a bulk of the gains. But what may also potentially be weighing on this particular index is a handful of other banks. Let's pull up the constituents of the Bank Nifty as well and see how things are faring there. So, well, there you have it. So you do have something like an HDFC Bank, which is down around 0.3%. Kotak Mahindra Bank is once again in the red, so a lot of pain there as well. And Punjab National Bank along with Bandhan Bank down. What's in the green is ICICI Bank, as I mentioned, IndusInd Bank and Bank of Baroda. And that's how things are faring as far as the Bank Nifty is concerned. Let's move on and talk about the options market now. And, if you consider the Nifty, well, there you have it. That's looking at the calls and puts. We have a substantial amount of writing around the 800 call and thereabout, and this is perhaps on expected lines because it's taking a bit for the Nifty to perhaps, while it continues to make new life highs, it's becoming a little bit harder for the Nifty to take out 22,800, and as a lot of analysts are suggesting, 22,800 will be a little bit of a hurdle to move forward beyond. And of course, on the lower end, while we continue to see more traction around 22,500, 22,600, 22,700 puts, it seems like it's going to be a day where it's going to be hard to guess as to what kind of direction is, especially given the fact that we saw that decline from day's highs. Let's pull up the change in open interest as well, and as far as the Nifty is concerned. So let's see which option strikes have in fact that change coming in, and perhaps on expected lines, 22,700 calls and puts continue to see writing, and well, that's where you have the most amount of traction. But on that note, let's get in our experts for today and see what they are making of these markets. Well, we have Aditya Agarwal of Invest for Edu and Brijesh L of IDBI Cap, who's joining us on the show. Good morning to both of you. Thanks so much for joining in. Aditya, your view on the Nifty made a new life high, but didn't cross 22,800 and has come off since. What's your assessment here?
Good morning, Agam. Thanks for having the show. Markets, to be honest, are range bound. And if you take a look at the way markets have been behaving in the past as well, in the recent past, markets do make a new high, but it's just by a fraction of few points or maybe by 1%. And then again, we see a pullback in the indices, and then it comes back to the lower end of the range. So overall, markets still are locked in that range, Agam, I believe. Just that the range shifts by a few hundred points every time market makes a new high. So on the upside now, 22,800, as you mentioned at the start of the show, is clearly a hurdle. Once that is taken out, I believe 22,900, about 23,000 will also act as a resistance. I don't see markets crossing 23,000 in a hurry and seeing a massive upside on the Nifty, especially. On the downside, again, 22,500 to about 22,200, these are key support areas for the markets. And as I mentioned, the range keeps shifting higher and higher. That's it, Agam. Otherwise, you notice the previous range was on the downside 21,700, then it shifted to 21,900, and now maybe 22,000, about 22,100 is where the major supports are. And on the upside, 22,900, 800, these are major hurdles. What is very important to notice out here is the VIX. The volatility index has been constantly rising this week, and almost it's up 30%, I guess, this week itself. So this is something that one needs to keep a very close eye on, especially the market participants heading into the election phase and the outcome of the elections. I believe volatility index will continue to rise from here on, and any sharp spike in the volatility can lead to, as we know, it has a negative correlation with the market, can lead to maybe a choppiness in the market creeping in. So this is something that traders need to keep a close eye on. After that sharp one-day drop, we've seen a recovery in the VIX, equal recovery in the VIX. And as far as levels are concerned, yes, 22,800, 900 on the Nifty is a hurdle, and Bank Nifty is something which had outperformed, is now entering into a consolidation phase. So 49,100 on the downside is a key support area for the Bank Nifty, at least for the day. If that is taken out on the downside, then maybe bears will have an upper hand, and Bank Nifty can slide all the way down to 48,800, 48,700.
All right, so that's the view on both the Nifty and the Bank Nifty. Brijesh, good morning to you as well. Let's start with your view on the Nifty. How are you looking at things? What's your assessment here?
Yeah, morning everyone. So if you ask me, I am pretty clear, confident that we should be heading higher. The reason why, because the trend and momentum both are positive. I do agree that at current level 22,800 there are call writers which are active. So, but then it may be a resistance from a day or two. I believe that this level will be taken out over a period of time, and I on the higher side, 23,100. This is the precise level which I believe Nifty will be retesting in the next couple of days. What I can say very clearly is that the Monday there was a very good buying during the start of the week. So whatever the low we have on Monday, so Monday low will be acting as a very major support for the Nifty, and we should be holding all the long positions with those as a stop loss. And most importantly, we are watching the FI data on the index futures. So over the last two trading sessions, they have turned into negative. They are turned into positive. They all this while they were negative, they have turned positive, and they are having a long position in the index future, Nifty index future. 53% is the long short ratio. So my sense is that maybe today it might not go. 22,800 is the resistance, but in next couple of days, I believe this level will be taken out, and 23,100 should be the target for the Nifty. If I need to speak, yeah.
Well, of course, yeah. I was just, Brijesh, I was just saying that the 23,000 will be the next key level to watch, and I reckon that 22,800 is something which is on everyone's radar. But Brijesh, I believe that you were also telling me about your assessment on the Bank Nifty.
Yeah. So see, Bank Nifty, it's very clear. The Monday, what we saw, the very good, there was a rally of almost 1,200 points on Monday's session. And we are just taking a breather of that particular candle. And I believe 49,000 will not be that easily broken. Just in case, from a trading perspective, 100, 200 points plus and minus, I think Bank Nifty will take support at those points. The low of that bull candle, which is 48,342, which will be the major stop loss for all the long trades. I don't believe that level will be broken. Anytime when Bank Nifty comes closest to 49,000, 100, 200 points plus and minus, I think we should be looking to add the long positions, because Bank Nifty is bound to cross 50,000 on the higher side.
Right. Okay. So that's the view on your benchmarks going in. Now let's talk about stocks, and if we can actually pull up all the stocks which are seeing an increase in OI, decrease in OI, and see where there is in fact a considerable amount of traction. Of course, we're in earnings season, so I reckon that there will be a handful of names out there which will be featuring on that list. And now look at Coforge. Coforge is down 8.5%. 31% increase in open interest, a clear case of shorts. The street not liking what the company is coming up with, coming short in terms of its operational performance. And because of the fact that Coforge is also, relatively more expensively priced, not necessarily for its fundamentals, but there is a certain scarcity premium because, the balance out there beyond the promoter holding there's a considerable higher holding in terms of institutions. And that, it's a two-edged sword. So it can, in fact, work against one as well. Potentially what is working against Coforge today as well. Now down 9%. So a lot of weakness there. You have something like an MRF that's down around 2.8%. But MRF is not a stock that is usually very, well traded, given the CMP, as you can see at this current market price, and the absolute price out there. That said, we have advances for Torrent Pharma. Cummins is up, and as is the case for Shree Cement. Cummins, in fact, is looking at quite a bit of recovery on an intraday basis. We'll talk about Cummins in just a bit. I want to pull up the intraday chart there as well. But before that, let's pull up the list of stocks which are seeing unwinding. There you have it. Look at that. So Cummins at one point in time was well in the red, and it has recovered. Of course, there's a lot of news flow with respect to the company's outlook going in, but we'll come to that in just a bit. Let's pull up the list of all the stocks which are seeing unwinding in today. So Havells is seeing about a short covering, as is the case for Atul, but otherwise we're seeing longs unwinding in something like an Oberoi Realty. I really wouldn't want to qualify Manappuram Finance and Ashok Leyland because the underlying is largely flat. So you can't really make out in terms of trend as to what's really happening there. But let's talk about a handful of these counters, because there's plenty to talk about, in fact. I'm going to start by taking a look at what's happening in Bajaj Finance. If we can pull up the futures of Bajaj Finance and see what kind of traction that one is looking at. So, of course, Bajaj Finance is still very well in the green. It's up around 4%, but it's not. It's off days highs, and its open interest has actually dissipated as well at the moment. It's looking at less than 1% increase in OI there. But of course, there's positive news flow fundamentally. Aditya, what's your assessment on Bajaj Finance? Where do you see it going? What's the way forward here?
I believe, Agam, it's more of a positional view that one has to take. The 7,400 clearly is the hurdle for the stock. And from there, we have seen a bit of profit taking as well. And as you pointed out, that the open interest is also not even 1% as of now. So there is clearly a bit of profit taking that we are witnessing in the stock. I don't see too much of a selling pressure in the stock. In fact, it's a good time if somebody wants to start nibbling into and build a position on the downside. I believe 7,000 to about 7,100 is a very strong support for the stock. And from those levels, we are going to see a renewed buying interest. So if somebody is looking on to build a position more from a positional point of view, one should definitely start nibbling in at current levels. Buying a staggered manner, maybe all the way down to 7,100 is a good idea. And once it crosses 7,400, I'm looking at a target of 7,600 on the stock. So overall looks very good to me on the chart setup. It's just that after a gap up, open stock is witnessing some kind of a profit taking, and I would not be too worried about this. I would rather be a buyer in this profit taking condition rather than going ahead and shorting the stock.
All right, guys. Well, on that note, we slip into a short break, and on the other side, we talk about more stocks, of course, which are on our radar. We'll be back in just a bit. Stay tuned in.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website, and
Welcome back. This is the FNO show. Let's go across to our experts and firstly take their picks. Brijesh, I come to you. Your recommendations for today?
I think I'll go with the Lupin future. Lupin is something which is trading higher, and this is a trading bet. So I would go long at the current price with a stop loss of 1665. 1710 is the target what I'm looking for the Lupin, and the rest is the cash stocks. Phenolics pipe is something which is looking positive on charts. One should go long at current price 273, stop at 266, and target is 289. Some 6-7% kind of a gain can be there. And then lastly, in the metal space, JSW Steel is something which is looking good. One should go along at current price. The stop loss would be 880, and the target would be 953. So all are trading short to medium term trading bets.
All right, so Lupin and JSW Steel on Brijesh's radar. What about Aditya? Aditya, what are you recommending?
So I've got a couple of buy recommendations as well, Agam. One is from the banking space, one is from the pharma space. From the banking space, I've picked up AU Bank. All these small banks are now looking good on the chart setup, and looks like there's a buying pattern which is emerging. AU Bank has also broken out from a bullish flag pattern, and it's on its way up after a decent correction. At current levels, I would recommend one can definitely look at going long for a target of 685 on the upside with a stop loss at 630 on the downside. Offers a good risk to reward at current levels and more of a position kind of a trade, Agam. The second stock is again from the pharma space, Dr. Reddy's. As we speak, stock is, I guess, heading days high. Beautiful looking chart setup. It's broken out from a falling channel, fresh strong build up as well there. So for a target of 6550 on the upside, one can definitely look at going fresh long with a stop loss at 6250 on the downside.
All right, so that's your view as far as a handful of stocks are concerned. Now remember, we wanted to talk about a few more beyond just what our experts were talking about, and of course Coforge is going to be on everyone's minds. The problem with Coforge, as I was addressing earlier as well, that it does have a scarcity of premium, but that scarcity of premium doesn't always work in favor of a stock. It could also lead to a sharp decline, and that's possibly what's playing out. We're also seeing a 33% increase in open interest, but it's possibly also got to do with the low base playing in. But it's down 9% at the moment, now at around 4,500, a little over that. Aditya, what would you do with Coforge? One, if you were stuck with the stock yesterday, and two, at the moment, if you were to look for a fresh position, would it be a long or a short, or would you avoid at the moment?
So Agam, first let's address if you were already long in the position in the stock and you got stuck, what to do. 4400, 4430 for me is an immediate major support for the stock. So between 4400 to maybe a 4450, traders can look to place their stop losses. If 4400 is taken out on the downside, then there could be further downside or decline in the stock. Now, coming to what do I do fresh in the stock, I would definitely not go short the stock after a 9 to 10% decline in the stock. Rather, I would, if I'm looking at a day trade, I would stay away from the stock. If I'm looking from more of a positional kind of a view, Agam, then all these stocks, not only Coforge, I will add a persistent system to it. I will add a Scient, and I'll add a Birla Soft as well. So take a look at all these four stocks. They have witnessed sharp corrections post their numbers. And what is interesting is if I flip to a higher time frame chart, like a weekly or a monthly time frame, looks like they after this sharp correction, all these stocks are coming close to their key support areas. Specifically talking about Coforge, it has not broken down from its 200 weekly moving average, Agam, even in the event of the COVID crash that we had seen, though that is still some distance away, which is at 4,200. But if somebody is looking at a long-term horizon, maybe 6 months to about a year's time frame, one can definitely start looking at adding position in these stocks, both the Coforge and Persistent Systems. So maybe if it comes anywhere close to about 4,400, one can definitely start looking at adding fresh positions. Even at current levels, you can stagger it by a 40-50% kind of a position here. And if it corrects closer to about 4,200, add more. Because for me, I believe 4,100 to about 4,200 will be a major support area for the stock. And coming close to 200 weekly moving average says that a major chunk of the correction is already done in the stock. And from here on, one should look at buying opportunities because the risk reward is skewed in favor of going long in both Coforge, Persistent, and Cyient.
All right, there you have it. A well-rounded view on not just Coforge, but a handful of other counters in the mid-cap IT space as well. Well, we're out of time on this segment, so I'm going to take a moment to thank both our experts, Aditya and Brijesh, for joining us and taking us through their views on the markets. And from there on, we move on to Neogen Chemicals, which is also in focus. Well, the company has reported a quarter which is mixed at the moment, but it is reeling under a slight bit of pressure. Well, we caught up with the management, and this is what they had to say. Listen in.
Last year, we have seen dramatic changes in the raw material prices, especially lithium, which was dramatically down. So while, you can see on quarter, our lithium sales have reduced significantly, but that's mainly just because of the price. And in terms of volume, there was a 5 to 6% increase there. And where we saw biggest increase was in our organic, where we see both volume as well as revenue growth. That the revenue growth was almost close to around 20% and the volume growth was around 25 to 30%. This was aided also by the acquisition that we did for making organolithium compounds, Bulai Chemicals. So that also was about done 3 quarters ago, and this quarter it also contributed significantly. So that also aided in increasing our organic revenue. So overall, if we speak, in terms of volume growth for the whole year also, there was almost a 30% increase, 25 to 30% increase in the organic production and around 5% increase volume growth in the lithium, overall giving us the increase in this quarter of around 20%.
Okay, so good volume growth here, and we did see
Yes.
uptick in our margins also. What were the levers for the margin uptick?
Just better volumes, and again before the percentage margins look lower because lithium was a high price which was getting passed on, and now that was not getting now that lithium prices are lower in terms of percentage, it looks slightly higher. So that's why we basically request our investors to basically focus on more absolute EBITDA as compared to percentage EBITDA when lithium is very volatile. So basically now the lithium prices are like staggered, and they are one of the close to one of the lowest prices which we've seen in recent times. So that's what gives a view that the margins have improved.
Okay. Yeah, please go ahead.
No, and the other part is the volumes growth which we had, which has improved the margins.
Okay, and also, is there any seasonality in your business? Because if I see your numbers, every time your H2 seems to be good as compared to H1.
So, we are a company which are always trying to grow. We are doing new molecules. So, that's one of the factors that some of the initiatives that we take, start giving results towards the end of the year. So that's one of the factors. The second factor usually is that our lithium business generally does well in the last quarter where, there are some tax benefits to customers or users of the machines. So generally our customers have a higher demand there. And we also expect, exports to be a little bit higher in second half of the year normally, both agro and the pharma segment. So that's the reason why our Q4 is usually higher. And the same thing is also there for our pharma customers who are in the international market, where they also see higher demand in Q4. So consequently, we also have slightly higher demand. And there's a very detailed statement in our investor presentation on our website, which explains the seasonality.
Also now, let's talk about your battery material, wherein all the investors are, more, focused on, considering the growth prospects that you have on that segment. You are doing a greenfield project when it comes to your battery material. So can you just give us the key details of that project?
Sure. So actually, we have two parts of the project. One is actually a brownfield. In our existing lithium plant, we have converted and we have set up in our Dahej SEZ unit capacity which can start lithium carbonate, which comes from the mine, do the purification, make the intermediate, and make the final electrolyte salt, and do the final formulation, which will directly go to batteries. So we start from something which comes out of mine and then take it to very high purity level, which will be ready to go to the batteries. So the phase one of this is in our existing unit, which is brownfield. And like the first commercial plant of this, like basically has started coming online stage by stage. Part of the electrolyte salt capacity is already online. We also made some initial trial production sales for customer approvals. And the final electrolyte also, the trial production for the rest also has started.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different.
Hello and welcome. You're watching Small and Mid Cap Show. I am Mahima Vachtrajani. Let's take a quick check on how the markets are panning out to be. Well, the Nifty is off from its day's high. It did start with a live high, but currently 102 points away from its day's highs, trading within a range of 180 points. Right now, it's down around 0.25%. In terms of Nifty contributors, which are weighing up the Nifty and weighing down the Nifty, if you can pull up the Nifty contributors, something that's weighing down the Nifty right now is RIL, HDFC Bank, L&T and Bharti Airtel. And something that's weighing up is Bajaj Finance on the back of the news that came out. Coal India, ONGC and Bajaj Finserv. Let's take a quick check on what Sensex is doing. Sensex also did open with a record high, trading within a wide range of around 720 odd points. Currently, Sensex is also off from its day's high and down around 0.4%. So both the benchmarks have paired their gains for the day. In terms of broader markets, the Nifty Midcap 150 has been doing, has also not been doing very well at present. It's been down around 0.04%, and this is a sharp dip in the past 15 to 10 minutes that you're seeing. In terms of small cap also, if you can pull up the Nifty small cap 250, it's down around 0.1%. So all of the benchmarks in broader market indices have come down in the past 10 to 15 minutes. Let's take a quick check on how the sectors are doing. Something that's doing well today is Nifty Metals and Nifty Pharma. Nifty PSE is also doing very well. Let's pull up what are the constituents on Nifty Metal. Something like Hindustan Zinc is up around 5%. There is SAIL up around 2%, NMDC which is up around 2%. In terms of pharma, there is Torrent Pharma which is doing very well, Natco Pharma which is doing very well, Lupin also doing very well. And something that's putting the sectors in pressure today is Nifty IT and Nifty Media. If you can pull up the Nifty IT contributors, well, Coforge is something that's really pulling down the Nifty today. There you go, almost 9% down in trade. In terms of Nifty Media, if you can pull up the contributors on Nifty Media, something that's pulling down in Nifty Media today are Network 18, PVR Inox and TV 18. But one stock that is in focus on the back of Q4 earnings is Blue Star. Good set of numbers, but to break down those numbers for us, we have Mr. Veer S. Advani, Vice Chairman and MD of Blue Star, who joins us now. Welcome to the show, sir.
Thank you. Good morning.
Yeah. So, Mr. Advani, my first question to you is good set of numbers. You know, just give us some color as to how the quarter has gone by and how FY24 has shaped up for you.
Thank you. So I think we had a great year. We closed the year with revenue of 9,685 crores and EBITDA improved to 665 crores, including an EBITDA margin improvement from 6.2% to 6.9%. I think that was, and the great thing about the year, in my opinion, is that it has been, performance has come evenly from both our B2B businesses and our B2C business. If you look at segment one, which is our B2B businesses, they did about 4,700 crores of revenue with about 341 crores of EBIT. They improved the EBIT margin from 6.9% to 7.2%. Whereas the B2C businesses, which is segment two, did about 4,600 crores with about 360 crores of EBIT. We were able to maintain the EBIT margin in segment two in spite of the competitive intensity increasing substantially. So it was a evenly weighed improvement overall, both in top line and in bottom line.
Understood. And what do you attribute this growth to? Was it because of volumes or price hikes?
So no, we haven't been able to achieve any price hikes. I think the good thing in Q4 was that there was no erosion in prices operating in the market. I think that was also on the back of everyone thought would be a good, strong summer. So I'd say pricing has been maintained. Our margins have improved because of a very focused total cost management program that we have running across all our product businesses, as well as, of course, scale. We are at a top line, we're able to drive about 21% growth. So certainly scale effect has helped us.
Understood. And in terms of margins, they've remained in the range of that 7% mark. I want to understand that going forward, is there a scope of improvement that you're seeing? And if yes, what kind of levers will augment that growth?
Sure. So I think that we're getting to a reasonable EBIT margin right now. I think that there is some room for improvement, probably a little bit more in segment one, where we have some more flexibility because of our operating position there. So I think segment one EBIT should improve by another 100 basis points as we look forward. Segment two, we're indicating about 8 to 8.5% EBIT is realistic. I think that, all the capacity that is coming online. Of course, demand is growing, no doubt, for room air conditioners and refrigeration products, but capacity is obviously coming online much faster. So there will be competitive pressures. We're confident of maintaining this 8 to 8.5% looking forward.
Okay. And, in terms of your order book, which is at present, approximately 5,600 crores, if you can give me the breakup as to, how much, from which segment is this order from, the entire book, and, what are the execution timelines for the entire 5,600 crore order book?
Sure. So, the order book, I don't have the breakup by segment, but I can give you sort of indicatively what has happened. While we've grown the order book about 12% to 5,700 crores, there's a big shift in the mix in this order book. So earlier you used to see a very heavy content of commercial buildings, which is developer business in here. We have actually reduced our exposure in that segment, partially because we've been focused on other segments, and the commercial real estate market has been slow for the last 2 years. Most developers have been focused on residential, which is a segment that we don't address from our projects business. Most of the growth and the transition in the order book is on account of factories and data centers. We've seen tremendous growth there, as well as, of course, selectively in infrastructure. In infrastructure, we've seen some good order inflow in water and railways. Metro projects continue to be finalized. So it's a mix of, but really the real growth has come from our focus on data centers and all kinds of factories, including semiconductor plants and electronics manufacturing, many of which we booked in the last 6 months.
Understood. And Mr. Advani, in terms of your cash on books, it is doubled as compared to FY23. So, as far as I understand that you had raised 1,000 crore QIP, a lot of it is from the QIP that you've raised. But, I just want to understand that this doubling of cash in your books, what are you going to utilize it for?
Sure. So you recall when we had raised the QIP funds, 1,000 crores around September, we had mentioned that the real focus for us is CapEx. We had CapEx in manufacturing, in R&D, in digitalization. These were the three major areas. Of course, growth required working capital, but we were confident about managing that through internal accruals. We're executing our CapEx plan. This is the third year of our CapEx cycle. I think we have another 2.5 years to go. We were able to deploy a fair amount of CapEx into both manufacturing and R&D in FY24. But yet, cash flow has been very strong. I think March was an all-time high collection for us as a company. So the teams have been working exceedingly well at managing working capital. So this swing from a net debt of 200 crores to a net cash position of 400 crores, a swing of 600, of course, is because of the QIP, offset partially by the CapEx we've invested, but then, brought back up because of the working capital efficiency. So going forward, as a company, we do intend to keep some amount of cash on the books from a resilience point of view. 200 to 300 crores of cash is what we expect on the books. We have an ongoing CapEx plan. We should spend another 400 to 500 crores of CapEx in FY25, but internal accruals are now starting to kick in as operating margins improve. So you should see a cash balance of 300 to 400 crores going forward in spite of the CapEx cycle continuing.
Got it. And, in terms of your capacity utilizations, as per your last con call, they were around 80%, right? But, because of the heat wave coming in, I'm sure you have a lot of orders kicking in. So I just want to understand that, at 80% capacity utilizations, do you see any kind of capacity constraints when it comes to fulfilling these orders?
Yeah, so we are operating at a high utilization. We have been timing our CapEx to the market. You know that we have a modular approach to CapEx, which means that for us to, if I talk about room air conditioners, for us to bring on 500,000 units of capacity is relatively quick and simple because we've built all the surrounding infrastructure for it. So I don't think we see any challenge with capacity. Of course, in the current summer season, demand has been unprecedented. You've been seeing the results of us and our competitors. April has been another great month. I think industry, the great thing about the industry this year is that tertiary and secondary sales have been very strong in March and April as well. So this is not just inventory, piling up in the field. This is actually consumers coming to retail stores and lifting material. So there is some shortage of SKUs in some markets in the industry, and both for Blue Star as well. But because we are all in-house manufacturing right now, we have a great opportunity and position to be able to deliver and change our capacity execution fairly simply. So some of these stockouts that we're seeing at the end of April, early May, should be sorted out as early as the next 10 to 15 days.
Okay, well, Mr. Advani, with that, we're completely out of time. Thank you so much for taking out time and speaking with us at NDTV Profit.
Thank you. Thanks so much.
Well, it's time to slip into a short break, but on the other side, we have the management of REC joining in. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and
Good morning, welcome. You're watching NDTV Profit. I'm Harsh Saitak. Quick check on where REC is doing in trade today, but we have the management of REC. The stock has been on a tear at least over the last 5 days. Stock is up 22%. And over the last 1 year, it's up 4x. Over the last 2 years, the stock is up nearly 5.5 plus x. So it's been a multi-bagger of sorts across time periods, and it's been a very solid performance from Q4 as well from REC. To give us more perspective as well as to understand what we can expect going forward, we have with us Mr. Vivek Kumar Devangan, who is the Chairman and Managing Director at REC Limited. Firstly, welcome and pleasure having you here, sir.
Thank you, Harsh.
So again, first off, congratulations on a very strong quarter yet again. You've beaten what street estimates had really pegged with regard to your Q4 numbers. I want to focus in on that, especially with regard to recoveries, because that's the real number which has given you a leg up in terms of what estimates were versus what you delivered. Talk to us about the write-backs as well as the recoveries which are coming through with regard to FY24 and what one can expect for FY25 with regard to this number.
FY24, we got recoveries of to the tune of about 750 crore. And going forward for FY25, as we are planning to resolve all the stressed assets, we are expecting write back to the tune of about 1,500 to 2,000 crore.
Understood. Right back of 1500 to 2000 crore. This is net of any loan losses which you will incur as part of this recovery process, is what I assume.
Yeah, that's true, because some of the assets are heading towards liquidation. For that, we already made 100% provisioning, and some of the assets, the operating asset for which we have made provisioning about 70%, we are likely to get very good returns from that, because our haircut has been limited only about 20 to 30%, and we are expecting better resolution because KSK, Mahanadi, Sinnar, Nasik plant, Hiranmaye, they are going to give us better returns.
Understood. For viewer context, 14,000 crore is the profit after tax for FY24. You're expecting 15% of that number just in terms of recoveries for FY25. I want to try and bring in context with regard to growth as well, because you were expecting to double your balance sheet in the next 4 years. How confident are you of that number?
We are quite confident actually. In 22-23, we started with a loan book of 3,85,000. At the end of 22-23, it rose to about 4,35,000. And in FY24, our loan book has increased to 5,09,000 crore. So there has been a growth of 13% into 22-23, and FY24 we saw growth of 17%. We are expecting this growth trajectory will be able to maintain, and 15 to 20% growth every year we are expecting. That's why we are targeting to double our asset under management to about 10 lakh crore by the year 2030. But if this growth trajectory of 17% continues, then perhaps we may achieve this asset under management of 10 lakh crore by the year 2029 itself.
Okay, so before I go to 2028 or 29 FY, which is roughly the trajectory which you're currently taking with regard to doubling loan book, I want to first talk about the levers with which will probably help you get there. You're getting into infra financing. You are getting into financing of renewable energy, both on the individual side as well, rooftop solar and the like, as well as renewable financing in terms of renewable energy financing in terms of the industry and the scale which the industry requires in terms of financing. What are these levers like in terms of growth? How will the book shape up with regard to these 2-3 new levers, as you would call it?
Let me tell you that our renewable energy portfolio is at around 35,000 crore. We are expecting a tenfold increase in our renewable energy portfolio to say about 3 lakh crore by the end of 2030. With regard to non-power infrastructure logistics, our loan book is about 50,000 crore, and we are anticipating that it will see fourfold growth by the year 2030. Will reach about 2 lakh crore by the end of 2030 for the non-power infrastructure logistics. Plus one more additional component has been added, that Central Electricity Authority and Ministry of Power have worked out the base load requirement for the country, and country will still require coal-based thermal power plant to the tune of about 94 gigawatt capacity by the year 2032. That will also give us additional lever for increasing our loan book.
Understood. So just the rough math that I'm doing, basis what you've just suggested, just these two new verticals will probably add roughly 4 lakh crore to your current balance sheet. So are you expecting prepayments, repayments to therefore in some form dampen growth on the thermal side of things, or you're expecting thermal also the demand to be quite robust? So probably a 10 lakh crore plus kind of a number by FY28.
Yeah, that's what we are expecting, that we are targeting 10 lakh crore by the year 2030 actually, but it appears to me that we'll be able to reach this 10 lakh crore before by 2029 itself, 28-29 itself we might achieve this, because renewable energy portfolio is really going forward, because last year we have sanctioned about 1,36,516 crore. That was a jump of 533% as compared to FY23, that was only 21,554 crore. Similarly, coal-based generation capacity, because within 8 years this additional capacity has to come. So therefore, the sanctions and approval will have to be done next 2 to 3 years.
For that also, our sanctions loan book for coal-based thermal power plant will also increase.
Got it, sir. And sir, with regard to margins, therefore, you earlier had a guidance band of 3.3 to 3.5%. You've upped that to 3.6 now. You feel comfortable with this number is what you seem to suggest. Sir, tell us, is this something like a medium-term target or guidance, 3.6% margin and sustainability of that?
Yeah, we have made constant efforts to reduce our cost of funding. Our cost of funding has gone down by 15 BPS from 7.28 to 7.13%. We are making a judicious mix of our borrowing, particularly external commercial borrowing with innovative hedging techniques has helped us to bring down the cost of external commercial borrowing to say at around 6.6, 6.7%. And that's why we are targeting to bring down our cost of funding to say about 7%. And we hope to hold on to this net interest margin of about 3.55 to 3.6%. And our spread is also improving. Last year, our spread has improved by 41 BPS from 2.45% to 2.86%.
And this is despite all the prepayments you've seen in FY24. Do you see that prepayment trend kind of continue into FY25? And you holding on to surplus liquidity, yet you've done this kind of margin. So I want to try and understand whether prepayments are expected to continue. You see that trend continuing, and despite that, margins will hold. So therefore, would you therefore expect some margin upside from here?
Yes, actually, the very nature of renewable energy, you have to see the business actually. The turnaround time of renewable energy projects are very fast. It gets commissioned, solar and wind projects get commissioned for a period of 2 to 3 years. The developers wants to exit and they want to invest their equity in some other project. So there is likelihood of prepayment for this commissioned renewable energy projects actually. The prepayment which are going to happen, we are going to meet through the large scale volume of sanction that is happening actually. My loan book for the project pipeline for the current financial year, for example, is quite strong actually. For renewable energy projects, I have a pipeline of about 1.75 lakh crore projects are already there. Then conventional generation, transmission and distribution, we have huge pipeline projects. This year we are targeting total sanction of about 4 lakh crore. But since these projects get commissioned over a period of 5 to 6 years, the disbursement will keep happening over a period of 5 to 6 years.
Understood. And sir, just with regard to, I'll try to switch focus here. With regard to net NPAs, you're guided for bringing it down to 0%. I want to understand what is the impact of that on your P&L that one can expect in FY25?
Yeah, our gross NPA is about 13,800 crore. And those assets which are heading towards liquidation, they are about 2,222 crore, for which we have made 100% provisioning. Remaining assets, we are expecting a good resolution. And since we have made provisioning of 70%, we are expecting that we'll get write-backs to the tune of about 30 to 40%. In some cases, it may go up to 50% also. The total write-backs would be say around 1,500 to 2,000 crore. That will add to our P&L account.
Understood. Got it. And this is so you will have a positive number of 1,600 to 2,000, and you'll have a net NPA of 0 at the end of FY25. Is that how your P&L will shape up?
Yes, that's what.
Okay, understood. So a net write-back of 1,500 to 2,000 crore is what you're anticipating.
True.
Okay, understood. And sir, just with regard to last off, what this does to your profit after tax, maybe not in FY25 because there will be these write-backs and these one-offs, but in terms of overall credit costs as well as profit after tax growth, you've done 13% on your top line over the last 5 years. I've pulled out the numbers, but you've done 20% on your bottom line. That's because of OPEX. Your OPEX has been extremely controlled, extremely muted in terms of its growth.
Sure.
I want to try and understand at 17% AUM growth all the way to FY28 or FY30 while you're doubling, how will your profit after tax move? Will it be 25%? Is that how the math will work? Because as you scale, that advantage will come to you.
You're rightly analyzed actually. Our asset under management will grow around 17 to 20% actually over the next 3 to 4 years. And our profit after tax is bound to increase to say about 23, 24, more than 23, 24%.
Understood. And so last off with regard to dividend yield, you will continue the 30% dividend yield policy regardless, and would you require any extra capital while you are growing, because you're a high cash flow or rather high profit business, and therefore capital adequacy will remain healthy despite you not raising capital, or will you require a capital raise? So dividend and capital raise.
Yeah, our dividends, since we are a government company, we have to follow DIPAM guideline. So 5% of the net worth or 30% of the profit after tax, whichever is higher, we are bound to give that dividend. That trend will be on the upward swing only. With regard to capital adequacy ratio, because a lot of projects which we are approving in distribution segment and that are supported by government guarantees actually. So we'll be able to keep the capital adequacy ratio of more than 25%.
And no capital is required.
Yeah, no equity infusion would be required.
So no equity dilution either. Okay, thank you so much, sir. It's been a pleasure speaking with you, getting all of that perspective on REC. Extremely interesting play. Super bullish with regard to the way in which this is moving, at least street analysts, and the way they're looking at how REC is shaping up. So many congratulations. Wishing you all the very best for FY25.
Okay, thank you so much.
Right, REC, that one in focus on the back of earnings. We've had this understanding and guidance coming in from management with regard to a plethora of factors, and it's been extremely insightful. Thanks so much for watching. Completely out of time on this one. Stay tuned to NDTV Profit for more.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Good morning and thanks so much for joining in. You're watching NDTV Profit and this is Ask Profit. My name is Alex Matthew. Let's take you through what's happening with the markets before we get to the queries that you have for us. And you've seen quite a bit of a drop in the last hour or so of trade, and you can see that a falling pattern on the screen intraday, of course, and you see the high point of the day early on in the session where you hit fresh life highs for the benchmark Nifty 50. At this juncture, we're trading at very close to the low point of the day, about 0.5% lower. In fact, let's also pull up the broader market gauges and you see that those two are also down about 0.33% at this point. You have the mid-cap index on the screen right now, but you also have the small-cap index that's losing about 0.33% or so. And so, understandably, the market breadth is tilted in favor of the declines at this juncture. In fact, let's look at some of the key contributors on the Nifty 50. And you will notice that a couple of the big names are pulling the benchmark lower. Right on the top of the declines, you see Reliance Industries as well as HDFC Bank that are contributing to most of the declines at this point. You also have Larsen & Toubro and TCS that are underperforming. At one point, you had the Bajaj twins that were doing particularly well in trade today. Bajaj Finance as well as Bajaj Finserv. Bajaj Finance, in fact, gaining at one point close to 7%, but it's now up just about 2.5% or 2.7%. In fact, let's pull up that intraday chart and see where it's currently trading. 2.7% or thereabouts is where Bajaj Finance is. And let's talk about that stock in more detail. But before we do, I want to go across to the technical expert that we have today. Rajat Bose, independent research analyst, is joining me on the show. Rajat, what do you make of this recent drop? Recent, I say, and by recent, I'm talking about the last hour or so. We've seen quite a precipitous fall. What do you make of the change in the market breadth?
Well, what I would say is that, in my reckoning, 22,734 was the projected Fibonacci resistance levels. And we have seen that today, as well as two trading sessions back, we have seen 783 high and today 794 high, 22,794, I mean. So these two highs are only 10 points from each other. And unless you take out 22,734. That day also it couldn't, and today also it couldn't. So it is showing weakness. But one heartening thing is that now it has come very close to 20-day moving average as well as the 9-day moving average, which is 9-day is at 22,507 and 20-day moving average is at 22,455. So this 50-point range is actually a very crucial support zone. Unless it is taken out on the downside, the Nifty in late session might again show a surge. But whether it would cross, if you ask me if it would cross the 22,794, I have doubts, because this is a very critical resistance level. It is unlikely to be taken out in this manner. It has to be, it would start from below and then during the day 22,800 is taken out, then only we could have said that yes, this could be a real breakout. And other thing is that there was a huge support from Bank Nifty on earlier occasions, but today already it has come down by 350 points. Even the Nifty Junior, that is also 305 points down. So there is some amount of profit taking and people are a bit apprehensive. So while I do not expect it to fall below 22,450, at the same time, I don't even expect it to go beyond 22,800.
Okay, fair point. 22,800 is what you should watch out for in terms of levels. Of course, the Nifty 50 trading just above that 22,500 mark at this point, and again at the low point of the day. Let's talk about Bajaj Finance, because this is, according to me, one of the stocks of the day, despite the fact that is currently now significantly off the high point of the day, now up about 2.75% or thereabouts. Harsh is joining in to tell you about the implications of the regulatory update that we saw earlier today. The notification, of course, is that those consumer loans that were stopped, Harsh, are now restarted. What are the implications?
The implication, Alex, and we've been saying this since the morning, is not massive. In terms of AUM growth, what we are hearing from analysts as well as Citi putting out its note is that the growth number will just go to the upper band of the guidance. So 26 to 28% was the guidance. The fact that this has come in at the front end of the financial year will mean that growth will be more even through the year, and therefore you will get a slightly higher growth number, just about 2% for this year. So maybe a 28% kind of a number AUM wise. But really the significant positive here is the fact that Bajaj Finance has been able to resolve these RBI issues in a span of 5 months. When I'm looking at all past precedents, HDFC Bank, Paytm may be an outlier, but HDFC Bank, Diners Club, MasterCard, they've all taken anything between 6 to maybe even 15 months to resolve their issues with the regulator. This 5-month kind of a shrunk timeline is a first off, and that is the key positive. Of course, the other one being the sentiment positive on Bajaj Finance. The stock had taken a bit of a beating as well, probably the sentiment turning positive. So those two possibly the key factors here. In terms of impact on your PNL, the Q4 numbers, profit before tax was impacted by 4% as a result of this particular embargo.
All right.
So maybe that will expand by 4% for the first 2 or 3 quarters, which may not have been anticipated by analysts.
Fair point. All right, Harsh, thanks so much for breaking that down for us. In fact, we've also got Ashish Kapoor, Chief Executive Officer of Invest Shop, joining in. Ashish, quick view on Bajaj Finance. What did you make of it? Of course, it's off the high point of the day today. Ashish, if you can hear me, what do you make of Bajaj Finance? It's off the high point of the day, but significant development? Okay, we seem to be having a bit of an issue with Ashish Kapoor's line, and we will go back to him as and when we get to fix that. In the meanwhile, let me take a few questions that have come through, and we've got the first one coming in from Shabir, and he's asking about Adani Green, which he is wondering whether to get into at the current level for short or medium term. I'll come to you, Rajat, on the charts. What do you make of it?
Regarding Adani Green, I would say that it is actually showing a bit of a distribution pattern. When I say distribution pattern, that means there had been a rise earlier, say last year, last 2 months, it showed a rally from a lower levels of around, say, 1,000 rupees. From there had been a phenomenal rally. But now the moving averages are all moving down except the 200-day exponential moving average, which is currently below 1,600, say it is at 1,533. So either you would see a sideways kind of a movement where it will oscillate between 1,700 and 1,850, or if it were to fall below 1,700, then it can even test the 1,600 mark, because 1,600 mark to about 1,533, the 200 exponential moving average level, would act as a major support area. However, for long-term investors, I don't see any cause for real concern.
All right. Ashish, if you can hear me, we were trying to get a quick view on Bajaj Finance. It was the focus of the conversation at the start of the show. What do you make of it? Would you suggest a fresh entry at this point?
No, I don't think so. I think there is a significant change in the business environment when it comes to Bajaj Finance. Earlier, they were the clear leaders and they were able to maintain their margins, maintain their volume growth, maintain their dominant presence quite easily. They are being challenged, and the main issue is the very grandiose plans made by Geo Financial. And given the kind of financial muscle and the kind of execution background they are coming from, that does raise a lot of concern, and that is a very serious concern. And considering that the valuation of Bajaj Finance is very high, I don't think you're going to get any movement here. At best, it could be sideways for some more time, and difficult to guess for how much more time. So frankly speaking, I think yes, it's a great stock. If you bought it at lower levels over the years, keep holding on. don't exit, but I don't think it's a good idea to enter at this stage.
All right. I forgot to mention, we spoke about Adani Green just a short while back. A standard disclaimer here, this is NDTV Profit, part of the NDTV Group, which is owned by the Adani Group. The next company that we're talking about is Lloyd's Engineering Works. This is a question coming from Nagaraj, and he's writing it from Bengaluru. Rajat, this is based on the charts. He's holding 2,000. I'm not too sure about the buy price. It's down about 7% or thereabouts. It appears a little iffy. So he's talking about acquiring it at 2 rupees. I do not see when the stock hit this level. What would you say about the charts right now?
It is actually on an uptrend, and it is continuously moving up for several months. I would say it has begun its journey much earlier. Throughout the last year and also this year, this is going up. And again, it has posted a new high. I would say that on dips, one should buy. And I would prefer to buy this, say, between 55 and 60. This stock is going to go places, in my view, because this kind of a sustained uptrend means that there is definitely positive fundamentals that are going to emerge from this. So one can continue as well as buy on dips. Any fresh entrant can buy at current levels, even on dips, and put a stop loss below the 200 exponential moving average, which is at 45. But I would say that put your stop loss at 43.
43, all right. It's a stock that seems, Rajat seems to have high conviction on. Ganesh Prasad is asking the next question. Patel Engineering is a counter that he wants to focus on. Ashish, any coverage on this one?
No, I haven't tracked it for a while, so I don't.
All right, fair point. Rajat, any view on Patel Engineering? He's not specified what time frame he is talking about, so maybe give us a generic view.
Patel Engineering, grapevine has it that it is turning around, but I would say that if somebody is planning to buy into this stock, should keep a stop loss below 45 again. And it needs to take out the range between 70 and 80 because lots of supply are likely to come. Unless you are very keen on buying this at these levels, you better wait for, say, levels around 49, 48. Those kind of levels would be much better. Because this stock, if it were to fall below the 200-day moving average now, it can go sharply down. That's the problem that I see on the chart.
All right. Allied Digital is the next counter that we're focusing on, and it's currently trading at 144 thereabouts. And this is a question coming from Satya. He's asking what the specific view on the basis of fundamentals is on this particular counter, and if not, in the space that it plays in. Ashish, what's the view?
Again, I haven't really tracked it, but if the question is on the digital space, yes, one is very bullish, of course, and I think the entire AI and IoT and all will do very well. There are plenty of ways of playing it. One can play it through one of the listed companies, and I think in that you have a number of options, including data and analytic companies and many other ways. But in particular, Allied Digital, I haven't tracked.
Okay. If you were to enter into this, if that is your recommendation, Rajat, what level should you watch out for?
Now the 200-day exponential moving average is around the current levels, very close to the current levels. It is around 137 and currently it is at 145. So you can enter because this stock has a tendency to move up sharply and then it comes back, it comes down over a period of 2 to 3 months. That phase is already over. And there are certain signals on the chart that it might actually move up. So put a stop loss below, say, 130 and go long. Once it crosses 160, you can add more.
All right, fair point. That's a view on Allied Digital. We have to slip into a very quick break. We've got more on the other side, so do stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai. Brought to you by State Bank of India, the banker to every Indian.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Welcome back. You're watching Ask Profit on NDTV Profit. I was looking at the screen and in fact the Nifty 50 is trading below the 22,500 mark. Remember, the high point of the day was very close to that 22,800 mark. So it's quite a precipitous fall from the high point. And also at the bottom of your screen, you'll see an update. Shriram Properties has acquired a 4-acre land parcel in Bengaluru. And the stock is up and about on account of that, I would think, because it has gained from the low point of the day. Let's take the next question. It's on Bandhan Bank, and in fact we've got a Benami question, if I can call it that. I would encourage you to tell us your name and where you're tuning in from, because that helps us identify you. This particular question is I would think a short-term question, because the buy price is 477, holding from 2020, and asking whether in the short term it has any possibility of crossing 250. Rajat, on the charts, what levels would you watch out for?
So it is Bandhan Bank, right?
That's right.
See, Bandhan Bank is currently around, say, 188, if I'm not mistaken. And Bandhan Bank is not showing any major recovery signs. For that to happen, it needs to take out 215, 220 level, because the 200 exponential moving average, which is moving down in a gradual manner, and other moving averages, except for short-term moving averages, they have turned around, and probably there would be a minor bounce, but one should not be expecting much of it, and one should use a very close stop loss if one is getting into this.
Fair point. Next question is from Nalini. Nalini is writing in from Patiala and asking about Biocon, whether it can be bought for the next 2 years. Ashish, what's the view on this one?
See, Biocon seems to be doing well after a long time. I think this is a stock where you could bet for the near term. And I think, yes, it's a good idea to buy at the current level. So it has moved up a bit, but I think still it seems to be pretty good to enter. And this could possibly be kind of a short term. No, I don't agree with the long term view. We've really not been able to create capital over the years. But yeah, for the near term, it looks to be a good, bet. You can say a short term investment or a trading bet. From here, maybe another 10-15% upside. Looks quite possible in the next couple of months.
Absolutely, and it's something that has gained quite significantly over the last 6 months or so. Let's talk about Ramesh's question. He's writing in from Chennai. He's holding Ratan Power. He's asking whether it's a good stock to hold from the long term, perspective. Ashish, any view on this one?
No, again, I haven't tracked this.
Okay, Ratan Power. Ratan, Ratan India is what we're looking at, Rajat. And it is currently trading. Let's pull up the chart.
Repeat the script name.
Yes, we're talking about Ratan India. And it's currently trading, or Ratan India Power, it's currently trading below the 10 rupee mark. So effectively a penny stock.
I'm unable to give any suggestion because I don't track and I can't even find it right now.
That's fair. Well, would you very quickly give any advice on such trading bets, on such holdings? They don't always pay off, Rajat.
See, I would say that one should, basically this kind of stocks, these are penny stocks, and you don't know how the management is, how and what is their return on capital. This kind of, if you get into this kind of stocks, sometimes they give very fast shooting up kind of movements and you make money. But my experience over the last 30 years has been that if you get into this kind of a stock, out of 20, one will become a multi-bagger, 2 will give you some money, and 17 will actually disappoint you in a big way. So why get into this kind of stocks?
Yeah, and the 17 that disappoint, unfortunately, if a stock is trading at 9 rupees and if it loses 2 rupees or 3 rupees or even 5 rupees, you've lost half of the value. Let's talk about the next one, Maharashtra Seamless. We've got a question from Rajiv asking about the fundamental view on this one. Ashish, do you have a view on this one?
Yeah, I think this is a good stock. It has historically done very well for investors, and I don't see any reason why that should change. I think this is a stock where you could look for buying opportunities on the way down, and I think that should give you good returns coming in the near future also.
All right. Ashoka Buildcon is the next counter that we're talking about. Rakesh has got this question. Borrowed levels of 161. Can it be held for the long term? He hasn't specified whether this is fundamental query. So, Rajat, I'm going to go across to you on this one. Ashoka Buildcon, would you suggest holding on?
One can continue to hold on. That's not a problem because it has been rising and now it is into a sideways movement. And till such time it falls below, say, 145 or so, I don't think there would be a major problem. And currently it is at 173, but at these price, you don't buy it. You should be considering buying it between, say, 155 and 145 and put a stop loss below 140. That's fine. And only when it crosses 190 decisively, you will see the uptrend resuming. Currently, it is in a sideways trading, volatile kind of situation.
Okay. Gentlemen, last couple of minutes, so if we can run through quite a few of these queries quickly, maybe keep your answers short. Delivery is the next counter. Parth wants to know from the perspective of 1 to 2 years. Ashish, Ashish, what's the view?
I would think avoid. I think it's moved up also and valuation is quite high.
Okay, the next counter is, well, hasn't named, Popular Vehicles. Okay, for the short term, I don't think you have enough, Rajat, on the data front, but would you suggest a fresh entry or holding on, Ashish, if you're holding on to this one?
Me? Or
yes,
Rajat?
Ashish, you.
Yeah, okay. Popular, again, you're right. It's a company is doing very well, has a very good hold in South Indian market on the sale of cars, especially Maruti. The stock is good. Again, valuation can be a bit of concern, but if you buy solely on declines, I think that should be a good idea, and you should make money in the future.
Okay, Alembic Limited is the next counter that we're talking about. And Rajat, this one's for you. I'm trying to pull up the chart. It's currently trading at 92 or thereabouts. And in fact, Vinod from Chennai is asking about the 6-month time frame. Should it be held on to?
One can hold on to it unless it falls below 87. Below 87, it would go below the 200 exponential moving average. The maximum stretchable stop loss would be 82. But as of now, I think the uptrend is already through and there was a pullback. The pullback could not take it to the highs of 104 or so. So if I were in the investor situation, I would have got out of it. And if I were to buy new, no, I am not buying right now. I would wait for lower level.
Paul Selvaraj is asking about South Indian Bank and whether this is the right time to buy. Ashish, I'm sure there are many good options in the banking space. Is this one of them?
It can be one of them. I mean, it's much smaller than many other banks, and I would say that depends again on what kind of investor you are. If you're looking at something which is a bit of a risk, bit of a long-term hold, but potentially could be giving you much better returns, then SIB is not a bad option. Otherwise, of course, the time-tested ones, your Axis and ICICIs and the other ones are of course always there. In the mid cap space, there's also a Federal Bank and there's IDFC First, which I quite like.
Yeah.
But I think South Indian Bank could be a good option for somebody looking for a return more than normal with some kind of a risk and longer term holding pattern.
Okay, quick view on Zomato. Srivardhan Reddy is asking about this. Buy, sell or hold. So I would assume that this is a trading call. Rajat, what's the view?
First of all, there is a disclosure from my side that I personally hold Zomato in my long-term portfolio. At the moment, the uptrend is continuing and both the 9 and 20-day moving averages are also going up and they are supporting this upswing. So you can buy in the short term, you can buy for the long term, depending on your perspective, you can trade in this. It needs to take out 203, 204 to post higher highs.
Okay, fair point. Do we have time for one more question? All right. IFCI is the counter that we're talking about. The government of India, according to my viewer, has infused money into this particular counter. I am not aware of this. I must confess. Abhaya wants to know about this. Any view, gentlemen, on this? Ashish, I'll come to you on this one.
Well, I think this entire public sector, financial institutions, bank space has played out over a period of time now. I think too late to try and enter into one of them. One of the less tracked, less strong fundamentally stock now. I think it's too late in the rally. So I would give it an avoid.
Okay, fair point. We're completely out of time now on this particular edition of Ask Profit. Gentlemen, thank you so much for taking the time. And viewers, hopefully the conversations that we've had today has benefited you. We've got lots more lined up over the course of the day. And this is NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Brought to you by State Bank of India, the banker to every Indian.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Good afternoon and welcome. You're watching Earnings Edge on NDTV Profit. I'm Harsh Saita. We're going to straight off take you just a quick Nifty 50 check if we can. 0.7% lower on the Nifty. We're just off the day's low as we speak. Pretty much all sectors in decline. If we can pull up sectoral charts, we're just off, as I said, day's low. Just about the Nifty PSU is probably trading a bit in the green. There you go. But outside of that, you're seeing a slew of red across the board. In terms of contributors, all the major contributors on the Nifty 50 are in the red. You're seeing some traction in Coal India and Bajaj Finance on the back of their respective announcements. Coal India on results, Bajaj Finance on the restart of their BNPL portfolio to that extent. But outside of that, you look at the big ones, Reliance, L&T, HDFC Bank, all of which are pulling down on the Nifty, down around 200 odd points in terms of all negative contributors, 160 odd points in terms of the Nifty 50. But let me take it across, focus in on earnings. PR Seshadri is joining us. He's the MD and CEO at South Indian Bank, giving us perspective on Q4 numbers and what one can expect going forward. Welcome to NDTV Profit, sir.
Thank you very much for having me on the show, Harsh. Thank you very much.
Right. Mr. Seshadri, can you talk to us first off with regard to loan growth, what one can see and expect from South Indian Bank for FY25?
So last year, we grew assets approximately 11.5%. We expect the same rate of growth going forward, 11.5%, 12%, maybe early teens this year. But we want to change the mix. Growth in the last year has been largely driven by corporate, whereas as we go forward, we want to balance it and grow our MSME and retail books a little bit more. And that's the intent for this year.
Sure, I take your point. It's still below what the industry is growing at. So I want to understand what's holding you back in terms of growth.
We are at this point in time where we are sort of realigning our business. We are realigning our processes. We are ensuring that what we do is best in class as far as the industry is concerned. So there is a lot of work internally that is taking place. And whilst we do all of this, what we want to do is ensure that the growth is optimal for us. So at that level of growth, at this level of growth, we think that our cost of money can be kept significantly below the marginal cost of money for most of our peer banks. And consequently, that is the level of growth that is most optimal from a P&L point of view. And that's why we are, at the current juncture, looking at growing 12%, maybe early teens, as opposed to growing significantly faster.
Understood. Could you elaborate on the process improvement that you're doing internally? What's the work that's happening and how long will it take?
So we just launched our first completely automated journey for MSME lending. So this is a journey that enables us to provide customers who want an overdraft facility at our branches a yes or no within about half an hour. It is completely automated. It minimizes the data entry requirement at the branch level. And that's the first of the journeys that have gone live. We have about 6 other journeys that we're working on. So we intend to launch them one every quarter, which increases our efficiency at the branch level, which will help us next year to grow significantly faster than we are growing this year.
Sure, sir. Do you believe that giving up on this growth, both on deposits and advances, is a bit of a miss at a time when the industry itself is doing very well in terms of growth? Is this a missed opportunity given all the internals that y'all are focusing on at this point?
I think you have to see it in the context of the institution. I mean, the institution historically had grown slower than the market. But last year, we had significantly higher growth than we've had hitherto. So our aim is to ensure that we continue to grow, but change the mix. And that will enable us to widen our NIMs. Last quarter, we widened our NIMs by about 19 basis points. We hope that by doing all of this, we will be in a position to take this up to about 3.5 or so in the medium term. And that has a huge impact from a P&L point of view. And finally, once we've got all our processes fixed, our systems fixed, our ability to grow at the rate at which the market grows will be much higher. And once we do all of that, we want to grow faster than the market actually.
Sure. Point taken. So that will be FY26?
That's right.
Okay. Understood. With regard to margins, 3.5% probably near-term trajectory. Where do you go from there, and what's the timeline like? What's the thought?
Once we get the asset mix right, we should continue to accelerate beyond 3.5. Our medium-term, or should I say, slightly longer-term view would be that we'd like to get to 400 basis points NIM. But that's somewhere in the future. Right now, we are focusing on getting to 3.5.
And with regard to the shift in the loan mix, how will it evolve? And where do you wish to take it in terms of the mix?
Right now, we've got 40% of our book, which is corporate, and approximately 40% of the book, which is MSME and retail. So we would like to bring the MSME and retail book up to about 45%. And we would like to take the corporate book down by a touch, maybe to 38, 37, that range. And the balancing will be in agriculture and other areas. So that's what the intent is in the near term.
Sure. And when I'm looking at OPEX, it's up 20%. In this environment, that's fairly normal. The anomaly is, of course, that business isn't growing as quickly. So with regard to OPEX, therefore, you're above probably 65% now, if I'm not wrong, cost to income. Where does that go? And when does that start to taper? And when do you start to get advantage of scale?
So as you rightly said, OPEX is an area of challenge. As an institution, we recognize it and we are working towards reducing it. Our controllable expenses are actually fairly small. Roughly about a third of our expenses are what we can actually have a view on and control, which we are doing very aggressively. Right now, what we are trying to do is to grow our earnings mix in such a fashion that revenues grow faster than our expenses, and consequently, the revenue expense ratios normalize to a level that we'll be comfortable with. As you rightly mentioned, last quarter we were at about 64.5% revenue to expense, and for the year we were at about 61.5 or so. And we want to bring this down by about 1,000 basis points over a longer term, but that is a journey that we are just currently embarking on.
Understood. So roughly 3.5% NIM as early as FY25, maybe spilling over into FY26 as well. My other key takeaway from here would be to try and understand credit costs as you shift your loan mix. Where would credit costs therefore lie?
Our credit costs for the last quarter, our slippages were about 35 basis points, and not annualized for the quarter, which is amongst the lower reaches, even amongst our peer banks. We don't see that materially changing in the near term. As our asset mix changes and as we get perhaps a little bit more unsecured in our balance sheet, perhaps that will go up a touch. But right now, in the near term, we don't see that changing. Only about 5% of our balance sheet is retail unsecured. So we do have some headroom to grow, which will also help us grow our NIMs.
Understood. ROAs have also been on a bit of a decline kind of a trajectory. When do investors rather start to see a pickup there, because that will hold the other key?
True, we are at about we were 98 basis points return on assets for the last quarter. We don't expect this to increase very materially very quickly. I think this, as our NIMs widen and as revenues grow, that's when you will see some increase in ROAs. But at this point in time, we are more focused on ensuring that our processes are fixed and that we become more efficient. We think that ROA growth will come automatically as a consequence.
Understood. Thank you so much, Mr. Seshadri, for all of that insight, perspective with regard to all that's happening at South Indian Bank. Of course, that's the commentary coming in. With regard to both Q4 as well as FY25 and beyond, the growth not looking extremely impressive, but there's plenty of internal rejig that Mr. Seshadri spoke and give us context to. But completely out of time on this one. Short break, more on the other side. Stay tuned to NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarva and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Welcome to NDTV Profit. I am your host Varsha Chandanani. Neogen Chemicals is in focus today. If you see, company has posted Q4 FY24 numbers and revenues were down 2%, but we did see uptick in margins. To talk more about this, I am here joined by Dr. Hareen Kanani, who is MD of Neogen Chemicals. Welcome to the show, Mr. Kanani.
Thank you. Good morning to all.
Good morning. So talking about the numbers, prices of key raw materials like bromine and lithium, if you see, had declined significantly, but we did manage revenue, which was just down 2%. Was there uptick in volume, which balanced out things for us?
So, last year we have seen dramatic changes in the raw material prices, especially lithium, which was dramatically down. So while, you can see on quarter, our lithium sales have reduced significantly, but that's mainly just because of the price. And in terms of volume, there was a 5 to 6% increase there. And where we saw biggest increase was in our organic, where we see both volume as well as revenue growth. That the revenue growth was almost close to around 20% and the volume growth was around 25 to 30%. This was aided also by the acquisition that we did for making organolithium compounds, Bulai Chemicals. So that also was about done 3 quarters ago, and this quarter it also contributed significantly. So that also aided in increasing our organic revenue. So overall, if we speak, in terms of volume growth for the whole year also, there was almost a 30% increase, 25 to 30% increase in the organic production and around 5% increase volume growth in the lithium, overall giving us the increase in this quarter of around 20%.
Okay, so good volume growth here, and we did see
Yes.
uptick in our margins also. What were the levers for the margin uptick?
Just better volumes, and again before the percentage margins look lower because lithium was a high price which was getting passed on, and now that was not getting now that lithium prices are lower in terms of percentage, it looks slightly higher. So that's why we basically request our investors to basically focus on more absolute EBITDA as compared to percentage EBITDA when lithium is very volatile. So basically now the lithium prices are like staggered, and they are one of the close to one of the lowest prices which we've seen in recent times. So that's what gives a view that the margins have improved.
Okay. Yeah, please go ahead.
No, and the other part is the volumes growth which we had, which has improved the margins.
Okay, and also, is there any seasonality in your business? Because if I see your numbers, every time your H2 seems to be good as compared to H1.
So, we are a company which are always trying to grow. We are doing new molecules. That's one of the factors that some of the initiatives that we take, start giving results towards the end of the year. So that's one of the factors. The second factor usually is that our lithium business generally does well in the last quarter where, there are some tax benefits to customers or users of the machines. So generally our customers have a higher demand there. And we also expect, exports to be a little bit higher in second half of the year normally, both agro and the pharma segment. So that's the reason why our Q4 is usually higher. And the same thing is also there for our pharma customers who are in the international market, where they also see higher demand in Q4. So consequently, we also have slightly higher demand. And there's a very detailed statement in our investor presentation on our website, which explains the seasonality.
Also now, let's talk about your battery material, wherein all the investors are, more, focused on, considering the growth prospects that you have on that segment. You are doing a greenfield project when it comes to your battery material. So can you just give us the key details of that project?
Sure. So actually, we have two parts of the project. One is actually a brownfield. In our existing lithium plant, we have converted and we have set up in our Dahej SEZ unit capacity which can start lithium carbonate, which comes from the mine, do the purification, make the intermediate and make the final electrolyte salt, and do the final formulation, which will directly go to batteries. So we start from something which comes out of mine and then take it to very high purity level, which will be ready to go to the batteries. So the phase one of this is in our existing unit, which is brownfield. And like the first commercial plant of this, like basically has started coming online stage by stage. Part of the electrolyte salt capacity is already online. We also made some initial trial production sales for customer approvals. And the final electrolyte also, the trial production for the rest also has started. So this is starting now, which has a total revenue potential of around 200-250 crores, of which this year we feel that the salt which is targeted for the international customers will start contributing from Q2 and Q3, and the electrolyte which is targeted more for the India market, the final formulation, that will come online in Q3, Q4. So this is capacity coming now. This capacity is also further getting enhanced from 400 to 2,500 metric ton revenue by end of this year. And we already started the capex of that, and we are on target to do this. And then we have also started construction of a separate greenfield, which will be the permanent home of our Neogen Ionics subsidiary, the battery material subsidiary, where we have 65 acres of land. So the land we have there is more than all our existing 4 sites combined. And there we are coming up with electrolyte salt and electrolytes, which can support up to 30 gigawatt hour of battery production. And that is coming online in the second half of FY26. So together we will be spending around 1,500 crore capex, and both these sites together will give us a revenue potential of around 2,500 to 2,700 crores kind of revenue, which will we expect full utilization of this by FY28 or FY29. So that's the new greenfield as well as the brownfield, which is coming online.
Okay, so
and the main
please go ahead.
Main target of the salts, which is one stage before the final electrolyte, is the international market. So we are talking to OEMs, battery makers, as well as electrolyte makers, and supplying them the lithium electrolyte salt. And the formulation is basically targeted for India, to the battery makers, because electrolyte always have to be local. So we are one of the very rare companies, maybe second or third in the world, which has the capability to start from the mine and go all the way up to the final electrolyte. And also for the final electrolyte making, we also have a technology license from Mitsubishi Japan, which is world's biggest and oldest electrolyte producer for last 3 decades.
So 2,500 peak revenue in by FY28 or 29. But how much revenue are you expecting from this battery chemicals, say in FY25 and FY26?
So as I said, the capacity which has come online can already contribute to around 250 crore. So depending on the speed of the approval, we feel at least we should be getting 100 crore plus something in the current FY25. The whole 250 crore will be available for next year. So it will be at least this 250 crore plus the salt capacity increase, which we are doing from 400 to 2,500. That will be available for the whole of the next year. So it's a little bit early to say, but on top of 250 crore, there will be international salt from that additional 2,000 metric ton, which is coming online. And in the second half of the year, the greenfield is also coming online. So again, that is 10 times the capacity of what we already have. How much it will contribute in the second half, how long it will take. So those will be significant increases. But what we can clearly see today is at least 100 crores this year and 250 crores next year. That's something just from the existing capacity. And as the additional capacities come online, which are significant increase, like a 5-time increase and a 10-time increase, contribution will start coming from them also. So that maybe will guide towards the end of the year, current financial year, or beginning of the next year, depending on how this year is going.
Okay. And my last question to you is on your base business, that is your bromine business. Yes. Have you signed any new contracts? And if yes, in your base business, how much revenue are you expecting in FY25 and 26?
So last year in the base business, we did 700 crore. We expect, and like we had given a very clear guidance that by FY26, we will be reaching close to around 1,000 crores. Still our pharma segment has increased and our agro is not yet fully recovered. So we don't know exactly how much contribution will come from there. So this year we are targeting about close to around 775, 800 crores. But for the next year, we are targeting 1,000 crores just from the base business. And in terms of contracts, yeah, I mean, we've not signed new long-term supply contracts, but we have onboarded some of the customers where we have started early stage evaluation. And we also have some customers in the agro space with whom we have already doing this for last 2 years. It's just that the demand is not there. So I think as the demand in agro picks up, we think this will start contributing to reach our 1,000 crore. But any which case, like, for 1,000 crores, we also made like plan B, plan C, where we started working with flavors and fragrance, and we started working on molecules using the organolithium facility that we acquired. So in any case, like we have several plans in place so that by FY26, in the base business, we can reach 1,000 crores revenue at full utilization level. So that will improve significantly our profitability as well as our cash flows. So by the time battery is ready to take off, the base business is very strong and stable. And to be able to support the growth in the battery business for FY27-28.
Well, my last question before I let you go, your receivable days and inventory days are, under pressure. So anything on that?
So mostly for the inventory, it's just that, before in the beginning of the year, we had some plans to have full utilization of our organic facilities. But because of the pharma and agro slowdown, we had to modify that. And some of the molecules we had to shift from molecule one to another molecule. So because of the industry turmoil, our inventories were higher. And our agro business is mostly international, as well as like overall in Europe, also in pharma, also there was lesser demand. So less revenue came from like exports. So normally our exports are 50%, where we have lower receivable days. As against that, more revenue came from generic pharma business, where the receivable days are higher. So because of that, overall receivable days are higher. But I think as basically our business stabilizes, we do the course correction in current and next year, and also as agro and our exports recover, we feel again they will be back to what we have targeted earlier. Our target is again to have around 110, 120 days of inventory, between 60 to 90 days of debtors, and like maybe creditors also of the same level, to the same proportion. And we hope by FY26 we can basically reach that.
Okay, all right. Thank you so much, Mr. Kanani, for speaking with us, and I wish you all the best for your business.
Thank you so much. Yeah.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
welcome. You're watching NDTV Profit, and we have with us a very special guest joining in to talk about a recent big order win. It's none other than Amit Chadha, CEO and Managing Director of LTTS. Thank you, Amit. Thanks for joining us on the show. And this, of course, is after your earnings, where we're talking to you. It's been a big order win for LTTS. You want to talk to us about the size of this order, the partnership that you've entered into with an auto major?
Sure. So thank you so much for having me. This is a $50 million program that over a 5-year period that we have won with Forvia. Forvia, of course, is a market leader in the tier 1 space in clean mobility. This particular program allows us to go deeper into clean mobility solutions around hydrogen technologies, stacking technologies, etc. This is, if I look at the hybridization, electrification field, about a third of the revenues that we deliver in mobility for the company, and mobility, of course, is a third of the entire company itself. This particular program goes into production immediately, as soon as tomorrow, and allows us to be able to provide solutions and our technologies to our customer as we move forward. About 300 people are going to be transferring over with this transaction over to LTTS between Germany and Bangalore. And we will continue to use leverage the Augsburg facility of the client, as well as our own centers in Bangalore as we proceed to expand the solution offerings to our other clients in Europe.
Right. Mr. Chadha, help me understand this. So you get on to execution immediately on this deal?
Yes, we do. Absolutely.
And what is the timeline, the payment cycle of this one?
So this is a 5-year program initially. And it's, if I may, there's a little more work to be done in the first couple of years, and then it stabilizes. So unlike other transactions where they ramp up over a period of time, this is an immediate ramp up, and it helps reconfirm and give confidence to you in our organic guidance.
That's fantastic. And while there is the initial first couple of years will be the heavy lifting, will the cash payout be in line with that? So do you be upfronting a little bit of that payment? How much percent of the deal value will be upfronted over the next financial year, or rather this financial year now?
So there's no upfronting. It'll happen as the execution happens. What I'm saying is that the 5 years is front-loaded in execution the first couple of years. In fact, it's an immediate ramp up, and like I said, first couple of years, and then the remaining in the next 3 years. So look at it as a 60-40 rather than normal 40-60 that you normally look at.
Amit, how does this set you up for other deal wins of a similar nature in the industry? Cutting edge after this order win, you think? Should this also help you flow in, or of course attract better and bigger conversations?
Yes. So there are two parts here. Number one, hybrid electric are key technology areas that the world continues to invest in, and this sets us up properly. We made organic investments in the past in the electric vehicle area. With this win in hydrogen technologies as well as hybrid technologies, it sets us up very beautifully with clients as we move forward and people look at mobility and look at alternative fuels and alternative technologies. So that's number one. Number two, it also helps us differentiate ourselves in this space with the know-how that we are picking up with the program. Number one. Number two, it allows us to be able to expand in Europe, which is an area of interest for the company and future expansion for us.
Right. Amit, how will the pass-through cost affect your margins?
So thank you for asking that. There is no pass-through costs in this case. This is efforts and this is people, which is normally. See, we have traditionally operated at the 18% plus EBIT margins. We structurally continue to operate at that 18% plus EBIT margins. If I go back 3 years, we used to be about that 14-15% range. We were able to improve ourselves to that 18% plus range, and we continue to be in that area. There will be continued investments that we will make over a period of time, and that's where we will end up. So I'm reconfirming structurally at about 18% plus. This particular deal will be at the same segment margins as the segment operates at, and we continue to hire and leverage other levers that we have got in our hands, including freshers, rate increases, improving the offshore pyramid, that will help us in terms of operating at levels that we've operated at.
Amit, if I understood correctly, this should start reflecting on your top line or be revenue accretive from the first quarter of FY25? Is that a fair assumption? Okay.
Yes, ma'am.
Also, we talked about how this was a long-term deal, and you clearly mentioned it's a 5-year deal. Too early to talk about scope of renewal, right?
Yes, we're just starting.
We're just starting. We're just being optimistic.
Not just that, this also allows us to we're thankful to Forvia for having their confidence in us. This will become a top 20 account for the customer, for the company immediately. And then we are talking about other areas that we could work in together. Because Forvia is an up and outward looking tier 1 automotive company. We're talking about other collaboration areas as well.
So there is scope for increasing wallet share, if I understand that correctly.
Yes, ma'am. Yes,
okay.
ma'am.
You talked about how this is significant because of the geography as well. This is a market you want to focus on. More conversations underway in this geography. Can we hear from the company sooner than later about more order wins? Anything that's at a conclusive stage in that sense?
So all I would say is that Europe grew faster than company average in the last 2 years, and I would like to confirm that Europe will grow for us more than 15%. So the organic guidance was 8 to 10. Europe for us will grow more than 15% for us in FY25. And we are making sizable investments in the geography. There are other deals in play that we have at this point. There are other empanelments that we've got going on. So we are fairly upbeat about the geography as we move forward.
Right. Amit, also with the fact that employees are going to be transferred from Forvia to LTTS, how will the employee pyramid look like?
So we've got 25,000 odd people now in the company, and this is only about 300 people. So it's not a very big lot to create a difference in the pyramid. At the same time that we are hiring people, that we're taking over people from Forvia, we are also taking on a number of freshers in the company from colleges. Our intake of freshers was close to about 1,500 plus last year, will remain at similar levels or slightly higher levels in FY25. So I don't see this impacting the employee pyramid in any way. In fact, I do believe that by the time you end FY25, we should have a better pyramid than we had in FY24. We are also investing in areas of AI, and that is allowing us to make changes to the pyramid in a manner that helps our margins as we move forward.
Very quick last question, and I'm certain you've had an extensive conversation about this around the earnings as well. This, from the sound of it, is a clean-cut transformational deal, right? It's discretionary spending. And that's largely been the concern with the industry, where these deals are not coming through, they're not converting into revenue, and those have been the bigger problems industry-wide. Do you feel like with this order win, you're a lot more confident that discretionary spends are up to pick up from where we stand?
So what I would like to confirm is that if you look at the ER&D space, a significant part of the ER&D spend is what I call tied to product shipment. As long as the product ships, as long as the product is consumed, you will have ER&D spends. That's why you've seen ER&D companies doing better as they have come out with their results in Q4 and the guidance that we've all provided you in FY25. ER&D has done more outsourcing to India as opposed to IT, and the growth has been higher, even though the wallet, it's smaller in terms of size in FY24 as well, per reports that you would have already read. So I do believe that as we move forward, FY25 will see ER&D continue to accelerate and expand as compared to the IT sector. And this deal is just one in terms of the others that we've got in the pipeline. And we continue to pursue those to see which ones will close when. But we're fairly cautiously optimistic about the future and what it holds for us in FY25.
Just one last question. This is, of course, keeping up with the commitment of organic growth that you had set out for LTTS and FY25. Any update on M&A activity? How soon can you be looking at closing an acquisition? Anything on the cards that you want to tell us?
So there is various. So look, there are three areas that we will focus on that we are focusing on for M&A. It's in the ISV hyperscaler space. So a service provider that potentially is working with hyperscalers in the automotive area in Europe or in the medtech area in the US. So these are three areas. We've got various companies in the pipeline that we continue to talk to. And we stay, we stay invested in the fact that we'd like to get to the $1.5 billion run rate before the end of the year. And so therefore, more action to be done and more announcements. We just started the quarter, we just started the year.
This is as exciting as it gets. Good luck and congratulations. It's a big order win, and it's going to be exciting to see how the stock actually does and reacts to that. But thank you very much. We'll hopefully see you soon.
Thank you. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and
Welcome back. You're watching Earnings Edge on NDTV Profit. I'm Harsh Saita. Couple of more conversations lined up with regard to the numbers itself. We're in the thick of earnings. But first up, we'll go straight to that, in fact. First up, we have Rucha, who spoke with RailTel's Sanjay Kumar about the quarter gone by. Listen into a slice of that conversation.
This year, we will be around 40 to 60%. You are right. 60% from project business and 40% somewhere around will be from telecom business.
Sure, sir. So just one more thing, when I look at the EBIT margin of these segments, right, I think the project work is slightly a lower profitable segment, if I'm not wrong, while telecom services is, has a higher margin. But in terms of revenue split, we have less revenue coming from telecom services. So do you expect, how do you expect this to move around? I mean, lower share from higher accretive business. So what do you think around this?
Yeah. So we are this year there are a couple of good contracts, tenders being already floated by railways, and railways, we being from railways signaling and telecom sector. So we expect that in those works we may get better margins because we are working on those tenders for quite some time. Those are from LT and Kavach, where we have worked out a strategy, and two tenders of around 17 to 1800 crores are already there. So earlier year, I know to get into like education sector, we had to enter. We wanted to enter the education sector, so we had to take some very low margin works also to win the works. This year, we have grown wiser, and we are also taking that care that our margins in project business also improves. So we are sure that we will remain in 17 to 18% of EBITDA margin, or maybe if you talk of EBIT, yes, 12 to 13% should be there.
Right, got that. So next, in terms of your cash generation, right? So when I look at the CFO to EBITDA margin, that was pretty healthy, more than 100% for financial year 23, while it has come down a bit in FY24 to around say 70% levels when I look at CFO to EBITDA excluding the exceptional items. So what do you think on the cash generation? What can be a sustainable ratio going forward on a year-on-year basis?
And I think I don't find any issue in cash generation. Last year we had tweaked our ECL guidelines, so maybe you are able to perceive it a different way. But now we have actually fine-tuned it. And this year onwards, even 22, 23, 24 also, we have now we are satisfied with our ECL guidelines, and we are sure that there should not be any problem in cash generation.
Okay, got that. So okay, got that. So in terms of other expenses as well, so when I see, the other expenses item was around 9 to 10 crore last year, the same quarter of last year, while it has been around, say, 14 odd crore. So what is the, major share in this other expenses, and how can we see that going forward? I mean, what constitutes the highest share of other expenses?
See, I will come to that. I will come to that. Before that, you can ask some other question. But these are very small numbers. The other expenses include mainly administrative expenses. Sometimes I'll just come to that.
Office rent, all this.
Sure, sir. Not a problem. Okay, fine. So let me move back to margins. A couple of things that I would want to understand. So in the last quarter's commentary, when I read, you had mentioned that you would expect the project margins to be in the range of 5 to 7%. So do you still stick to that? Because when I look at the EBIT margins for that in the current quarter, it is a tad lower than what you had mentioned for the long term. Do you still stick to that target, or do you would like to revise it?
Yeah. So very, very right question. So the last quarter, incidentally, it was a one-off incident that we had few low margin businesses which we got the last year, and incidentally those were executed in the last current financial year, last of the previous financial year. But if you see the overall margin, we remain in the 5 to 6% region only. And there should not be any problem. Rather, I'm expecting to make it even healthier this current financial year.
Okay, sir. Another question around capex, maybe. So what kind of trajectory do you expect it? Do you expect it to increase or just remain around the current levels?
Yeah, we will certainly have plans. We have plans for this year for around 250 crores of capex, in the range of 250 crores. We have increased budget for capex this year.
Okay, got that, sir. Okay, sir. So another question which
I can answer your previous question, the other expenses. So there was nothing exceptional. There was routine expenses, and if you see the overall, if you see the total revenue and the amount of other expenses, is not that much. So I don't see any reason to worry about that. These are rents, trainings, business promotions, legal charges, and all that. Nothing special.
Sure, sir. Lastly, on edge data center, just wanted to know about where are we in that context, and what do you expect from the same going ahead?
So edge data centers, we have already finalized the partners, and partners have started working on survey. And this year we are expecting that at least 10 to 12 edge data centers will become operational, and next year will be, of course, the remainings will come out. And we are very hopeful from edge data center business. Maybe by the end of the current financial year, we start seeing the results also.
Okay, so end of current financial year is what you mentioned that you will see the synergies from. Okay, and another last question around maybe 100 locations that you had identified last quarter. Anything around that, any increase or decrease or change in estimates around that for edge?
That will be around 100, and this year we should be, I told you, 10 plus numbers, 10, 12 numbers. Major edge data centers will come out.
Sure, sir. That's it from my side. Thanks for joining us on the show, and we'd like to have you back again soon.
Thank you.
Right, that's the management of RailTel. Let's switch over though to Neogen Chemicals, that one in focus as well. The company reported an 18% jump in net profit as well as a margin expansion in Q4. We spoke to the company's managing director, Dr. Hareen Kanani, on the quarter gone by and what to expect going forward as well. Listen in.
Last year, we have seen dramatic changes in the raw material prices, especially lithium, which was dramatically down. So while, you can see on quarter, our lithium sales have reduced significantly, but that's mainly just because of the price. And in terms of volume, there was a 5 to 6% increase there. And where we saw biggest increase was in our organic, where we see both volume as well as revenue growth. That the revenue growth was almost close to around 20%, and the volume growth was around 25 to 30%. This was aided also by the acquisition that we did for making organolithium compounds, Bulai Chemicals. So that also was about done 3 quarters ago, and this quarter it also contributed significantly. So that also aided in increasing our organic revenue. So overall, if we speak, in terms of volume growth for the whole year also, there was almost a 30% increase, 25 to 30% increase in the organic production, and around 5% increase volume growth in the lithium, overall giving us the increase in this quarter of around 20%.
Okay, so good volume growth here, and we did see uptick in our margins also. What were the levers for the margin uptick?
Just better volumes, and again, before the percentage margins look lower because lithium was a high price which was getting passed on, and now that was not getting now that lithium prices are lower, in terms of percentage it looks slightly higher. So that's why we basically request our investors to basically focus on more absolute EBITDA as compared to percentage EBITDA when lithium is very volatile. So basically now the lithium prices are staggered, and they are one of the close to one of the lowest prices which we've seen in recent times. So that's what gives a view that the margins have improved.
Okay. Please go ahead.
No, and the other part is the volumes growth which we had, which has improved the margins.
Okay, and also, is there any seasonality in your business? Because if I see your numbers, every time your H2 seems to be good as compared to H1.
So, we are a company which are always trying to grow. We are doing new molecules. So, that's one of the factors that some of the initiatives that we take, start giving results towards the end of the year. So that's one of the factors. The second factor usually is that our lithium business generally does well in the last quarter, where there are some tax benefits to customers or users of the machines. So generally our customers have a higher demand there, and we also expect exports to be a little bit higher in second half of the year normally, both agro and the pharma segment. So that's the reason why our Q4 is usually higher. And the same thing is also there for our pharma customers who are in the international market, where they also see higher demand in Q4. So consequently, we also have slightly higher demand. There's a very detailed statement in our investor presentation on our website, which explains the seasonality.
Also now, let's talk about your battery material, wherein all the investors are, more, focused on, considering the growth prospects that you have on that segment. You are doing a greenfield project when it comes to your battery material. So can you just give us the key details of that project?
Sure. So actually, we have two parts of the project. One is actually a brownfield. In our existing lithium plant, we have converted and we have set up in our Dahej SEZ unit capacity which can start lithium carbonate, which comes from the mine, do the purification, make the intermediate, and make the final electrolyte salt, and do the final formulation, which will directly go to batteries. So we start from something which comes out of mine and then take it to very high purity level, which will be ready to go to the batteries. So the phase one of this is in our existing unit, which is brownfield. And like the first commercial plant of this, like basically has started coming online stage by stage. Part of the electrolyte salt capacity is already online. We also made some initial trial production sales for customer approvals. And the final electrolyte also, the trial production for the rest also has started.
That was the management of Neogen Chemicals, but completely out of time on this edition of Earnings Edge. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
Benchmarks lose gains after staging a sparkling rally to scale fresh record highs. Sensex trades at 74,700 levels, while the Nifty trades below 22,500. And respite for Bajaj Finance as RBI lifts the ban on Bajaj Finance digital lending products. Meanwhile, Coforge falls over 7% as the company's profit takes a hit in Q4. On the other hand, CEAT also takes a hit as the company incurs an exceptional expense of 58 crore rupees. And more earnings on the block. Britannia, Titan and Godrej Properties are set to report their March quarter numbers. After weeks of suspense, Wayanad Member of Parliament Rahul Gandhi is set to file nomination papers from Rai Bareli shortly, while Kishori Lal files nomination from Amethi. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a quick look at where the markets are at first. Well, the markets are actually close to the day's lows currently. The Nifty 50 as well as the Sensex both down by about 1%. The Nifty 50 is currently in the red by about 240 points. The Sensex by about 950 points. Let's have a look at some of the key constituents of the Nifty 50. Most stocks in the red, while we have a few advances, no surprises there really. But among the key losers are Bharti Airtel, RIL and L&T along with Maruti Suzuki. In percentage terms, all of these stocks are down by over 2%. Among the key contributors, we have RIL, HDFC Bank, L&T and Bharti Airtel that are dragging the benchmark, while in the green, we have Bajaj Finance, Coal India, ONGC and Grasim among the better performing stocks today. Let's also have a look at the sectoral indices. Most sectors in the red. The Nifty IT showing the most drag. It's down by about 1.5% currently, as is the Nifty Infra. The Nifty PSU Bank, Nifty Oil and Gas, Nifty Media, all down by over 1%. What's managed to hold up, even though that's very marginally, is the Nifty PSE. It's in the green, but only by a tad bit. Looking at the broader markets, those aren't performing too well either. And the Nifty Mid Cap 150 is down by about 0.5%. The Nifty Small Cap 250 down by about almost 0.75%. Well, the Motown is buzzing as Bajaj Auto finally launches Pulsar NS400Z. After many teasers and comprehensive leaks, the two-wheeler is ready to take on the roads by the first week of June. My colleague Puneet is here with more details on that. Puneet?
Yeah, thanks for that. So, as you rightly said, first such launch in the 400cc segment by Bajaj. Do know that among the other legacy OEMs, this is the first time when a legacy OEM is launching their own brand in the 400cc segment. To start with the pricing, which is the most key aspect here, coming in at just 1.85 lakh rupees as an introductory price point. Now, this is very, very attractive when we compare it to the other peers which are already present in the 400cc segment. When you look at someone like Eicher Motors, which has the Himalayan 450, that is upwards of roughly 2.5 to 2.8 lakhs, while others such as Harley Davidson as well, which is brought in by Hero, while Triumph, which is the other motorcycle that Bajaj has, is priced at roughly the 2.4 to 2.5 lakhs. So pricing is key and the company's focus is on volumes. That's what the MD, Mr. Rajiv Bajaj, said at the presentation also. And more so, he's also said that they are looking to expand the Z range of motorcycles, which tells us that there is a lot more in the tank across this particular range. They've also said that till date, Pulsar has sold roughly 18 million vehicles, which is roughly 1.8 crore bikes since its launch back in 2001, while currently the brand's strength is dictated by the valuation valuation, and the company is at roughly 10,000 crores of rupees of brand value that it has created over the last few years. Do note that the company had a very interesting take that on the 400cc segment, they will be looking to increase volumes via the Pulsar, while for margins they will be expanding the Triumph as well as the KTM range, which the company operates within India. On upcoming launches, the company has confirmed, which it had already mentioned, that they are launching the CNG motorcycle in the month of June, and that has been which will halve the fuel expenses. That's what MD Mr. Rajiv Bajaj claims. Finally, in the third quarter, the company had also mentioned that they are looking to launch a new variant of the Chetak, and if there are some reports that say that this will be priced lower to compete with the likes of Ola, Ather as well as TVS also. So really strong launch, really strong price point that they are targeting. We'll see more commentary by the company over the next few months. Back to you.
Thanks a lot for that, Puneet. In fact, at the very same event, Rajiv Bajaj also spoke about the dramatic uptick in the prices of two-wheelers in India and the need to reduce GST. Listen in.
This kind of a dramatic change in price owes itself to many things, but most of all to what I have openly called as over-regulation of the market. You know, now, unfortunately, people say, oh, do you mean that BS6 is not good for the society in general? And my contention is, it is not that BS6 is not good. But I would also like to simultaneously point out, and I'm glad you asked this question actually, that why is it that in India, on vehicles like this, which you and your friend are calling as the vehicle of the armed people outside the metro, why do we have to pay a GST of 28%? You look at all the ASEAN countries, you talk to our friends who have come from LATAM, look at Brazil, typical equivalent of GST is between 8% and 14%. So on the one hand, we want regulations at the highest level, in terms of, say, emission, which is fine as a manufacturer, as a person in society, as a father. I'm very happy for clean air. But then, maybe at that time, the government should reconsider that GST should be 18% or 12% and should not be 28%.
Well, for MRF, the company also reported a decent set of numbers. Revenue was up roughly 9%, growing at roughly 6,349 crores. While on EBITDA, the company had a lower growth of just 7% compared to the previous year, coming in at 912 crores. When we look at margins, here is a little bit of not as meeting expectations. It's down 24 basis points, coming in at roughly 14.36%. While on net profit, it's reported 16% growth. Do note that this is much below the Bloomberg estimates. For profitability, the Bloomberg had an average Bloomberg estimate was roughly 490 to 500 crores of profitability, but it has come in at 396. While on EBITDA also, the numbers were much higher than these estimates. So on a revenue basis, yes, the company has given a beat, but on EBITDA as well as profitability, it is slightly subdued and below expectations. So we'll wait for more commentary by the management in the conference call as well, and see how the other players also perform in the tyre space. Back to you.
Thank you so much for that, Puneet. Like he's mentioned, we'll continue to bring to you commentary from the call. But currently, the stock is down by about 4% on the back of its numbers. Moving on, in a massive respite for Bajaj Finance, the RBI has lifted restrictions that were placed on its online digital EMI cards. My colleague Pragati joins us to tell us how this will serve as a relief for the company. Pragati?
Right, Pallavi, thanks for that. Yes, RBI last evening lifted the curbs on Bajaj Finance's e-commerce, e-com and Insta EMI card products, the products which were a big hit among the customers. In fact, Bajaj Finance, through the exchange filing, also informed us about it, that it would resume, or rather it has started the disbursal of loans under the products along with the new issuance of cards. Like in our entire coverage throughout the day, we have every time and again pointed it out that the timing of this is very interesting to note, because usually whenever RBI places business curbs on different companies, it takes about 12 to 15 months for the curbs to be lifted. But in this instance, because Bajaj Finance had taken remedial actions, the curbs have been lifted in about 5.5 odd months. And a very similar viewpoint is being now communicated by the brokerages as well. For example, MK has said that the removal of the curbs comes on much expected lines, because even in the fourth quarter presentation post the earnings, the management indicated that they had reached out to the RBI and asked for the removal and the review of these curbs. So MK reiterates a buy with the price target of 9,000 rupees. In fact, it also said that while the restriction has led to lower PBT by approximately 4% in the fourth quarter, now the customer acquisition is also expected to revive, since obviously these products were pretty much hit. If we look at Citi on Bajaj Finance, it also maintained a buy with the target price of 8,675 rupees. Even they said that the withdrawal while the imposing of the curbs was surprising, the fact that they have been removed in 5 months is pretty commendable. That's the word they've used. So that's what we have for you. We'll bring you more updates as and when we have them.
Thank you, Pragati. Bajaj Finance clearly performing well on the back of that news. Another stock that's powering the Nifty PSE index is REC. The stock has jumped nearly 22% in the last 3 days. My colleague Harsh is here to tell us what's powering this stock. Harsh?
Well, thanks for that, Pallavi. So essentially, they've come out with a very strong set of numbers for Q4. That's essentially why the last 3 days we've seen the kind of stock performance. Largely, it's been led by recoveries, around 750 odd crore rupees of recoveries. And part of that impact, or a large chunk of that impact, came in Q4, which is why you saw profit after tax at least 15% higher than what the Bloomberg estimate was. That's what's driving the stock price higher. But we had a conversation with the management of REC to break this down a little further. They've spoken about a 17% loan growth. They've spoken about doubling the balance sheet by FY30, but they've told NDTV Profit that they are quite bullish and they are open to the possibility of that happening even by FY28. I asked them what the levers were for that. What they were suggesting was they will 10x the book with regard to where renewable energy portfolio is concerned, and they'll 4x the non-power infra book. Now they're into that non-power infra lending, and they'll 4x that book to 2 lakh crore. So from the 30,000 odd crore number, renewable energy portfolio will go to 3 lakh crore. From the 50,000 kind of crore kind of number, the non-power infra book will go to 2 lakh crore. That will largely be the lever. Outside of that, they are expecting thermal also to show strong growth. 94 gigawatts of new thermal power projects to come on stream, all of which will require funding. And REC will be a major chunk of that, is what he suggested. But how will that impact profit after tax? How will that impact shareholder value, dividend? Listen into a slice of what we spoke about with regard to PAT compounding, 17% CAGR on loan growth. What impact on PAT?
Our asset under management will grow around 17 to 20% actually over the next 3 to 4 years, and our profit after tax is bound to increase to say about 23-24, more than 23-24%.
Well, profit after tax 23-24%, margin maintained at 3.55 to 3.6%. OPEX has always been controlled for REC, and that's probably one of the lower OPEX related cost kind of companies. And for FY25 specifically, he's guided that he will do 1,600 to 2,000 crore worth of net reversals on the provisions account. So your impairment number for FY25 will likely be 1,600 to 2,000 crore negative, which will push PAT higher. So with all of that in context, 23 to 24% PAT growth in the medium term, not just for next year, outside of next year, is what he's guided for. Extremely strong, and they're not going to do any equity raise. So EPS will not get diluted as a result of this PAT growth. Some very interesting takeaways coming, and likely the stock move is because some part of this is disclosed and some part of it is starting to get priced in.
Thank you so much for that, Harsh. But another stock that's buzzing, though not necessarily for the right reasons, is Coforge. It's down 10% after posting its Q4 results yesterday. My colleague Rucha joins us with the key highlights from the earnings. Rucha?
Thanks, Pallavi. So, as rightly stated, Coforge is down around 10% in today's trade. Now, this is largely because of three negative points. Number one, it missed the margin guidance by 70 basis points, while in terms of revenue, it met only the lower end of the guidance. Number two, it suspended the FY25 revenue guidance due to uncertain macro environment. So, the company is not really sure about how the near-term outlook would be. Number three is the executable order book implies a slower YOY growth for FY25 at around 17% versus a 20% growth in FY24. However, there are three positive key takeaways as well on the flip side. Starting with the order book, right? As with other Indian IT peers, Coforge also had the highest ever order intake of around $2 billion in the current fiscal year. It also expects to improve the margins by 150 to 200 basis points by FY27, and it also reiterated its target of reaching $2 billion revenue mark by FY27. And lastly, the recent acquisition of 54% stake in the Signity Technologies will help the company increase its footprints in South, Midwest, and Western parts of USA, and also enter into three new verticals, namely retail, healthcare, and consumer.
Thank you so much for that, Rucha. And with that, it's time to slip into a very short break. But before that, take a look at Airbnb's latest offering, Icons. Did you ever want to stay at the Ferrari Museum, the X Mansion, or spend a day like Janhvi Kapoor? You can do all of that and more soon on Airbnb, as it aims to add more locations in the coming months. The newest attraction, though, is the floating house from the animated movie Up, fully suspended by a crane in New Mexico. On to the break. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Market IQ on NDTV Profit, and it's a day of nominations. The Congress leader and Wayanad Member of Parliament Rahul Gandhi will be contesting Lok Sabha elections, this time from Rai Bareli. And Congress's Kishori Lal Sharma has filed nomination papers from Amethi, where he will be in the fray with the BJP's Smriti Irani. Now continuing with NDTV's special election coverage, the focus is on the hot seat Mainpuri, what was once Samajwadi Party founder Mulayam Singh Yadav's bastion. Now his daughter-in-law Dimple Yadav is the incumbent MP. Will she be able to hold on as the BJP tries to wrest it from her? It's a three-way contest between the SP, the BSP and the BJP. Here's a report by Tanishq Punjabi.
Rhythmic clangs of metal on wood greet you in these narrow lanes of Mainpuri. Women busy doing the centuries-old Tarkasi artwork. "50-year-old Kiran Kumar is one of the many Tarkasi artisans that make Tarkasi art under the One District, One Product scheme. Kiran says that while the scheme has given a recognition to her art form, the inconsistent demand and rising inflation is a worry.
वही सेंटर पे मिल जाता है, जो आता है सरकार देती है मुझे। हमारा कहना यही है कि जो योगी जो हम चाहते हैं, जो महिलाएं रोजगार मांगती हैं, तो हमेशा के लिए हो जाए। मोदी ने जो आजकल किया काम सरकार दे रही है, राशन पानी भी सही मिल रहा है।
हम यही चाहते हैं कि हमारे ये सरकार बने तो हमारा ये काम आगे बढ़े और हमारी सैलरी भी आगे बढ़ती रहे, जिससे हमारे जीविका उपार्जन सही से चलता रहे और हमारे जो परिवार के सदस्यों का पालन पोषण अच्छी तरह से हो। जो हमें काम देगा वही सरकार चलाएगी।
The hot seat of Mainpuri. It was in 1996 when Mulayam Singh Yadav won as a member of parliament from here, and the Samajwadi Party has won it every single time. Call it the Samajwadi Party bastion or the Yadav family's turf. It is always a member of the Yadav Parivar that has come to power from here. This time it is the daughter-in-law of the family, Dimple Yadav.
The first Lok Sabha elections after the Samajwadi Party was formed in 1992. Yadav stalwart Mulayam Singh Yadav, also known as Netaji, fought from his birthplace, Mainpuri. Since then, the Samajwadi Party has been the heartbeat of Mainpuri's politics. After the demise of Mulayam Singh Yadav, Dimple Yadav contested the 2022 by-polls for Mainpuri Lok Sabha, securing almost 64% votes and winning by a margin of nearly 2,88,000 votes, making her the first female member of parliament from the seat. This time again, it's a litmus test for Dimple Yadav.
सरकार के 7 साल पूरे हो गए हैं, जहाँ युवा हमारा बेरोजगार है। किसानों की जो आपने वादा किया था जब सरकार में आए थे कि अब मवेशी जो आवारा पशुओं वाली जो समस्या है उसका हल करेंगे, कि आपने हल कर लिया। आज आप लोगों पे दबाव की राजनीति बनाते हैं। क्षेत्र के हर नागरिक जो आज है हमारे मैनपुरी का, उनकी जिम्मेदारी है कि ऐसे लोग और ऐसी मानसिकता वाले लोगों को हटाना बहुत ज़रूरी है जो दबाव की राजनीति का प्रयोग कहीं ना कहीं करते हैं, और मैं समझती हूँ कि मैनपुरी की जनता तैयार है।
Against Dimple Yadav is this man, Jaivir Singh of the BJP, a minister in the UP government and MLA from the Mainpuri Assembly constituency. Singh entered politics in 1984 and was elected an MLA in 2002 and 2007 from Kirod. Originally from Firozabad, Jaivir Singh rose through the ranks of the BJP, transitioning from his roots in Bahujan Samaj Party and the Samajwadi Party politics to emerge as a prominent leader within the BJP. the BSP has fielded Shiv Prasad Yadav, a former BJP member. While Dimple Yadav belongs to the Kamaria Yadav community, Shiv Prasad Yadav hails from the Ghosi community, making it a keen contest in Mainpuri.
40 वर्षों से इस मैनपुरी में घोसी यादव का एक भी एमएलसी नहीं, एक भी एमएलए नहीं, एक भी विधायक नहीं, एक भी स्टेट मिनिस्टर नहीं, पूरे सैफई परिवार के लोग पैदा होते हैं राज करने के लिए और घोसी यादव पैदा होता है इनको वोट देने के लिए। पूरे उत्तर प्रदेश के घोसी यादवों को, ग्वाला यादवों को इन्होंने ध्वस्त कर रखा है।
लॉयल्टी है एक यादव परिवार की तरफ, है ना?
हम यादव लोगों को देंगे भाई।
अच्छा।
हाँ।
समाज में देंगे?
समाज में देंगे, हाँ।
हाँ
ठीक।
और लगातार यहाँ से इतने सालों से यादव परिवार का ही कोई ना कोई सदस्य जीतते आ रहा है।
हाँ, वही जीतेंगे।
भारी मतों से विजयी होंगी डिम्पल जी।
अच्छा।
हाँ, पहले तो कम से हुई थी, अब की बार भारी मतों से हो। जय डिम्पल ही साहब जीतेंगे और तो कोई हिसाब किताब नहीं खा रहे।
अच्छा।
हाँ, जयवीर सिंह बहुत कर्रे पड़ जाएंगे डिम्पल को।
अच्छा।
हाँ।
In this crucial election of alliances, it is very important to keep an eye on those who are fighting solo. The BSP has put up a Yadav candidate this time. So, Dimple Yadav, will she be able to win Mainpuri once again? Or will it be benefit BJP this time? With camera person Virendra Kumar Saini, Tanish Punjabi for NDTV.
And that's all that we have on the show for now, but do stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Listen
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start. Hi, thanks so much for joining me. This is Big Decisions on NDTV Profit, and I'm Alex Matthew. Every week, we get you insight that you need to make your most important financial decisions with confidence. Over the past few weeks, we've discussed why life insurance is missold so much, the rules of the heart and the mind that make you a better investor, and what women should know about when it comes to the laws that govern inheritance. If you'd like to listen to any of those conversations, you can find them on our social media pages or on any of the podcast platforms out there. This week, I'd like to take the conversation on inheritance forward. There's been quite a lot of chatter about inheritance of late, and that's because of the debate about inheritance tax. But that's not the focus here today. We've established that conversations about inheritance are not the easiest to have, and the discomfort that is associated with those conversations is why, more often than not, it doesn't take place at all. What's the solution then? And what's the best practice? To talk about the ideal approach and the problems that can crop up, I'm joined today by Dipali Sen, Founder and Chief Executive Officer at Srujan Financial Services. Dipali, thanks so much for taking the time.
Thanks for having me, Alex.
So in your experience, and you've been doing this for quite a while, would it be fair to say that most people don't plan for wealth distribution?
You hit the nail on the head. So while we enter into financial planning decisions, in the first meeting itself, we kind of let people know what comprises. So wealth transfer being the third step of financial planning. We have literally everyone agree to its importance and that how it's most critical. But in my last 11 years since I set up this firm, I would have had only 0.5% of the people who actually did financial planning end up actually writing a will. This despite the fact that they kind of agree to the importance, and we collaborate with them in providing them a draft will. We do the compilation of assets and kind of have it presented to them. But it just doesn't happen.
In follow-ups that you've had with these same individuals, what do they say as to why they're not doing it?
We'll do it. I think it's more to do with their subconscious thinking that they are going to live forever. I mean, it's very sad. It's very, very sad because we know actually death is the most ultimate truth.
Yes.
But somehow it seems to them that it'll happen to others, not to me. Inertia, there's a strong inertia. I have to compile assets, which is also there. I have to take a call on whom to distribute. They're just shy of
accepting
and pinning it. And as we all know, we are not the best executors, as in we talk a lot, we all Indians talk, we may plan.
It's not, I would go so far as to say it's not just us as a people, it's everywhere that you will look. And I think that this is a global phenomenon. But let's get into the details of this, right? And to take the point forward, you say that the people that you've interacted with, only 0.5% of people actually do this. And I would go so far as to say that a very small percentage of the population actually takes financial advice.
Absolutely.
And so therefore, very few people end up planning to distribute wealth. But let's talk about what happens when you don't, right? Because in the first episode, or rather in the last episode, we talked about the laws that govern inheritance. But then from a financial planning standpoint, and I'm sure that you deal with this as well, what happens if there's no will?
So right from involving a lot of expenses to the heartburn and the struggle and the conflict of getting a probate in place. Probate isn't can't be there if a person dies intestate, but trying to get the succession certificate, the letter of administration from the court, it could take anywhere between 6 to 8 months, it could take anywhere between 2 to 3 lakhs, and trying to get together the various heirs as per the succession to give a NOC if that's what you want. It only gets messier, it leads to heartburn, and a lot of precious time and money is lost.
Okay.
When it can just be a simple 2-3 page document clearly mentioning what needs to be done to whom in terms of listing the assets and labeling it to
We'll come to the writing of the will and how to do this, because I'm told that, and I have been told many times that it's a very easy process. But before that, let's talk about how things stand right now. And most people have nomination because this is required when you make a financial investment usually. Why is it that nomination in and of itself is not enough?
Okay, so a nominee is a trustee of the asset, and so if there are, let's say, 2 holders, either a survivor, the first holder passes away, the second holder is holding it, he can even redeem or act on it, and even when he passes on the assets to the nominee, an heir, if it's different from the nominee as per the Hindu Succession Act, can always contest it. So nominee is only a trustee. The final beneficiary in that sense is the
legal heir
mentioned in the will, and in case where there's no will, it is as per the Succession Act.
Exactly, and we just established that in the last episode, the various aspects that come into play. It depends on the community that you belong to, and of course in most situations all of the surviving members of the family have an equal right.
Absolutely.
And so therefore it can be a very complicated scenario. We actually saw a case a while back where you were prompted to either make a nomination for a financial asset or you had to opt out.
Yeah.
And funnily enough, so many people opted out. Why do you think that is?
It's very illogical, but I think more to do with ignorance or inertia. Which is the easier way out, just stick it in the box, I'll have to think. It's very, very sad, and it actually is very illogical. Why would anyone do that? But then we know that stupidity is infinite.
Okay, so let's talk about the ideal situation then, and let's lay out everything that you need to do. First, you said that in a financial planning process, this is step number 3. Very briefly, what is step number 1 and 2?
So the first step is risk control, which is about having the adequate insurance, life, medical, other insurances, and emergency fund. The second step is wealth management, where we try and strike balance between risk and return, so that we minimize risk and optimize on performance, so that we beat inflation and taxes. And the third step is wealth transfer.
Okay.
And in the wealth management, the second balance which we try and strike is between today and tomorrow.
Okay.
You should have enough before retirement, enough after retirement.
Okay, so when you're talking about wealth transfer, one would assume that the first step to take is to make a record of everything that you own. How do you go about doing this?
So that obviously we take the help of the client, right from any movable to immovable assets. Financial assets are more under control because they're easier to give, let's say, the folio number, policy number, house document, depending if there's no loan lying with the client. Other things also, what we try and tell them is go to your locker, let me know what all is there so that we can document it and give an estimate that let's say there are 4 sets of jewelry, each averaging this, or to be specific, I have an emerald, I have a jadau or diamond set, and this is what it contains, a bangles or earrings or a whatever, a bracelet.
So assume that you have, and a lot of our viewers are joining in and perhaps will take notes and identify how to do this. Is it something that you write on a piece of paper? Is it an Excel sheet that you maintain and you update over a period of time? How would you suggest is the best way to go about doing this?
So the best way is to try and think and kind of sit with your stakeholders, whether they are, let's say, parents, or you have lately got some ancestral property or jewelry. Sit with your spouse, try and understand what all she has. List that down in terms of right from a car which you have, or let's say a painting you have, or a piece of jewelry or gold or financial instruments, insurance policies, everything. It has to be everything. And while in the will we do have a clause, anything which is owned by us or by me and has been not covered. It should go in a certain proportion, but it's always for perfection and for easier execution. It is imperative that you list down everything.
Okay. So therefore, all financial assets, all immovable property, and what other details? So what other details? So for example, would you add documents to that? Supporting documents is what I mean. So share certificates, etc.
Yeah, of course. So share certificate, a demat account holding, physical shares if at all, mutual funds, insurances, all these are FD details, are financial documents. Company, Provident Fund, EPF, PPF, NSC, all those.
So I've heard of couples where, and a lot of them, where one individual is more, shall we say, inclined towards managing the money, and the other is happier to take a more relaxed backseat role. And I know of one particular individual, this lady, who sends her husband an Excel sheet every quarter. So at the end of every quarter, there's an updated account of all of their assets. And this is a practice that she has been following for several years. Is that a little too much? Would a 1 year statement suffice?
Oh, okay. I do that.
Oh, you do that as well? You do that once a month.
So it's once a quarter is good enough. I mean, an update on investments is what I send once a month. It's not that every month we keep acquiring things to kind of update. So I think this is a very good practice, and you are absolutely right. In households, even when I try and involve both of them equally, husband and the wife, if both of them are working or not working either, there's one guy who's inclined to take a dominant hand on matters related to money. So, yeah.
That's the case. All right. So, and it's a good idea to have a regular statement sent out. And of course, therefore, because of the day and age that we're living in, if you can maintain a digital record of what you have, then that would be ideal.
Absolutely.
We're going to talk about a few of the aspects related to what comes next. And that is, in essence, the most important part of this conversation, which is when to make a will, how to make a will, what gets included, but we have to do that after a very quick break.
Sure.
Do stay tuned.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of our nation. One that will positively affect this crucial decade for the country.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Welcome back. This is Big Decisions and we're talking about inheritance. Now, we've established already at this point that most people do not follow the necessary steps in order to ensure that their assets are distributed as they would probably want them to be. And the first step that Dipali, my guest today, has spoken about is the need to maintain a record of what you own and to update that and share it with your dependents on an ongoing basis. Now, the other aspect to focus on, of course, and the most important aspect, Dipali, is the making of a will. And a lot of people think about doing this, don't end up doing it. At what point do you start thinking about this? Because some people say, hey, you know what? I'm way too young to be thinking about writing a will. Are you ever way too young?
I think it has to be done as of yesterday.
Okay.
The minute you have something which you kind of want to give away to someone, and death is unpredictable. I mean, I'm not going to get a WhatsApp message from whosoever saying that I have one day left, I should tie my loose ends.
Yes.
So we ought to be ready so that we don't leave any footprints which could be muddy or could lead to heartburn. So the idea of writing is a will to begin with starts with listing down all assets, personal, financial, real estate, discussing it with the stakeholders in terms of distribution. I would want to give this
Who
guy...
initiates that conversation?
It could be anyone. I mean, husband or a wife.
No, but I'm talking about, so for example, and we spoke about this at the start, it's a very difficult conversation to have. And, you know, can you imagine a situation where a son or a daughter goes to a parent and says, let's talk about inheritance. The likely response to that is, what are you implying and why are you having this conversation? So is it better for the person who is to distribute the wealth to initiate this conversation?
See, the answer lies in your statement. The person who has to distribute needs to do it. But as you rightly mentioned, I mean, we call Chirag Tale Andhera, that guy is not woke enough to do that, or he needs some nudge, which is what the alleged beneficiaries to try and do. In a very nice, warm, polite way, because at the end of the day, it's reality of life. It is not trying to tell the parents that we need money or we are waiting for some occurrence to happen, but it's only sensible to tell them that it's more joyful if people know what's going to happen. Not in advance, I mean, after they pass away, for people to execute things, if it's done seamlessly, without friction, that's better. And it could be a good way to say that I have written my will. For the kids to nudge their parents to do, it might be a good idea to tell them that I have done it. Right. So you may want to consider.
Okay, that's a good way to do it, yes.
And another thing which I think is you plant the seed, you can't push the river.
Yes.
You may want to do frequent nudges or follow-ups. What will be, will be.
Yeah, absolutely. Okay, so that's a fair point. Let's get down into the nitty-gritties of it then. Assume that I have to write a will, Dipali. How do I go about doing it?
So we'll need your list of assets, real estate, financial, personal. In terms of when we say financial, we kind of need the folio numbers or the policy number.
Or the fixed deposit numbers.
Receipt, savings bank account number, demat account number, mutual fund policy numbers, and so on and so forth. Plus, let's say if it's a house, we'll need the address, we'll need the jurisdiction.
Sure.
If it is a car, the car number, make, and all that.
What about a business?
Jewelry. Yeah, also if it's obviously the business, we need all the, if there are any liabilities, that should be listed down. If there are other co-holders, stakeholders, that needs to be mentioned in the right proportion. and then you need to peg those assets to whosoever you intend to give in whichever proportion.
Okay.
And it is a good idea to mention if you're singling someone out who would have been a successor or an heir as per the Succession Act, and if you don't want to give, it might be a good idea to mention, yeah, I am not giving because you already have.
So, but how do you word it? So you're saying that you make a list and you put the person's name alongside that?
So you write the person's name, his PAN number, saying this asset is in this proportion, I want to give it to this person after I pass away. I mean, all those assets similarly you do that. So for simplicity, typically you may have 2-3 heirs. So it might be a good idea to list everything down, write its value, and then decide a proportion.
Okay.
Specifically also you can write. Why specifically could make sense where you have, let's say, half the mutual funds you have X as the nominee, the other half you have Y as the nominee. You may want to mention those pinned in the same way, or else if for every asset you have 50-50% or 33 each, you may just want to say of the whole financial assets in this proportion I hope to divide.
And the easier the better, but the more specific the better.
Yeah. Yeah.
Okay, so that makes sense.
Laser pointed is better.
So, but then let's talk about once you have written this will and you have spelled out all of your assets, and one would assume that you have to update it over a period of time. As you add assets, you would have to revisit it.
Yeah.
But what happens once you've written that will? Who do you give it to?
Yeah, so you need to have 2 witnesses who will sign once you have, as a testator, if I'm preparing my will.
This is a physical document?
Yes. You can have a printout, you can sign it, but when I sign as a testator, the 2 witnesses should be there to see it, I'm signing it. Similarly, when they sign, I should be there to see it. And there should be an executor appointed to execute the will, because I'll not be there.
Separate from the 2 individuals?
Separate from the individuals and separate from the beneficiary.
And the 2 testators cannot be the beneficiaries?
The testator, I am the testator. You're right. The 2 witnesses should not be the beneficiary.
My bad.
You're absolutely right. So the witnesses are different. Executor is the person who is going to execute the will in your absence. Also, if the beneficiary is a minor, you need to mention who will be the guardian for that beneficiary.
Understood. So just to be very clear, I am writing the will. I need to find 2 individuals who are not the beneficiaries to witness. They need to sign, and I need to find a 3rd person to execute that will.
I don't need to get him on board, but I can mention his name and let's say PAN number and address, that this guy is the assigned executor for the will.
So then how does anybody know that I have written the will? If these 2 individuals have witnessed it, that's fine. But then what if somebody claims, oh, this person never wrote a will?
So normally what we do is the person who is the testator announces it, because if you want to assign someone the role of an executor, it's always better that you ask that person and you tell him that I am, for these reasons, assigning you the executor, and then you may want to keep your will in a safe custody or a locker and let the executor know that it's lying here, and you may not want to tell the beneficiaries, up to you whether they are heirs to this will or not.
Okay.
So executor definitely needs to be taken into confidence.
Okay. So it's very clear at this point what needs to be done. Now it comes to the distribution of the assets. Ultimately, this will is going to be executed at some point. That is the reality of life. What does one as a beneficiary need to bear in mind when it comes to the implications of this? And I ask this from the perspective of a lot of individuals that have, for example, left the country. There are some people who are non-resident Indians. There are some people who are no longer citizens of this country, but who are named in wills. Is there a difference in the way that they receive these assets, or the way that the state views these assets being received by them?
So the country laws will apply when they get those proceeds. That having said, when the deceased or the testator passes away, it's the executor's responsibility to kind of reach out to those people, because it could have been possible those beneficiaries and heirs don't know, or they could be financially independent and not really caring so much about. So executor kind of lets those people know, and that's when the process, the ball is set rolling. He will go to the court to get a probate on the will, which will authentify the will, post which the actual execution will start of distribution of assets or transmission the way it is intended to be.
Is it better to go through a lawyer for this probate?
Probate, you'll have to approach a court to get.
Yeah.
But while the process of writing will is there, you must also approach, like we as planners would write a will, but it's always better that I also consult a lawyer to see, while I would understand their story, how they want to have it distributed, and
the legal writing of this needs to be...
So there is no loophole or some anticipation which
is unclear.
Some possibility which can be worked out and which is ambiguous. So we kind of have unambiguous, clear, seamless will for
and as much as we would like to think that we can write like lawyers do, it's practically impossible. I struggle to read some of those documents. It is written, as they say, in legalese, and it sounds like...
And they have the experience on their side on knowing what has gone wrong, what could go wrong. So they would rather preempt that and have something watertight, because after that there is no recourse.
And there is no tax on anything that you receive via a will?
Yes.
As things stand right now. There used to be a different story though. There used to be a different story. All right, so I think we've more or less covered all of the aspects of why this is so important, and I think we've reinforced that over a period of time. And I think I would encourage everybody watching and listening to write any specific questions that you might have around this inheritance topic and around writing of a will. And Dipali, it's been an absolute pleasure having you on Big Decisions.
Thanks for having me.
Viewers and listeners, it's been an absolute pleasure bringing you this. Of course, it's not the most easy conversation to have, but hopefully we've moved you in the right direction so that you can have this conversation with your loved ones. Thank you so much for watching. This is NDTV Profit.
As an Indian citizen, it is not only my birthright, but it is my duty to vote. I urge every Indian citizen to exercise their voting right and elect a government which meets our hope and aspiration. I can assure you that I and my associate in WOCAD will exercise their voting franchise.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade,
Hello and welcome back to NDTV Profit. You're watching Earnings Edge. I'm your host Mihika Barve and with me is Anushi Vakharia. And on this edition, we're going to address certain companies that are in focus on the back of their earnings. But before we move on to what we have in store for you today, let's just take a quick market checks. The benchmark and the broader markets are in the red. The Nifty 50 down over 1% now, and we did open on life highs, but it was around 10 a.m. where the market started to dip and the negative momentum has persisted. When you look at the point contribution, it's Reliance Industries, HDFC Bank and L&T that are dragging the index down, whereas Bajaj Finance and Coal India do have some amount of strength on their counters. Coal and India on the back of earnings and Bajaj Finance as the RBI lifted the bans on their EMI cards. And when you look at the advance decline ratio, it's in the favor of the bears, 39 advances on the Nifty 50 with only 11 advances. When you look at the broader markets, not as much as a steep fall as the benchmark, but in the red nonetheless. You have the Nifty Mid Cap 150 down over 0.5%, and the Nifty Small Cap, which is down over 0.78%. But we now move on to the first company that we do have in focus today, and that is KEI Industries. And we're joined by the CMD of the company, Mr. Anil Gupta. Good afternoon, Mr. Gupta.
Good afternoon.
Good afternoon. So overall, a good end to fiscal 2024. You closed the year up 17% in revenue, which was much higher than your guidance. So what could you maybe give us a color on how the quarter went by for the company as well as the industry?
I think for our company, it went very well. We grew by 18.9% in terms of revenue, but in volume terms, we did more. We grew by 24% compared to same quarter last year. I think overall for the industry also it was good, but I don't have the exact numbers of others, but I can definitely talk about ourselves. Overall, we see a good demand trajectory from our domestic markets as well as export customers. And we feel that even this current financial year will continue to be a strong year.
Hi, Mr. Gupta. Anushi joining on the other side over here. So now we have maintained about 16 to 17% of our revenue growth over the last year. Do we maintain a similar trajectory also going forward in FY25? So can you shed more of a revenue outlook over here for the next year? And also on the EBITDA, same, the margins remained in the 10 to 11% of a range. But you did show that there is going to be 1 to 1.5% of an uptick. So how is it looking forward in FY25 over here?
We are definitely looking for a growth of around 16 to 17% in this financial year as well. And overall, for the full year, we estimate that our EBITDA may be around 11%, similar what we have achieved in this last financial year. So, and this growth will come from the capacity additions we have done in all our existing plants in last year, and which are now commissioned, and some more capacity will be commissioned by end of June this year.
And I wanted to ask Mr. Gupta now, when you look at the revenue breakup, it was the SS wire segment which was the only segment that saw a downtick in revenues. Could you maybe give some light on why that happened?
See, actually there was no downside. We have maintained our volume in stainless steel wire division also, only because the price reduction of stainless steel wire rod input prices, the revenue has come down. Moreover, stainless steel is a very small segment of our whole business, and it is not our core business area overall.
And when you look at the order book, I want to know where the current order book stands at, and in terms of segment, what is the breakup, and maybe if you could tell us about the execution timeline of the same.
We have around 3,500 crores of order book, and out of which around 770 crore is the EPC. Around rest is all wires and cables, mainly cables. And normally, the execution time of the cables orders are 3 to 4 months. So they should be, and we are every month we are, building up the order book month after month for our wire and cable business. So far as B2C business is concerned, which is almost 47% of our total business, that part we don't include in our order book because those orders comes and are executed within 15 days from our stocks. So those orders are never included in the order book. So, and monthly intake is strong and meeting our requirements.
Mr. Gupta, staying on the order book over here, so in which segment are we looking at more orders flowing through if we are to go forward from here? And when do we typically see these orders translating into revenues going forward?
Madam, I just said that these orders will be, except EPC, all major orders are executed within 3 to 4 months. So the order book is only 777 crore EPC orders, which are long term, which will be executed over a period of 18 to 24 months. But rest of the orders are all executed within 3 to 4 months from now. And every month we are building up a new order book and executing them in our maximum delivery period is 3 to 4 months from taking the order. So that is the position.
Got it. So around 2,700 crores of order books that could potentially get executed in the next 3 to 4 months. But Mr. Gupta, I want to talk about the capex. Now, FY24, you did a capex around 400 crores. What is the guidance or target for FY25, and how will this capex be broken up plant-wise?
We expect to do a capex of around 1,000 crore in this financial year, out of which 100 crore will be spent in 100 to 120 crore rupees will be spent in our existing plants to where the plant new capacity has come up in the brownfield expansion, and rest of the capex will come up around 880 to 890 crore at our Sanand new greenfield project, which is coming up. So 1,000 crore this year and another 600 crore next year will be the capex plan for our overall expansion.
Also, Mr. Gupta, now majority of the brownfield capex that we made at our Silvassa plant, that took place in Q4. But now again, this just started Q4 onwards. So now going forward in FY25, what is the peak kind of capacity utilization that we are looking at? And can you also share the update on how the greenfield capex is panning out to be?
We expect to achieve almost 90 to 95% capacity utilization in our cable business, around 75% to 80% in wires, and in this financial year. So far as capex at the new facilities coming up, I think all the major civil activities, civil construction has started. All the major orders for plant and machinery has been ordered. So the machinery should start pouring in by end of this year. And our expectation is that in the first week of next financial year, first phase of that expansion should be commissioned for commercial production.
Got it, Mr. Gupta. My next question is regarding exports. How strong is the export opportunity that the company is foreseeing? And do you all have a certain kind of target in terms of revenue contribution?
Last year in exports, we have grown by 58%. We achieved close to 1100 crores in exports and expect to grow by around 50% in the current financial year also, considering the traction in the demand. And we are also developing more newer markets and more customers with our sales strong and by building up a strong sales network.
Mr. Gupta, sticking to the exports over here, in which particular countries or segments we are looking more of these export orders coming in from? And in terms of margins, now that we have a strong growth over here, how are the margins different in the export business compared to the domestic one?
Our major export markets are Australia, Middle East, and Africa so far. Now, from last year, we started our exports to United States and as well as Europe. So far as margins are concerned, I think margins are similar in nature because we have to take care of, freight, etc. in our export shipments.
Got it, Mr. Gupta. Now, in the last 3 fiscals, we've seen the retail sales becoming a significant contributor. So do we have an aim to have a 50% mix here? What is the growth trajectory for the same?
We achieved 47% sales from B2C segment this last year, and our aim is to reach out to 50% level in this financial year, and we are quite confident that should happen.
Okay, thank you, Mr. Gupta, for that. One last question. What is your order book guidance for FY25? What's the kind of growth you all are expecting? And maybe in terms of domestic and export mix, how do you see the order book panning out going forward?
First of all, we are not an EPC company where order book really matters. This I have already explained. And growth, I have mentioned that we are targeting a growth of 16 to 17% in our sales revenue, both from domestic as well as exports put together. That means turnover. And EBITDA margin, I have already given that what we are aiming for. And I think I have answered your questions.
Yes. Thank you so much, Mr. Gupta, for joining us, and wish you all the best. Well, viewers, that was KEI Industries management for you. But it's time to slip into a short break. But do stay tuned. We have lots more on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Welcome back, viewers. You're watching NDTV Profit. We now shift our focus to the primary markets, and the first IPO we have in store for you today is the TBO Tech. Now, the travel distribution company is coming up with an IPO which opens on May 8th, and our colleague Sajid spoke to the management to dissect the company's business prospects. Listen into a chunk of that conversation.
Our business, the industry is very fragmented. There are thousands of companies who either aggregate supply on one side, which is aggregating hotel supply in different parts of the world, and there are hundreds of companies which aggregate travel agent demand on the other side, right? So these are small businesses across the globe, and where it makes sense, we'll be looking at business of these types to roll up into our main business.
Ankush, you mentioned that you mainly look at outbound travel from the country and domestic travel. Why is that? Means why don't you look at inbound travel as well? Because there's a lot of travel that comes into India as well, right?
So Sanjeet, our core thesis of the business is the outbound business, which is basically people living in their own residence and traveling overseas. That's our core, and I think that's a focus which we have been doing in the past and will continue. So inbound is something, I agree with you, but I don't think it's a focus for the company at the moment.
Is there not enough margins of business in that segment, just to understand how it works?
So the margins are healthy there, but I think, as I said, our story is still outbound. So I think, and there's a lot of expansion plans. The market is very, very large for us to keep growing here. So I think that's where our focus would be.
Gaurav, I was looking at your revenue mix. It has concentrated towards hotels and ancillaries over the last 3 to 4 years. And now, if I'm not wrong, roughly 50, 60 or more than 60% is coming from hotels and ancillaries. So is that going to be the core going forward? And India's travel market, which is the airline market, is also a booming market. So do you don't see much of a potential coming in there, because your revenue concentration has moved gradually from air towards the hotels and ancillaries?
So look, Sanjeev, the hotels business is fundamentally more fragmented than the airline business, and hence the margins are better. From our perspective, we continue to grow our top line in terms of gross sales, both on air and hotels. But because the margin is better on hotels, hence you see the revenue mix is changing rapidly towards hotels. But we have absolute belief both in the hotels business and the growth of the airline business. In fact, in India, as you know, the aviation industry is booming and will continue to boom for many years to come. So we'll continue to grow both the businesses, but fundamentally, because the margin profile is different in between the two businesses, the share of revenue will continue to move towards the hotels.
Give me a sense of the margin profile as well, Ankush. 18.8% in the 9-month period, and it has grown from FY23. But is there enough room to go beyond the 20% mark in this business?
Absolutely, there is, Sanjeet, and we will try to build our margins. But I think what's important for us is, our focus will remain on, sharing a lot of margin for our travel agents, because I think it's very important, as if they make money, all of us will grow. I think EBITDA expansion and our margins will come, from the operating leverages. But I don't see, that we'll be increasing our margins in the airline as well as the hotel business.
Another IPO in our radar is Indigen, which is open for subscription from May 6th. Sajid caught up with the management to discuss the company's growth plan. Do listen in.
So we, if you see our the four segments in which we break our business, one of them is called Enterprise Commercial Solutions, which is 59% of our revenues. The other one is Omni-Channel Activation, which is 12% of our revenues. We have a segment called Enterprise Medical Solutions, which is 23% of our revenues. And there's others, which includes a bunch of things, which is 6%. Now, Enterprise commercial solutions was 59 and omni-channel activation 12%. You could think about this as sales and marketing, helping pharmaceutical companies drive sales and marketing across the world, across their products using a digital first approach. That's what we do, right? And that's more than 70% of our revenues today. 23% of our revenues is helping pharma companies manage regulatory, medical affairs, and drug safety and pharmacovigilance using a digital first and AI driven approach. From a business model perspective, we engage with pharmaceutical companies on two fronts. As the name suggests, enterprise commercial solutions and enterprise medical solutions are enterprise engagements we have with our clients, where we are helping them across countries, across brands, right, and across therapy areas on a recurring basis to manage fairly complex commercial and medical processes, right? We get contracted for a long period of time and execute these processes on a long period of time. Omni-channel is a very specialized local way of engagement in some of the important geographies, large geographies rather, from a spend perspective, like United States and Europe, where we directly work with brand teams.
Mr. Gupta, your RHP says we do not have listed peers in India. So why there is no much competition when it comes to our company per se?
So at one level, it's a matter of, I would say it is no competition, right? It's just that we compete with it's just how the company has evolved, right? All these years. We are a 25-year-old company. Which got started with the whole idea of bringing medical expertise and technology expertise to solve problems for this industry. If you think about our medical and domain expertise, right, it's very, very strong. We started off with that, our procedures, the way we understand processes, interlinkages between, I explained, regulatory, medical affairs, safety, all these things finally are linked, right? Understanding the underlying linkages between all these. And then on top of that, what we have done for a very long period of time, given our DNA of also having technology, we have invested in technology tools and platforms which encapsulate this domain knowledge, right? And provide a very fair amount of differentiation to our clients. That's the reason we are able to work with 20 of the top 20 pharmaceutical companies and have very long-standing relationships with them. We end up competing with life science specialists, the likes of CROs you mentioned, contract sales organization, most of them who are in the US and Europe also. And sometimes we also compete with some of the IT companies who try to bring in the technology expertise, right? Obviously, but lack the domain expertise we have.
That's all as far as IPOs are concerned. Now moving on, we caught up with the ace investor Vijay Kedia at the launch of NDTV Marathi. We started by asking what is the new age investor strategy that it should be. This is what he had to say.
Hard lessons are ahead of us. What you are seeing right now, it's not the actual picture of the market. You know, it's like ups and downs. When you see a movie, so like it's just a 10 minutes of movie you have seen, you know. Picture abhi baki hai. So abhi climax bhi abhi baki hai. So, you know, until unless you complete one cycle here in the stock market, I usually say that until unless you complete one cycle ups and down, don't think that you have become an expert. At least you have to see 2 or 3 major ups and downs in this market to call yourself that, okay, I know a little bit about the stock market. And always remember one thing, that when you are right, you earn. But when you are wrong, you learn. So learning here is very important. Experience here is very important. Falling in the market is the most important thing and most important gift you can get. Because you will only learn when you will fail in this market or fall in this market.
I think you must have lost count of the number of cycles that you've had, because I know that companies that you've invested way back in the early 90s have now given you the kind of return. So patience is something that I'm sure that you have learned. The other thing that we're witnessing is that the derivative trading that we've seen in India, it's the largest and the most volume in the world. Would you say that it's better to have a carve out of your overall portfolio, to have a long-term portfolio which you keep for years together, and maybe to cut your teeth in the derivative market, maybe you have a small component of that? Is that the right approach?
I think you should have zero component in this market so far derivative is concerned, at least for 5 years. Sure. When you experience in this market, as I said, when you rise and fall many times, number of times, or you spend some 5 years in this market, constantly you are in touch with the market, then you should try out for 5 or 10% of your portfolio, of your worth into derivatives and all. Otherwise, you are bound to lose. It is written on the wall. Nobody can change this thing. And there is a quote of mine, always remember, that if you are smoking, you may die in 20, 30 years. But if you are doing future and options trading, you may die next day.
So before you're 30 years old?
Before 20 years old. The moment you start, you can be disqualified.
Finished. Okay, so news, as you know, Vijay sir, does not wait for anybody, and it's a market holiday.
Another IPO in our radar is Indigen, which is open for subscription from May 6. Varsha caught up with the management to discuss the company's growth plan. Do listen in. And now, with that, we are completely out of time. And this is a wrap on this. And now we move on to market close, so do stay tuned for that.
Your vote has the power to transform the future of a nation, which is the world's largest democracy. India stands at the center stage of the world today, and it's important to make the coming years count. I also have a message for the new voters. I understand the nervousness that sets in because it's your first ever vote and you want to make it count for a better future. Analyze the options carefully to understand the vision of the leader that you're voting for. Let us all come together and make one of the most important decisions in the history of a nation. One that will positively affect this crucial decade for our country.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
time to India market close, and there's no Friday cheer for the Lal Street. Quite an interesting day. The Nifty tanked about 300 points through the day after it made a record high of 22,694 is when 794. Post that, we saw a big fall on the street. 240 points from the days is what we've had from opening today. So 300 points from the day's highest point. The Nifty down about 1%. Bank Nifty doing badly, but not doing as bad as the index, down about 9/10%. So 420 points lower is what we have on Bank Nifty. Broader markets aren't doing too badly. The losses clearly are being led by the large cap names in the frontline counters. Broader markets are seeing some weakness, but like I said, the cut is not as sharp across the broader market universe. Mid and small cap index down about 0.6%. The Sensex also trades down with a 1% gain, and the Nifty trading pretty much at the day's low point as we see it. Across the stock movers, it was Reliance that led the way down in today's trade. It has reached its lowest level in over a month, probably one of its biggest falls seen in the recent past. RL seeing a cut of nearly 3%. Auto is doing quite badly, interestingly. So Tata Motors, that was looking very good on the charts up until yesterday, is down about 1.5%. Maruti is down nearly 3%. L&T is down 3%. Metals are seeing some profit taking. Adani Enterprise post numbers is down 1.5%. IT and pharma have been on the soft spot for quite some time now. The weakness there continues. On the buy side, Coal India is looking pretty solid. Numbers were pretty impressive from Coal India stable, on back of which the counter is up 3.5%. Select pharma names like Dr. Reddy's are doing okay. Bajaj Finance, on back of the news flow this morning, is trading with a gain of 2%. ONGC, on back of crude price movement, is looking okay. Hindalco, Cipla are a few gainers that we are seeing. But the breadth of the market is weak. The bias very clearly, like you can tell, is on the downside, with more counters losing in trade this afternoon and gaining. That is what the breadth looks like. You've got about 526 stocks that are gaining for about 1,413 stocks that are actually moving lower. Most counters are off the day's point. In fact, trading pretty much the day's low. The Nifty at its day's lowest point, threatening 22,400 as we see it, Harsh.
Absolutely, and let's pull up some stocks which are in focus today. On the back of earnings, first off, a slew of counters which are buzzing on the back of numbers. Let me first start off with numbers which came in yesterday. Look at something like a Coforge down 9.5%. I know Samina covered that, but let's also pull up something like a CEAT down 3.1 odd percent, Realtel down 2.5+%. Margin contraction, profit contraction as well on that particular counter. KEI Industries is down 2% as well. Let's look at some positives in terms of a Blue Dart, 8% higher. Ajanta Pharma also very strong numbers, 8% higher on that one as well. Coal India is up and away, 3.5% higher. Again, part of the Nifty 50, but that one is up as well. CIE Auto up about 1% or so. Smaller company, but nonetheless 1% higher on a tough day of trade. Not bad at all. Let's pull up some other counters which are in focus. MRF down 4%, again on the back of a decentish set. Raymond has been down since the morning, 3.5% or so lower. Outside of that, property stocks, Shriram Properties, Godrej Properties, both of which are up roughly 0.5% to 1% or thereabouts. Among other counters in focus, you have a Bajaj Finance and a Birla Corp, both of which are in focus and both of which are higher. You also have a Max Estates, a second consecutive day of gains for that one. And you have something like a Ugro Capital among the smaller cap players. That one is up 1+% as well. And IEX is doing well in trade as well. Look at an Aptech, look at a KEI, some of the other stocks buzzing on the back of news, 7% and 1% down respectively. And let's also pull up some counters like a Yes Bank, where a block was seen and 1.5% down. You had Carlyle selling off from Yes Bank a portion of its stake. Let me also call on board Aditya Arora from Adeltech.in, and we have Dharmesh Kant, who's the head of equity research at Chola Securities. Welcome, Aditya, Dharmesh. Well, let me start off with you, Aditya. How are you looking at markets? We've seen a bit of a fall, at least to close the week. How are things looking?
Hi, very good afternoon to you and to everyone. I think markets are pretty dicey, volatile, and uncertain just ahead of the election. I think that is the nature of the market as we approach closer to a very big event like election, budget, or anything like that, Federal Reserve policy also. So this is a very big event in 5 years. I think markets will tend to behave very erratically without any trend. I think we are going nowhere. Not big upside, not big downside. We are going to linger in this broad range of 1,000 points on Nifty with very swift moves on either side. That is actually killing a lot of option traders these days. We hear that so much on the social media that there are random spikes on both sides, call and put side. So that nature is going to stay just before market gets lighter, and we move swiftly in one direction as we get clear indication from election results. So that's overall texture of the market. I think I would play market by buying the dips and selling the highs because it's going to be a range bound market. If we talk about today's market texture or today's trend, I think we have reached the lower band of the day. So for today, I would maintain neutral to bullish bias. I would be a put seller with defined stop loss. Today we had hit a low of almost 22,348 on Nifty in spot levels. So I think 22,300 is the support for the market, and I would establish a stop loss of 22,280 in spot level in Nifty. So that's how I would play bullish on Nifty, and similarly I'm bullish on Bank Nifty and Sensex as well. If I talk about sector specific, then I think commodities and metals are going to shine very brightly in May series.
Oh, well, bullish still on the Nifty and Bank Nifty. That's the word coming in, at least on the charts. Dharmesh, what is up with Reliance Industries? Do you know what's going on? The stock has gone down to its lowest level in over a month, one of its biggest intraday declines. What's happening on RIL, and if one way or the other, does it look like a good time to pick up this counter in today's weakness?
Yeah, good afternoon. I think today's correction in Reliance is not specific to Reliance. It's more to do with the large cap Nifty baskets selling which is happening in the market, which to my mind was a big surprise coming in the way. Because a couple of days back when the market was moving up, we all were confident just on the back of the liquidity flows which has been there. So, I mean, not much of a credence would be given to a stock-specific activity which is happening today. It's more to do with selling pressure. It would be interesting to see end of the day data about what are the flows from the DIIs and FIIs as well as the HNIs. Which segment of the category came for the selling in the market. So as of now, as we said, I don't see any particular news, though there have been some sideline news flows going around about some change in taxation policy post the government, but that's more of a rumor kind of a thing, nothing material as to that.
Aditya, what about you? What's going on in RIL on the charts? Is there a breakdown, or it looks like this could make an opportunity for traders to go and pick up the stock for next week?
Right. So Reliance is a big heavyweight in index Nifty, and that is one of the contributor in creating huge volatility in option prices also. If we talk about chart patterns of Reliance, then I think, as I said earlier, markets are going to be range bound, and a lot of heavyweights are going to follow that pattern. So I think the support for the Reliance is 28,020. Until that is protected on daily closing basis, I think that's an opportunity to accumulate the counter for higher levels of 2925 to 2975.
Clearly seeing that as an opportunity, Samina. But let's also try and pull up the other heavyweight which is pulling the index down. HDFC Bank is down 1% or thereabouts. Your sense, Aditya, with regard to what one should do at this point?
I think HDFC Bank has been an underperformer, and I think it will be an underperformer for a long time to come. The way retail investors are lapping up the share and institutions are reducing their stake in the counter. So it's going to be, we have seen this kind of pattern in the past also, wherein, people get over optimistic, as the prices fall. So that doesn't play out very beautifully, although there could be some trading spikes in the stock. But I think somewhere down the line, if we take a little medium term view, then I think HDFC Bank will again test its lows of around 1375 to 1325. I think medium term, I'm pretty bearish on this stock.
Okay, Aditya, and your picks while we just about started this show, your picks for this afternoon?
Sure. As the environment is pretty volatile and the market patterns are pretty erratic, I would like to go for defensive names, which are pretty stable in this kind of market. So my pick is Dr. Reddy from pharma space. So that looks good at levels of at current market price, and one must maintain. Just a second. Dr. Reddy looks good at 6365. It looks good at current market price, and stop loss must be 6240, and target would be 6600 to 6700.
Right. Dharmesh, what about Coal India? Did you look at those numbers? Brokerages seem quite enthused, and it's one of the few lone gainers in a down market today.
Yes, I mean the numbers of Coal India were quite promising. It's not only about the numbers, because the type of capacity addition which is likely to happen in the thermal segment as well for the power space has been quite interesting. Around 70 gigawatt kind of a planning is there for next 4-5 years. And that was missing. A year back, it was only renewable talk was happening, but I think the power ministry came out with a proposal where both needs to be added to meet the power demand. So that is helping Coal India well, and the execution has gone up. Now 6-7% kind of a volume growth they have been able to deliver, which earlier they were lacking. So both put together, the volume growth as well as the higher demand for power generation sector for the coal, that is helping them well. And at the same time, I think going forward with infra hitting up, there will be a demand of coal from even cement companies for their plants to be fired up. Valuation wise is still very cheap. I mean, whichever metrics you look at it, the kind of ROEs, cash flow it generates, and dividend yield put into place, I still think there's a good scope for it to go if you are a long-term investor. So a decent buy, portfolio buy at current levels, and maybe if one is willing to hold it for say a couple of years, 30-40% kind of upside, which is inclusive of dividend yield, is always there on the cards for Coal India.
Right, that's the word coming in on Coal India. Just very quickly before we go on to Coforge, which is the other important earning, Aditya, do you have a view on Coal India? Is it a stock you look to buy?
Yeah, I think patterns of Coal India are pretty bullish, and stock looks really good. I think this positive sentiment could spill over to the next day, Monday and Tuesday as well. We have seen rally in a lot of PSC counters in last 2 to 3 days. I think it's now turn of Coal India to shine bright. So Coal India is a buy at 470 level, and stop loss would be 450, and target would be 490 to 510.
Okay, understood. Let's switch over, focus on, or rather continue to focus on earnings. Coforge, another one that's buzzing. It's down 10% after posting Q4 results yesterday. Rucha joins us with what's pulling the stock down. Rucha, talk to us. 10% lower.
Thanks, Harsh. So there are 3 key takeaways in terms of negative points for Coforge highlighted. Number 1, Coforge missed the margin guidance by 70 basis points, and the revenue came around the lower end of the guidance. Next is the company suspended the FY25 revenue guidance due to uncertain macro environment. Now, this is what we also saw amongst other IT peers as well. And lastly, executable order book. The next 12 months executable order book implies a slower YOY growth for FY25 at around 17%, which was 20% for the last fiscal year. Now, 3 positives as well for the stock. The company had highest ever order intake of around $2 billion for FY24. Now, this means that the outlook is positive, but the suspension of guidance implies that the company is not sure of the near-term demand. Next is the company still expects to improve the margin by 150 to 200 basis points, and it also reiterated its target of reaching 2 billion revenue mark, all this by FY27. And lastly, the new acquisition made by the company, 54% stake in the Signity Technologies, will help the company increase its footprints around South, Midwest and Western parts of USA, and also enter into new verticals such as healthcare, retail and high-tech.
Just a couple of things that brokerages like Citi have had to say. They said that they're concerned that while the orders are coming in, they've closed in at lower margins, and that could be a little bit of a problem. So while the focus is on top line and the glide path for what Coforge is focusing on, it may be coming in at a compromise of margins. Apart from that, Jefferies also believes that this acquisition, they would have preferred rather that the company, that's Coforge, could have made an acquisition in a new technology business, and that could be something that could be more accretive to the company going ahead. So those are a couple of other takeaways. The Kinogen has also said that looking at no more acquisitions going ahead, hence there'll be no equity dilution. There'll be a tailwind of about 70 to 80 bips on the ESOP cost in FY26. So that's what Coforge is. The street is not pleased. Citi and Jefferies both coming out with a sell call on the counter. Very quickly, Dharmesh, what did you make of it? It's not a great quarter. The guidance has been suspended. They've even picked up and closed reads on lower margins, which is what Citi seems a little concerned about. And even the acquisition for 250 odd million seems like would have been better if it was invested in new technology.
I think, as far as investment in a new technology is concerned, that's an opinion. And the management of business, the management of Coforge, they are more capable of taking a business call, so which they have done. Why I think they have suspended the guidances, they want to see how the Signity synergy rolls out, and that may take some time before the actual, benefits of this acquisition takes place. And that's the reason why they want to see a couple of quarters, and that is my thought process, and then they may come out with this. However, having said that, the problem with IT space is they are in a spot. If you look at large caps, they were flattish in growth. We did an aggregate of around 22 IT companies which have been reported in the numbers. The growth was 9%. Because of some mid and small cap doing a better kind of earning like Buildersoft, KPIT and all. But at the same time, the valuation at which these companies are trading were far higher, and the expectation was much higher of better margin guidance and better order intake inflows, which has not happened this quarter around. And that's the reason why we are seeing some serious selling pressure. Coforge, you have to give it a time. I think the valuations are pretty high, and this synergy in this turbulent environment has to be seen how it plays out, and that is what market has not liked.
So Citi, Jefferies, JM Financial, to name a few, have cut their target price. Axis Securities, on the other hand, believes that Coforge is well placed for growth given its multiple long-term contracts. But apart from that, most of them do believe there's an EPS cut of 24% for FY25 and 25% for FY26. Aditya, on the charts, tech has not been in great shape recently, at least. Now, the only hope is that if the markets to go into a little bit of a consolidation, correction mode, defensives do well. I know you're more optimistic about the markets rather than being negative. Do you feel like Coforge, a 10% cut today could be bought into for a technical pullback on Monday morning?
Yeah, I think Coforge is offering an opportunity to accumulate the stock. I wouldn't say that to buy everything today, but I would, my view would be to divide the buying in two tranches. That would be today and Monday. So that would be a good way of accumulating this at levels of 4488. And second buy zone for the stock is 4340. I think around these levels, Coforge is a good buy, and there could be a pullback towards level of 4,800 and 5,000. So overall, if I talk about the long term and medium term view, then the patterns are definitely bad. We are talking about a short term bounce in the next week or in this May series, and the buying levels I have mentioned previously.
Sure. Okay. Thank you. We'll, really slip into a very short break here on India Market Close. More on the other side. Stick around. We'll dive deeper into everything that's happened in markets today.
presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching India Market Close here on NDTV Profit. We have with us Aditya Arora, who's still with us. Aditya, you know, just in terms of sectors at this point, we're seeing a flip-flop versus what we saw yesterday, even in the sectoral indices. What's the sense with regard to the sectors that you're keeping your eye out on, especially on charts?
So two sectors clearly stand out for me. One is banking. I think whatever the market outcome or election outcome, I think we are going to see great volatility, or it could offer great opportunities. Like we saw Fed meeting outcome yesterday, and because of that, we saw some volatility. Again, today data will come from USA, so that will again create movement in markets. So I think banking sector is a good buy at lower levels for the May series. In anticipation of election, I think we could see some good buying at the lower levels. And second one, my highest conviction bet would be on Nifty Metal Index. The way international commodities have performed in last few weeks and months, I think that has created good headroom for a lot of metal companies and index itself. Nifty Metal Index is currently trading at 9240. I think one could maintain stop loss of 9,000. We could see upside till 10,000 and 11,000. So I would be a buyer in a lot of metal counters. That really stands out for me, and I think there's good 5 to 20% upside over there.
Two earnings that have just been reported. One is HFCL and JSW Infra. With regard to HFCL, the net profit is up about 53.2%. Revenues are down 7.5% at 1326 crores. And you've also seen versus 1433 crores, which is down 7.5%. To be precise, EBITDA is up 26% to come in at 195 crores. versus 154. The stock is looking okay. It's actually reacted well to those numbers. JSW as well, if I can get those ones up on the screen, that should be helpful. From the face of it, those numbers didn't look too bad either. JSW Infra is also reacting. You can see that sharp spike coming in on the count in the last couple of minutes. Profits have come in at 329 crores. Revenues at 1,096 versus 915 crores. It's up 20%. But I think the margins are a standout. We'll pull that up in a minute. EBITDA is at 581 crores versus 472 crores. So 23% high, and margins are at 53% versus 51.5. So a good set of earnings from both of them, HFCL and JSW Infra. Both those counters spiking up in the last few minutes. We have with us Prashant Tapsi, Senior VP Research Analyst at Meta Equities, now joining in. Hi Prashant, thank you for joining us. Prashant, first up, let's start with what do you think led to this sell-off? We made a life high early this morning. Global cues were looking okay. There were no concerns as such, except for the fact that the VIX had spiked up. But did you hear anything on the street? What led to the markets correcting so sharply?
I think there are two factors one should look at right now. The Q4 earnings are the major factors which are driving the markets. And there are few FII data which are coming out wherein large cap stocks, there are decrease in the FII data. So which is putting some pressure on the markets right now. Second, again, I think there are some geopolitical tensions arising which is giving a spike to the Indian VIX. So which is giving an opportunity for traders to book profits right now. So these are two reasons which I am looking at the selling pressure.
Just a quick follow-up. So I do take your point that it could be a little bit of the earnings pressure. But if you look at the broader markets, which is where the bigger earnings or the earnings have come in first, so you have the RECs, the PFCs, JSW Infra, you've had the likes of lots and lots of the broader market stocks which aren't doing too badly this morning. The losses are being led by the large cap names, and RIL case in point, and ICICI Bank. What is worrying these stocks?
I think what I said is the FII data which is getting reduced. The holding of FIIs are getting reduced in the Q4 numbers. So that is putting pressure on the traders to book profits right now. That is the main reason.
So you would not look at this as an opportunity to buy?
I think with a rally of 1,000 points in last 10 days, 300 points should be a given point to the markets to book profits.
Understood. And how long do you see this pressure last for?
If I look at levels there is another 300-400 points downside can be seen in the markets. 22,250 would be a level one should watch for markets. If we close below that, and we can go towards 21,800 also.
Understood. And you continue to believe that pressure will be on the same names, same set of names, FI heavy names? Is that how one can look at that?
Yes, perfectly yes.
Okay, understood. And therefore, do you believe that this is an opportunity to buy?
Buy on technicals, not on the fundamentals, because yes, the numbers are good, the results are good, but the levels are not right now so good to buy at these levels.
Understood. So something like a Reliance down 2.5% today, that doesn't somewhere give you comfort in terms of...
No, right now, no, because post-result there are a lot of selling pressure in the RIL, and I'm not comfortable with RIL right now.
Understood. Any names at all that you're looking to pick up at this point?
I think again Tata Motors would be the preferred bet for me because of the auto ancillary numbers which are coming out. The index is up, the numbers are up, and it's a great play to play EV, CV and PV in one basket.
And Tata Motors hasn't participated in the rally, and more importantly, it was looking set for a breakout yesterday. Suddenly it's broken down on the contrary.
So I think we can see good rally coming few days.
What about Zomato, Prashant? You tracked that one? I mean, this one's holding up interestingly.
I think yes, you are right in that. Zomato is a very interesting story right now. We have a target of almost 20-25% level from these levels. I think one should buy at these levels, and the story is really great. They are getting EBITDA positive right now, and that is what market was looking for. Market was expecting it will never be on a EBITDA positive level, and these recent numbers are good to see, and we can have a projection for giving at least EBITDA positive and then come back to the PAT positive.
Very interesting. Let's switch over to Aditya. Take a quick take with regard to technicals on Zomato. Aditya, Zomato very close to its highs. At this point, in terms of charts, technicals, how are you viewing it?
So I have suggested buy on Zomato many times in the past, and we have seen one-way rally in Zomato from levels of 49 to 196. I think around this psychological mark of 200, the stock could take some time to consolidate and digest its fantastic rise. And I think it's a good buy at support levels of almost 170 to 180. That would offer a better risk to reward ratio. And from there, I think stock can again take out new highs towards 210 to 220. So overall bias on the stock remains positive, and it would be a better buy at levels of 170 to 180.
Okay, and Aditya, among all the names that were also spoken of, Tata Motors is the other one. Your view on that one with regard to charts?
When we talk about Tata Motors, I think there's a lot of consensus over there, and we have seen fantastic rally over there. My system suggests overbought zone, overbought levels in this counter at levels of 1,000 to 100, 1,100 to 1,100. So as per my technical system, it's a sell on rise at these levels, and we see stock dipping towards level of 900 to 800 in 1 to 2 months or so.
Right. That's the word on Tata Motors and Zomato on the charts. A couple of those broader market stocks that were eye-catching to say the least was the REC PFC twins. Good earnings from REC stable, and the stock has been rewarded by traders and investors alike. And it seems like every quarter REC reports and makes a new record high. Exactly what happened in the previous quarter and exactly what happened in this quarter as well. Prashant, did you track this one? I mean, the move was fantastic.
Fantastic, yeah.
But again, I don't think it came out of nowhere, because even in December quarter, we saw exactly that. Good earnings, the stock went up, hit a 52-week high, and then spent the last 3 months consolidating, and of course, woken up again with a pretty big rally now.
Again, I think I will focus more on the PSU as a sector, where RSC was not performing so well in last 2-3 years. But now the earnings are showing really great. Operating profits are really improving a lot, and the margins also are improving a lot. So I think that is the main reason why one should look at RSC, PFC at these levels, and again look for good profits for Q1 earnings also.
Understood. Bullish on both REC as well as PFC. Aditya, your quick take on both of these?
Trend has been pretty positive for these counters, but these counters have reached a euphoria level, and all the PSC counters seem little overextended on the chart, and Nifty PSC basket also seems pretty overextended. If I talk about the index, then it's trading at 1,246. So as per my system, it's a sell in level of 10,200 to 10,900. We see it correcting back to levels of 9,000 and 8,500. If I talk about REC and PFC, then over here again we are pretty bearish on the counters. For us, the selling opportunity is from levels of 550 to 600, and we see it correcting back towards a level of 500 to 450. And same is true for PFC. We are bearish in this counter. So it's a good sell between levels of 480 to 510. And we see it correcting back towards level of 440 to 400.
Some of these numbers that were reported today, the street seems pleased. So you had Blue Dart, which reported numbers. The stock is done really well, and especially in a day like today, doing a 10% up move is definitely noteworthy. You also had Ajanta Pharma, which reported numbers, 7% higher as we see it. You've got Piramal Pharma that's up 6%. Sterling and Wilson is up 5%. Supreme Industries is back on the winning streak, 5% higher as we see it. Coal India, good numbers. And the counter gets a thumbs up. HAL, BDL, some of those defense names that I want to talk to you, Prashant, about. Till a few weeks ago, that was the big theme to play elections: fertilizers, sugar, and defense. Defense, of course, it's part of a multi-year growth story. Recently, the last few days, stocks like your Mazgaon Shipyard, Mazgaon Docks, Cochin Shipyard, Garden Reach, add HAL, BDL to that list, have been soft. Do you think now may be a good time? And I'm not looking at it from a very long-term outlook, but in the next couple of maybe 6 to 8 weeks, would you buy any of these defense names?
I think yes, because when you see the geopolitical tension making a lot of headlines in the markets, so these defense stocks will obviously be in action. And government is planning a lot of things to do, and there are a lot of orders coming from the export market though. So that will keep this stock in action, and I think the earnings are also matching the price earnings which is going forward. So whatever the earnings, Q4 earnings are coming, which are matching with the demand and supply, and the order books are also giving as a very comfortable level for a short term as well as a long term trend. So we are positive on defense as well.
Anything specifically in defense that you're buying?
And I think Mazagon Docks would be a preferred one for me. I think it has already rallied, but I am positive on that.
Okay, so it's Mazagon Docks that looks good even now, despite the recent run-up that those counters have seen. We're going in the last 30 minutes of trade this week, and it's been an interesting week. We had record highs being made and big falls. We'll do all that and more over the last few minutes. We'll take a break, we'll come back, but stay with us. We'll top buy and buy today, sell tomorrow picks as well from our guest.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your
Welcome back. You're tuned in to India Market Close here on NDTV Profit. One theme which has done fairly well over the last year or so has been power. In fact, over a year now has been power. And with the kind of weather conditions that we're going to be seeing, or already are seeing for that matter, power stocks will continue to remain in focus is the sense. Let me first go to Prashant. Sir, tell me, what's your sense with regard to power at the moment? How are you playing this entire theme? Because there are so many moving parts, whether you call it the transformer side of things or whether you call it the transmission side of things. There's so many moving parts. How best do you play it and where are you seeing value?
I think if you see energy as a sector, there are a lot of things to discuss again. So all the other sectors like thermal and Nirmal and everything, so that will keep on adding a lot of demand going forward. If you see the heat wave, if you see the global heat index again, it is giving us a lot of opportunity for companies like producers of power to gain a lot of traction, lot of demand. So stock like Tata Power, stock like Adani Power will gain a lot of action at this point of time, and we are very much bullish on Tata Power right now.
Understood. And I know maybe not exactly power, BHEL, new order wins also coming in, but what's the sense? Something that's run up maybe 15 times from the COVID lows now. Is there still value left in some of those names? I know PSU and order books are large, but also execution becomes important where there are some companies which suffer from execution issues.
So I think here Made in India would be Make in India and Made in India story will come here to have a lot of order book and visibility of the company. Margins are growing, which is giving me a comfort levels which are on the operating side. yes, valuations are very much high. If you compare last average of 5 years or 10 years in terms of BHEL and all, the valuations are at the peak, but the order book which is giving us a lot of comfort levels to have a hold position right now at these level also. Today it was already, technically it has crossed 300, 312 levels in BHEL. So I think यहाँ से still a lot of momentum is expected going forward.
Understood. And on charts, Aditya, if I can come to you, any specific names within that power basket that you are liking? BHEL is something that Prashant seems to like.
I like Adani Power in power space. The group company is usually gives high beta moves, and I think just before the election, in anticipation of results also, and being in power sector, I like this candidate. So it's a bullish candidate. It could be bought at 607.50. Stop loss would be 570, and target would be 650 to 660.
Right, that's a few of those Adani stocks as well. Adani Power on the charts is what Aditya is talking about. Talking about earnings, let's pull up Raymond and see what the stock is getting up to. They reported numbers earlier today. The stock is doing okay in trade. It's not doing too well, of course, because those numbers were disappointing, but the cut as well is not too large, and I think that's what could be a little bit of a relief. Mahima is standing by with the key details of those numbers. Mahima, what is it like? The stock is down about 2.5%, but it's not getting beaten out of shape, which is a little bit of a relief, I'd imagine. What do they do? What's the outlook looking like? The guidance for FY25 looks promising or not so promising?
Right, Samina. So I'll start with the numbers. Well, in terms of the revenue has been up 21%. EBITDA is up around 29%. Margins have improved around 104 BPS, and net profit is up around 17%. So overall, on consolidated basis, the numbers look good. But before I move on to what the management has said, we've got that the engineering business is to be consolidated in one, and that aerospace and defense business will be separated for Raymond. Now, in terms of the result, the real estate segment has done well. It has picked up momentum in terms of booking post the launch of Bandra real estate project that they had, and at present real estate business contributes around 25% to the total revenues of Raymond. In terms of the textile business, the performance remained muted. Around 2% growth is what they've witnessed during the quarter. And in terms of the acquisition of Many Precisions, that is foraying into aerospace and defense, they've completed this by the end of this quarter. And post-consolidation, Raymond is planning to set up 2 units, one which will focus on aerospace and defense, while the other will cater to the auto components and EV engineering consumer sector overall. So this is the guidance that the management has given for the 2 separate businesses.
Understood, Mahima. Prashant, if I can come to you with regard to Raymond itself, something that people used to call a value play at 1200, 1400. What's the sense now, and what's the scope like in terms of the demerger and value unlocking that's supposed to happen?
I think the valuation wise, it is fully valued right now. Whatever it was called 2 years, 3 years back for value unlocking, I think it is totally valued right now. At these levels, I am not so bullish to buy at these levels again. But again, with respect to the demerger, yes, we need to look at how valuations they are doing for the demerger and how that will be giving rewarding to the shareholders.
Right, that's the word coming in on Raymond. The stock is one that reported numbers at the day's low point now, 3% lower on the stock. Let's put up the Nifty and see what it's getting up to. It's recovered a little bit from what I can see. We've recovered from the day's low point, 22,477. So actually, that's not too bad. We did get very, very dangerously close to break. In fact, we did break 22,400 intraday, but have recovered well from those levels. And I think that could be a reflection of the kind of tussle the bulls and the bears are having. The VIX is up, I think, about 45% in the last 7 trading days. 32% was up until this morning. We've added another 9% on the VIX. So there is uncertainty that we are seeing. Flows continue to look fairly mixed on the FI desk. Some PSUs are doing okay, but the rest of the street is in a little bit of a profit-taking mode. But if I had to pick up on banks, Prashant, how would you view banks? And I want to talk about Kotak in particular. You've had 2 bad newses on the counter in the last few days. They report numbers tomorrow as well. Kotak, would you be constructive on it? Do you feel like this is truly an opportunity to pick up a good quality bank?
Yes, I think we should have a positive view at these levels again. See, if you see the RBI issues, whatever happened to this, it's a common issue every bank is facing from last 2 years. Even HDFC faced the same concern few months back. Even Paytm had such kind of issues, but Paytm was a different story. There was a lot of larger issues. But I think in terms of valuation, I think if you see 5 years back, it was reporting a EPS of around 40 rupees 5 years back, and now it is reporting around 80 rupees EPS, I think. So with the same price again. So I think valuation wise, I think I am going to buy this stock at these levels. But yes, on a technical levels again, 1550 and 1500 would be a level one should watch and then buy.
Understood. Prashant, between an HDFC and a Kotak, both trading, maybe HDFC not as low currently as Kotak's recent lows in terms of relative valuations, where Kotak earlier used to trade versus where HDFC currently trades at. So we've seen lower levels at HDFC, but between the two, is there one of the two that you prefer, or do you believe that both have an equal opportunity?
I have two different opinion on that. For an investor, I think HDFC Bank would be a very comfortable level to buy and hold for long term. For a trader, I think it's a good opportunity to add on these levels and then make a good profit out of that. So, but two banks are very different. One is big in terms of their retail book and housing finance and all. But Kotak is again an institutionalized, commercialized bank for that. So for me, comfort level would be more on the HDFC Bank. For a trader, it will take more on the Kotak Bank.
A trader should pick up Kotak, but if you're a long-term fundamental investor, the 30% bank, like it used to be called in the day, is still looking good. RIL is also seeing some weakness, but let's pull up those candles and see if there's been any recovery in the last couple of minutes. As we go into the last 15 minutes of trade on the street, is looking okay. The Nifty is attempting reclaiming 22,500, now 22,499, 91, 95 now on the Nifty. And I think this is what I am going to take heart from. Aditya, this is what we are going into. There is a little bit of a struggle, but there seems a good chance or a possibility that we may close around 22,500. This is sheer ambition of the bulls, right? And their persistence and perseverance, if I may say. Do you think buying the Nifty is a good idea, or it's not advisable to carry any positions into the weekend?
So as we were discussing a while back at start of the show, at that time Nifty was down about 230 points in the spot. Now it's down about 150 points. So a handsome recovery from there. Those who had taken, I had suggested neutral to bullish view for the day and also put writing strategy. So those who had taken the intraday position, they can take the profits home. They can take chips off the table, but those who are willing to take BTST trade and those who want to take carry forward trade, then I think it's a good opportunity to buy Nifty right now. If I talk about the future level, then currently it's trading at 22,790. So it's a good buy at this level. One should maintain stop loss of 22,450 on daily closing basis, and my target would be 22,600, 22,700 to 22,850.
Right, Aditya was sounding optimistic even the start of the show, where he said that this could be used as an opportunity to consider going long. But Prashant, we've talked about a few stocks that we've identified, but if I had to ask you for 2 to 3 stocks that you're eyeing at this stage and probably recommending doing a staggered buy, today being one of those days, what would those stocks be?
I think I'll go with Tata Motors again, because I'm very much comfortable with the business model and the growth which they're looking for EV, CV and PV. So that would be one stock which I will be aggressively going forward. At least for next 12 months, I can see a good earning growth plus good return on investments right now. And second stock would be Bank of Baroda on the PSU side. The way how SBI has rallied, I think Bank of Baroda and PNB would be the second best stock in the PSU bank, which can go good long for next few months. So I think these are the 3-4 stocks I will be buying it.
So Bank of Baroda and Tata Motors. Pull up Tata Motors. Like I said, it was very ripe for a breakout yesterday, but today, of course, it turned out to be a very different story. It's a decline all the way from 1,038, I think, to about 1,015 now on the charts. Aditya, any buy today, sell tomorrow, or buy today, sell Monday trades?
I would like to go with Shri Cement. Infra space is buzzing. We have seen a lot of PSCs do well. Now I think it's time for private infra company or cement companies to do well. So Shri Cement is a good buy at 22,750. Stop loss would be 24,800 and target would be 27,000.
Interesting. Okay, so those are Aditya's top picks. Prashant, if I can come back to you on the auto space outside of Tata Motors, as well as on the auto sales numbers for April, and what trends seem to be like for FY25 as a whole. What's the sense that you can give us?
So I think even other than Tata Motors, Mahindra & Mahindra would be a great opportunity to look at this, because the new launch, which is 3XO, will be the new trigger for Mahindra & Mahindra. Plus, Mahindra & Mahindra is doing great in terms of EV sales, which is not been still reported because they're not so aggressive. But yes, the performance when we compare with Tata Motors and EV of Mahindra EV is doing a good performance report for the market. So I think second option would be Mahindra & Mahindra to look at.
Understood. Very interesting. What's your sense with regard to Mahindra & Mahindra? Aditya, stock has been on a tear and is doing fairly well in trade today as well, despite pressure on the benchmark.
Since that news of new car launch has come, Mahindra has, again, regained its lost glory. And I think Mahindra & Mahindra was one of the stock who started the fresh rally post-Russia-Ukraine war. And since then, the outperformance of Mahindra & Mahindra has stayed intact. I think even at current level, I think it's one of the finest stock in auto pack. This outperformance could continue in May series as well. Although I'm not aggressively bullish, but I would maintain neutral to bullish stance in Mahindra & Mahindra.
Okay, somewhat of a bullish stance there on M&M from Aditya as well. Let me also switch focus or rather keep it on auto, but switch it to tires, another segment that's faced a lot of friction were some of the tire stocks. And on the back of a government notification, Puneet joins in to give us context perspective on tire stocks. Puneet, what can you tell us? What's the pressure or where is the pressure coming from? What's the impact like?
Yeah, thanks for that. So let me start with the earnings first and then go into the commonality of what the problem is, because all tire stocks are down between 3 to 5%. So for MRS specifically, the revenues have gone up roughly 9% to 6,300 crores, while EBIT, which is much below, which kind of was above estimates of 6,100. But on the EBITDA and the profitability front is where the company has lagged. The EBITDA was up 7%, coming in at roughly 912 crores, but much below analyst expectation of roughly 1,050 crores, while the margins are down 24% for the company, coming in at 14.36%, which is much below Bloomberg estimates of roughly 17%. As well as the profitability is down. The profitability is down from the analyst expectations, coming in at 396 crores versus 500 crores that the analysts had expected. Now, all these, now we do know that CIAT also reported numbers yesterday, and we'll get into it, but the key problem here for all tire stocks is the EPR related provisions that all of these companies have done. Now, do know that this provision is a government notification which asks them to provide for on the earnings that the companies has done over the past few years. So basically, the company has recognized a provision of roughly 46 crores is specific to MRF and for the financial year 22 and 23, which has led to that particular amount coming down, while the provision taken for the financial year of 2023 and 24 is roughly 98 crores. Now, do note under this provision, roughly 35% of whatever amount that is sold has to be provided for and purchased certificates for through recyclers. And this is a government notification which came earlier in February of 2022, and now they've given how to kind of calculate the amount for each and every company. When we look at CIAT specifically, we spoke to the management today. They had said that the exceptional item of roughly 58 crores has been provided, while they say that the government notification is applicable to tire manufacturers under this particular scheme. For FY24, the amount was roughly 70 crores, while they've also told us that for FY25, this will be 1% of their total revenue, and the amount will be close to 100 crores. Do note, just to give some more color, under this particular scheme, it's not just the tire manufacturers that come in. The government notification is on products that are polluting in the environment. So tire stocks certainly affected by this. Apollo still hasn't come up with earnings, but we'll see if this provision is included in those numbers as well. Back to you.
Okay, Prashant, your views on any of these tire stocks? Up and away, of course, elevated in terms of valuations, but what's your sense?
I think Apollo tires would be a very comfortable level where we are looking to buy for long term. But with respect to whatever the government regulations are there, we need to wait and watch and how that will affect the profitability. But overall, with respect to auto ancillaries and tire stocks, we are going to have a good volume growth going forward, the way how the Tata Motors, M&M are there performing well. So overall, we are bullish on that.
Understood. And what about MRF? Numbers came out today.
Yes, not so comfortable. At the end of the day, against the estimations, they are weaker than market estimations.
Understood. Slightly lower than market estimates. In fact, the stock also down roughly 4% as we speak. Aditya, let me take it to you. Just with regard to what's your sense with regard to some of these tire stocks? Prashant seems to like something like an Apollo. MRF numbers came out, stock down 4.5%. Any kind of views on levels with regard to some of these counters?
I think on overall tire space, I would like to wait a little bit before, we could see some stability in prices. Among all the stocks, I still like Apollo tires. I think that is an outperformer, and outperformance could continue for some time. But overall, in the sector, I remain neutral as of now.
Sure. Okay, let me switch focus. Tushardeep Singh, my colleague, caught up with Rakesh Sharma, the Executive Director at Bajaj Auto, on the launch of the biggest Pulsar yet, the NS400Z. It's a 400cc bike. And listen into a slice of that conversation.
Foremost, ever since NS series was launched in Pulsar, and met with a lot of success, particularly amongst people who wanted high-performance motorcycling. There has been a big requirement from the fans of when are you getting a bigger Pulsar? Actually, even though we did not release the information about it being a 400, the market and the customers had already guessed it, that there is going to be an NS400Z. So that was the foremost thing. Second is that we felt that there is a need and there is an open space right now over here for high performance street biking, to bring high performance to everyday use. If you see, the Dominar 400 is more of a sports tourer. It is for longer rides. It's got a longer wheelbase, it's heavier, it's got, it has been positioned for people who would be, using it in the city, but really would be wanting to take trips, weekend trips, longer trips. The KTM brand is more edge of the seat, very high level of thrill, takes expertise to manage a Duke 390 or a RC 390 kind of a thing. With the Pulsar NS400Z, and its price of 1,85,000, we bring high performance, everyday biking, street biking within the grasp of a wider audience.
Well, Bajaj Auto in focus on the back of that new launch. But we're very, very close to market close this week. And therefore, I'd like to thank Prashant as well as Aditya for their views and for spending the better part of this show with us and giving all of those views to our viewers. But let's switch focus back on to India market close. You're down around 0.75% on the Nifty 50 from roughly 200 odd points, which is where we were in terms of the negative at the lowest point. We're somewhere, we've improved a wee bit from that point. So Definitely a positive there. You're also seeing the Nifty Bank see a bit of recovery. But let's pull up the heat map, see where some of those rates are settling at, especially something like a Reliance. Definitely in focus today after the kind of pressure we've seen on the stock. It was down almost 3% when we started this show. It's down roughly 2.2 in trade today. So clearly the pressure sustaining. Larsen & Toubro also down nearly 3% in trade. Among the gainers, I'll switch focus. Coal India on the back of numbers as well as dividend, of course, 4.7% higher. You're seeing outside of that far and few in terms of the gainers. SBI, ICICI Bank pretty much flat. Shriram Finance, which has had a good week, also largely flat. But Bajaj Finance, which started off on a very, very strong note, all of those gains leveled off. You're down, or rather you're up just about 0.7% as we close. Bajaj Finserv also just 0.5% higher. Mind you, this started 6+% higher, that counter in trade. Outside of that, you're seeing pressure across the board. Whether you talk of an IndusInd, HDFC Bank, JSW Steel, all of which are seeing plenty of pressure, down 1 to 2%, all of those. Let's pull up the sectoral charts, see what could possibly be trading in the green. Except for the PSU basket, absolutely nothing. IT continues to lead the losses. Probably the top sectoral loser on the Nifty, at least this week. You're seeing infra as well, down around 1.25%. Realty also seeing some pressure, 1% down. Let's pull up IT actually and go within that in terms of constituents. We've closed for the day as well as for the week. Pretty much all constituents in the red except Infi, which is just about by the skin of its teeth closed in the green. Coforge, of course, leading that pack of losers, but Tech Mahindra also seeing pressure outside of that, so 1.5% lower. But you're seeing pressure across the board when it comes to IT. Let's also pull up the Nifty Bank and its constituents, because Kotak Bank was in focus through the week. What we've continued to see is pressure on that one, 1.6% lower on that stock. Outside of that, Bandhan also having its set of issues with regard to leadership, 1.6% lower as well on Bandhan. HDFC also down 1% or so. What really got spared was ICICI and AU, absolutely flat, and SBI just about 0.1% higher. Let's pull up the BSE 500 before we go to the advances declines as well as the mid cap, small cap end of the market. Some few names, of course, largely earnings dominated. That's been the situation, at least within this pack. If you see the top gainer as well as the top loser, rather the top loser as well as probably the 2 out of the top 3 to 4 gainers are all earnings candidates. MRF also on the back of earnings, HFCL also on the back of earnings, Raymond too. Let's pull up the mid cap as well as the small cap indices, see where they've settled in at close, where we've closed in at when it comes to them. Mid cap 0.4% lower, largely in line with a slight bit of outperformance versus the benchmark on both those counts. Quickly on the advanced decline before we close out for the day. There you go. We've not closed at the worst point of the day clearly, but the breadth of the market clearly extremely weak. 2:1 in favor of the declines. That's all from all of us here at NDTV Profit for this week. We'll see you on Monday morning, of course, but do stay tuned. More on the other side of this commercial break.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money,
Hello and welcome. You're watching the Small and Mid Cap Show. One stock that is in focus on SMID today is Blue Star, which came out with its Q4 results. And to break down those numbers, we have with us Mr. Veer S. Advani, Chairman and MD of Blue Star, who joins us now. Welcome to the show, sir.
Thank you. Good morning.
Yeah. So, Mr. Advani, my first question to you is good set of numbers. Just give us some color as to how the quarter has gone by and how FY24 has shaped up for you.
Thank you. So I think we had a great year. We closed the year with revenue of 9,685 crores and EBITDA improved to 665 crores, including an EBITDA margin improvement from 6.2% to 6.9%. I think that was, and the great thing about the year, in my opinion, is that it has been, performance has come evenly from both our B2B businesses and our B2C business. If you look at segment one, which is our B2B businesses, they did about 4,700 crores of revenue with about 341 crores of EBIT. They improved the EBIT margin from 6.9% to 7.2%, whereas the B2C businesses, which is segment two, did about 4,600 crores with about 360 crores of EBIT. We were able to maintain the EBIT margin in segment two in spite of the competitive intensity increasing substantially. So it was a evenly weighed improvement overall, both in top line and in bottom line.
Understood. And what do you attribute this growth to? Was it because of volumes or price hikes?
So no, we haven't been able to achieve any price hikes. I think the good thing in Q4 was that there was no erosion in prices operating in the market. I think that was also on the back of everyone thought would be a good, strong summer. So I'd say pricing has been maintained. Our margins have improved because of a very focused total cost management program that we have running across all our product businesses, as well as, of course, scale. We are at a top line, we're able to drive about 21% growth. So certainly scale effect has helped us.
Understood. And in terms of margins, they've remained in the range of that 7% mark. I want to understand that going forward, is there a scope of improvement that you're seeing? And if yes, what kind of levers will augment that growth?
Sure. So I think that we're getting to a reasonable EBIT margin right now. I think that there is some room for improvement, probably a little bit more in segment one, where we have some more flexibility because of our operating position there. So I think segment one EBIT should improve by another 100 basis points as we look forward. Segment two, we're indicating about 8 to 8.5% EBIT is realistic. I think that, all the capacity that is coming online. Of course, demand is growing, no doubt, for room air conditioners and refrigeration products, but capacity is obviously coming online much faster. So there will be competitive pressures. We're confident of maintaining this 8 to 8.5% looking forward.
Okay. And, in terms of your order book, which is at present, approximately 5,600 crores, if you can give me the breakup as to, how much, from which segment is this order from, the entire book, and, what are the execution timelines for the entire 5,600 crore order book?
Sure. So, the order book, I don't have the breakup by segment, but I can give you sort of indicatively what has happened. While we've grown the order book about 12% to 5,700 crores, there's a big shift in the mix in this order book. So earlier you used to see a very heavy content of commercial buildings, which is developer business in here. we have actually reduced our exposure in that segment, partially because we've been focused on other segments and the market, commercial real estate market has been slow for the last 2 years. Most developers have been focused on residential, which is a segment that, we don't address from our projects business. Most of the growth and the transition in the order book is on account of factories and data centers. We've seen tremendous growth there, as well as, of course, selectively in infrastructure. In infrastructure, we've seen some good order inflow in water and railways. Metro projects continue to be finalized. So it's a mix of, but really the real growth has come from our focus on data centers and all kinds of factories, including semiconductor plants and electronics manufacturing, many of which we booked in the last 6 months.
Understood. And Mr. Advani, in terms of your cash on books, it is doubled as compared to FY23. So, as far as I understand that you had raised 1,000 crore QIP, a lot of it is from the QIP that you've raised. But, I just want to understand that this doubling of cash in your books, what are you going to utilize it for?
Sure. So you recall when we had raised the QIP funds, 1,000 crores around September, we had mentioned that the real focus for us is CapEx. We had CapEx in manufacturing, in R&D, in digitalization. These were the three major areas. Of course, growth required working capital, but we were confident about managing that through internal accruals. We're executing our CapEx plan. This is the third year of our CapEx cycle. I think we have another 2.5 years to go. We were able to deploy a fair amount of CapEx into both manufacturing and R&D in FY24. But yet, cash flow has been very strong. I think March was an all-time high collection for us as a company. So the teams have been working exceedingly well at managing working capital. So this swing from a net debt of 200 crores to a net cash position of 400 crores, a swing of 600, of course, is because of the QIP, offset partially by the CapEx we've invested, but then, brought back up because of the working capital efficiency. So going forward, as a company, we do intend to keep some amount of cash on the books from a resilience point of view. 200 to 300 crores of cash is what we expect on the books. We have an ongoing CapEx plan. We should spend another 400 to 500 crores of CapEx in FY25. But internal accruals are now starting to kick in as operating margins improve. So you should see a cash balance of 300 to 400 crores going forward in spite of the CapEx cycle continuing.
Got it. And, in terms of your capacity utilizations, as per your last con call, they were around 80%, right? But, because of the heat wave coming in, I'm sure you have a lot of orders kicking in. So I just want to understand that, at 80% capacity utilizations, do you see any kind of capacity constraints when it comes to fulfilling these orders?
Yeah, so we are operating at a high utilization. We have been timing our CapEx to the market. You know that we have a modular approach to CapEx, which means that for us to, if I talk about room air conditioners, for us to bring on 500,000 units of capacity is relatively quick and simple because we built all the surrounding infrastructure for it. So I don't think we see any challenge with capacity. Of course, in the current summer season, demand has been unprecedented. You've been reading, you've been seeing the results of us and our competitors. April has been another great month. I think industry, the great thing about the industry this year is that tertiary and secondary sales have been very strong in March and April as well. So this is not just inventory, piling up in the field. This is actually consumers coming to retail stores and lifting material. So there is some shortage of SKUs in some markets in the industry, and both for Blue Star as well. But because we are all in-house manufacturing right now, we have a great opportunity and position to be able to deliver and change our capacity execution fairly simply. So some of these stockouts that we're seeing at the end of April, early May, should be sorted out as early as the next 10 to 15 days.
Okay, well, Mr. Advani, with that, we're completely out of time. Thank you so much for taking out time and speaking with us at NDTV Profit.
Thank you. Thanks so much.
Well, it's time to slip into a short break, but on the other side, we have the management of REC joining in. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money,
Good morning, welcome. You're watching NDTV Profit. I'm Harsh Saitak. Quick check on where REC is doing in trade today, but we have the management of REC. The stock has been on a tear at least over the last 5 days. Stock is up 22%. And over the last 1 year, it's up 4x. Over the last 2 years, the stock is up nearly 5.5 plus x. So it's been a multi-bagger of sorts across time periods, and it's been a very solid performance from Q4 as well from REC. To give us more perspective as well as to understand what we can expect going forward, we have with us Mr. Vivek Kumar Devangan, who is the Chairman and Managing Director at REC Limited. Firstly, welcome and pleasure having you here, sir.
Thank you, Harsh.
Sir, again, first off, congratulations on a very strong quarter yet again. You've beaten what street estimates had really pegged with regard to your Q4 numbers. I want to focus in on that, especially with regard to recoveries, because that's the real number which has given you a leg up in terms of what estimates were versus what you delivered. Talk to us about the write backs as well as the recoveries which are coming through with regard to FY24 and what one can expect for FY25 with regard to this number.
FY24, we got recoveries of to the tune of about 750 crore. And going forward for FY25, as we are planning to resolve all the stressed assets, we are expecting write back to the tune of about 1,500 to 2,000 crore.
Understood. Write back of 1,500 to 2,000 crore. This is net of any loan losses which you will incur as part of this recovery process, is what I assume.
Yeah, that's true, because some of the assets are heading towards liquidation. For that, we already made 100% provisioning, and some of the assets, the operating asset for which we have made provisioning about 70%, we are likely to get very good returns from that, because our haircut has been limited only about 20 to 30%, and we are expecting better resolution, because KSK, Mahanadi, Sinnar, Nasik plant, Hiranmaye, they are going to give us better returns.
Understood. For viewer context, 14,000 crore is the profit after tax for FY24. You're expecting 15% of that number just in terms of recoveries for FY25. I want to try and bring in context with regard to growth as well, because you were expecting to double your balance sheet in the next 4 years. How confident are you of that number?
We are quite confident, actually. In 22-23, we started with a loan book of 3,85,000. At the end of 22-23, it rose to about 4,35,000. And in FY24, our loan book has increased to 5,09,000 crore. So there has been a growth of 13% into 22-23, and FY24 we saw growth of 17%. We are expecting this growth trajectory will be able to maintain, and 15 to 20% growth every year we are expecting. That's why we are targeting to double our asset under management to about 10 lakh crore by the year 2030. But if this growth trajectory of 17% continues, then perhaps we may achieve this asset under management of 10 lakh crore by the year 2029 itself.
Okay, so before I go to 2028 or 29 FY, which is roughly the trajectory which you're currently taking with regard to doubling loan book, I want to first talk about the levers with which will probably help you get there. You're getting into infra financing. You are getting into financing of renewable energy, both on the individual side as well, rooftop solar and the like, as well as renewable financing in terms of renewable energy financing in terms of the industry and the scale which the industry requires in terms of financing. What are these levers like in terms of growth? So how will the book shape up with regard to these 2-3 new levers, as you would call it?
Let me tell you that our renewable energy portfolio is at around 35,000 crore. We are expecting a tenfold increase in our renewable energy portfolio to say about 3 lakh crore by the end of 2030. With regard to non-power infrastructure logistics, our loan book is about 50,000 crore, and we are anticipating that it will see fourfold growth by the year 2030. Will reach about 2 lakh crore by the end of 2030 for the non-power infrastructure logistics. Plus, one more additional component has been added, that Central Electricity Authority and Ministry of Power have worked out the base load requirement for the country, and country will still require coal-based thermal power plant to the tune of about 94 gigawatt capacity by the year 2032. That will also give us additional lever for increasing our loan book.
Understood. So just the rough math that I'm doing, basis what you've just suggested, just these two new verticals will probably add roughly 4 lakh crore to your current balance sheet. So are you expecting prepayments, repayments to therefore in some form dampen growth on the thermal side of things, or you're expecting thermal also the demand to be quite robust? So probably a 10 lakh crore plus kind of a number by FY28.
Yeah, that's what we are expecting, that we are targeting 10 lakh crore by the year 2030 actually, but it appears to me that we'll be able to reach this 10 lakh crore before by 2029 itself, 28-29 itself we might achieve this, because renewable energy portfolio is really going forward, because last year we have sanctioned about 1,36,516 crore. That was a jump of 533% as compared to FY23, that was only 21,554 crore. Similarly, coal-based generation capacity, because within 8 years this additional capacity has to come. So therefore, the sanctions and approval will have to be done next 2 to 3 years. For that also, our sanctions loan book for coal-based thermal power plant will also increase.
Got it, sir. And sir, with regard to margins, therefore, you earlier had a guidance band of 3.3 to 3.5%. You've upped that to 3.6 now. You feel comfortable with this number is what you seem to suggest. So tell us, is this something like a medium-term target or guidance, 3.6% margin, and sustainability of that?
Yeah, we have made constant efforts to reduce our cost of funding. Our cost of funding has gone down by 15 BPS from 7.28 to 7.13%. We are making a judicious mix of our borrowing, particularly external commercial borrowing with innovative hedging techniques has helped us to bring down the cost of external commercial borrowing to say at around 6.6, 6.7%. And that's why we are targeting to bring down our cost of funding to say about 7%, and we hope to hold on to this net interest margin of about 3.55 to 3.6%. And our spread is also improving. Last year our spread has improved by 41 BPS from 2.45% to 2.86%.
And this is despite all the prepayments you've seen in FY24. Do you see that prepayment trend kind of continue into FY25? And you holding on to surplus liquidity, yet you've done this kind of margin. So I want to try and understand whether prepayments are expected to continue. You see that trend continuing, and despite that, margins will hold. So therefore, would you therefore expect some margin upside from here?
Yes, actually, the very nature of renewable energy, you have to see the business actually. The turnaround time of renewable energy projects are very fast. It gets commissioned, solar and wind projects get commissioned for a period of 2 to 3 years. The developers wants to exit and they want to invest their equity in some other project. So there is likelihood of prepayment for this commissioned renewable energy projects actually. But the prepayment which are going to happen, we are going to meet through the large scale volume of sanction that is happening actually. My loan book for the project pipeline for the current financial year, for example, is quite strong actually. For renewable energy projects, I have a pipeline of about 1.75 lakh crore projects are already there. Then conventional generation, transmission and distribution, we have huge pipeline projects. This year we are targeting total sanction of about 4 lakh crore. But since these projects get commissioned over a period of 5 to 6 years, the disbursement will keep happening over a period of 5 to 6 years.
Understood. And sir, just with regard to, I'll try to switch focus here. With regard to net NPAs, you're guided for bringing it down to 0%. I want to understand what is the impact of that on your P&L that one can expect in FY25?
Yeah, our gross NPA is about 13,800 crore, and those assets which are heading towards liquidation they are about 2,222 crore, for which we have made 100% provisioning. Remaining assets, we are expecting a good resolution, and since we have made provisioning of 70%, we are expecting that we'll get write-backs to the tune of about 30 to 40%. In some cases, it may go up to 50% also. The total write-backs would be say around 1,500 to 2,000 crore. That will add to our P&L account.
Understood. Got it. And this is so you will have a positive number of 1,600 to 2,000, and you'll have a net NPA of 0 at the end of FY25. Is that how your P&L will shape up?
Yes, that's what.
Okay, understood. So a net write back of 1,500 to 2,000 crore is what you're anticipating.
True.
Okay, understood. And sir, just with regard to last off, what this does to your profit after tax, maybe not in FY25 because there will be these write backs and these one-offs, but in terms of overall credit costs as well as profit after tax growth, you've done 13% on your top line over the last 5 years. I've pulled out the numbers, but you've done 20% on your bottom line. That's because of OPEX. Your OPEX has been extremely controlled, extremely muted in terms of its growth. Sure. I want to try and understand at 17% AUM growth all the way to FY28 or FY30 while you're doubling, how will your profit after tax move? Will it be 25%? Is that how the math will work? Because as you scale, that advantage will come to you.
You're rightly analyzed actually. Our asset under management will grow around 17 to 20% actually over the next 3 to 4 years. And our profit after tax is bound to increase to say about 23, 24, more than 23, 24%.
Understood. And so last off, with regard to dividend yield, you will continue the 30% dividend yield policy regardless, and would you require any extra capital while you are growing, because you're a high cash flow or rather high profit business, and therefore capital adequacy will remain healthy despite you not raising capital, or will you require a capital raise? So dividend and capital raise.
Yeah, our dividends, since we are a government company, we have to follow DIPAM guideline. So 5% of the net worth or 30% of the profit after tax, whichever is higher, we are bound to give that dividend. That trend will be on the upward swing only. With regard to capital adequacy ratio, because a lot of projects which are approving in distribution segment and that are supported by government guarantees actually. So we'll be able to keep the capital adequacy ratio of more than 25%.
And no capital raise required.
Yeah, no equity infusion would be required.
So no equity dilution either. Okay, thank you so much, sir. It's been a pleasure speaking with you, getting all of that perspective on REC. Extremely interesting play. super bullish with regard to the way in which this is moving, at least street analysts, and the way they're looking at how REC is shaping up. So many congratulations. Wishing you all the very best for FY25.
Okay, thank you so much.
Right, REC, that one in focus on the back of earnings. We've had this understanding and guidance coming in from management with regard to a plethora of factors, and it's been extremely insightful. Thanks so much for watching. Completely out of time on this one. Stay tuned to NDTV Profit for more.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody.
Market reverses early gains to end lower as losses in heavyweights drag the indices down. Both the benchmarks close around 1% lower. Most broader indices finish the day lower. Bajaj Auto unveils the biggest Pulsar yet, also the cheapest in the 400cc class. ED Rakesh Sharma speaks about the company's dual-pronged business approach, targets both commuter and premium segment at the same time. A scheme for gig and platform workers is said to be on the Labour Ministry's 100-day agenda. Sources say that the government is in talks with aggregators and talks on the contributions to the Social Security corpus are underway. Rahul Gandhi files nomination from Rai Bareli Lok Sabha constituency as the Gandhis opt out of the Amethi and field Kishori Lal Sharma from the seat against Smriti Irani. Fresh FIR filed against JDS leader Prajwal Revanna in connection with the obscene video case. A youth alleges that his mother was abducted after a video of her being allegedly tied and raped by Prajwal emerged. Hello and welcome. You're watching The Reporter on NDTV Profit. And as always, this show aims to bring you the market headlines along with national and international news. But before we move on to the show, it's time to see how the markets fared during the day. I'm joined by my colleague Harsh Saita for a quick wrap of all the market action.
Well, negative day for markets to close the week off. We saw the Nifty down around 0.75%. Very similar number on the Nifty Bank as well. Pressure on both the Nifty as well as the Nifty Bank to close this week out. Nifty Bank, in fact, has had a bit of a whipsaw this week, very close to all-time highs and then coming straight off. Now let's also, or rather very close to 50,000 before it came straight off. Let's quickly move across with regard to the heat map, see what's moved in the Nifty 50, because you saw pressure across the board, but there were certain pockets where the pressure was particularly strong. Look at the likes of an RIL down 2% odd, a Larsen & Toubro, a Maruti, anything between 2 to 3% lower on those three large counters, right? And you look at some of the other names which have done well. It's earnings heavy and it's specific. Something like a Coal India has done very, very well, 4.8% higher. A Grasim something like an SBI was largely flat on a tough day of trade, Shriram, ICICI within the banking pack, Infosys within the IT pack. But outside of that, you look at the IT pack, pretty much all constituents in the red. And you also look at the banking pack. Outside these three, you look at an HDFC, Kotak, IndusInd, all of which faced tremendous amounts of pressure. Pharma, well, you look at Sun Pharma, you look at something like Divis, all of which were largely in the red. Cipla was in the green. Let's quickly move on to the broader markets. First to the advanced decline, if we can. The advanced decline, we've closed roughly at possibly the lowest point, but there's a bit of a recovery in terms of the advanced decline ratio at the fag end. So that's probably a positive, but not really. 2:1 in favor of the declines. The breadth of the market extremely shallow from that midpoint onwards. Let's go across to the mid cap and small cap end of the market, and we've seen the mid cap and the small cap indices outperform by just about a wee bit. That's what we've seen today. The BSE 500 top gainers, top losers list largely dominated by earnings. You look at something like a Coforge, an MRF, an HFCL, a Raymond, all of which were lower on the back of numbers. Let's also pull up the sectoral indices and specifically focus in on two. One is the PSU pack, which has done very, very well, and the other one is the IT pack, down around 0.9%. Outside of that, realty and infra were the top drags, but within IT, if we can pull up the constituents, what we'll see is pretty much all constituents in the red outside of Infy. So the pressure on IT was solid, especially given the Coforge numbers. Bajaj Finance, to just finish this one off, started 6% higher, but closed largely flat in trade, around 0.2% higher. Not bad on a day like this, but quite muted given the kind of start it had for the day. So that one was in focus as well as RBI lifted its embargo.
Well, thank you, Harsh, for that quick market wrap. Let's take a look at some auto news now. Bajaj Auto launched its Pulsar NS400Z, which is also known as its biggest Pulsar yet. Now, through this motorcycle, the company has gained a new flagship, and it is priced at 1.85 lakh rupees. My colleague Tushardeep Singh spoke to Rakesh Sharma, who's the ED of Bajaj Auto. Let's hear what he had to say about the company's motive behind launching the new model.
Foremost, ever since NS series was launched in Pulsar and met with a lot of success, particularly amongst people who wanted high-performance motorcycling, there has been a big requirement from the fans of when are you getting a bigger Pulsar. Actually, even though we did not release the information about it being a 400, the market and the customers had already guessed it, that there is going to be an NS400Z. So that was the foremost thing. Second is that we felt that there is a need and there is an open space right now over here for high performance street biking, to bring high performance to everyday use. If you see, the Dominar 400 is more of a sports tourer. It is for longer rides. It's got a longer wheelbase, it's heavier, it's got it has been positioned for people who would be using it in the city, but really would be wanting to take trips, weekend trips, longer trips. The KTM brand is more edge of the seat, very high level of thrill, takes expertise to manage a Duke 390 or a RC 390 kind of a thing. With the Pulsar NS400Z, and its price of 1,85,000, we bring high performance, everyday biking, street biking within the grasp of a wider audience.
So essentially, affordable power to the masses is that was the theme of the Pulsar so far. What are expectations from this Pulsar 400? We've seen a pretty great reception from the audience today. What are your expectations from this particular motorcycles in terms of the sales in India, its exports, and where are you making, in how many numbers this particular motorcycles are?
So, we don't have a volumetric and precise expectation. The first thing which has driven us to do this is to be faithful and true to the Pulsar brand value of always trying to do something better and constantly, widening the envelope. If you see for the last 24 years, there are a lot of firsts which are to the credit of Pulsar, whether it is even something like a simple disc brake, which has become very, very usual. But when it was launched, it was the first from Pulsar. Starting from there, and triple spark, 4 valves, and all those things. There are many, many oil cooling, projector headlamps, and tubeless tires, even stuff like that. So the first thing is that we wanted to continue to demonstrate to so many of our users and fans that there is a constant thrusting forward in the brand, and there is a vitality when you introduce something like that. So it is, and then the second point is that when we compare the penetration of high-end biking in India with other countries, even for example, I take Nepal, the presence of performance biking in Nepal is, as a percentage of the total motorcycle industry, is far greater. And if you compare it with Latin American countries with similar purchasing power, you will see that there is a lot of higher level of use of these class of bikes. And we feel that by making high performance biking at this pricing available to a wider audience, hopefully the category will also develop, and it will give us the encouragement and the reason to then continue to place more products.
Well, now let's take a look at the commodities space. Oil is heading for its biggest weekly decline since February. Easing geopolitical risks in the Middle East and weakening across fuel markets are supporting this fall. Brent traded below $84 per barrel for a weekly loss of more than 6%, while West Texas Intermediate was near about $79. Hamas, in fact, is studying a proposal for a temporary ceasefire with Israel and plans to send a delegation to Egypt to continue the negotiations. Meanwhile, data from the US this week showed another slide in implied gasoline demand ahead of the key summer driving season. That was a quick chunk for you on the commodities section. Moving on to an NDTV Profit exclusive for you. We understand from our sources that a scheme for gig and platform workers is part of the Labour Ministry's 100-day agenda. Janani, our colleague, joins us to shed more light on this report. Janani, what have you gathered from your sources, and what will this scheme, and in fact, how will it benefit the people going ahead?
That's right. We're getting to hear from sources that, in fact, scheme for gig workers is part of the Labour Ministry's 100-day agenda. Now, what exactly is a part of this, and does this have any precedence? Now, the labour codes were passed as of 2020 in the Parliament. However, they're not being implemented as of now. Now, it is expected that the labour codes will be part of the 100-day implementation agenda. And the 100-day implementation agenda, or what we're calling as the 100-day agenda, is essentially the government's directive to various ministries to prepare a plan for the first 100 days of governance and what they intend to implement in those first crucial days of the new government. Now, what we're getting to hear is that the Labour Ministry is in talks with platform aggregators. Now, older media reports suggest this is the likes of Zomato, Swiggy, Urban Company as such. And what they're looking at is how to onboard their workers onto the eShram portal. And they're also discussing on the Social Security Corpus Fund. Now, the Social Security Fund is part of the labour codes. It suggests that 1 to 2% turnover of an aggregator would be a contribution to the fund. Now, the ministry is in talks with aggregators on this particular amount and also on onboarding their workers onto the eShram portal and mapping the gig worker network, as it were. Other topics also in discussion with regards to the labour codes is decriminalization, ease of doing business, female workforce participation, reducing the compliance burden, and of course, working on the gig and platform workers scheme. This is all we're hearing as of now. So we'll get back to you with more details as and when. But it's expected to firm up in the weeks to come. Back to you in the studios.
All right, thanks, Janani, for bringing that NDTV Profit exclusive for us. Now, Adani Green reported a 21% rise in its fourth quarter profit. The company, in fact, also lifted its 2030 renewable energy target. Let's go across and see what ED Sagar Adani had to say about the company's earnings and the growth targets.
Adani Green Energy is India's first and the fastest renewable energy player to achieve 10.9 gigawatts operating capacity. It is a testament to our focus on project execution, operational excellence, building resilient supply chains, innovation, and leveraging technology to enable affordable and renewable power. In FY24, we strengthened our market leadership with 2,848 megawatts of greenfield capacity addition, which marks a 35% year-on-year increase. The capacity addition by Adani Green alone accounts for over 15% of India's total renewable capacity addition in FY24. We are developing the world's largest single location renewable energy plant of 30 gigawatts in Khavda.
Well, we have a quick update coming in on Apple. The company has reported its second quarter numbers. And in fact, if we look at the commentary, CEO Tim Cook seemed quite enthusiastic about the company's growth plans in India. We are now joined by our colleague who will shed some more light on it. Rish, thanks so much for joining us. A lot of commentary coming in from Tim Cook on Apple's India prospects. So why don't you take us through it, what all he said, what are the future prospects looking like for India?
That's right, Prakriti. We have Apple's Q2 earnings, and that was accompanied by very, very bullish commentary on not just India but China as well, Asia rather, as a continent. Like you mentioned, Apple CEO Tim Cook said that he couldn't be more excited and enthusiastic about Apple's performance in the Indian market. He said that the March quarter was also a record quarter in terms of revenue. Sales grew about a strong double-digit growth in India, as well as from a production side. The headline for me was that Tim Cook said that to be pragmatic and to actually be competitive in today's market, Apple has to produce from India. So we can expect a lot more in terms of investments, in terms of manufacturing facilities coming in from Apple in India. He also said that there is also a very rapid growing base of developers that Apple is nurturing right here in India. Coming to earnings now, Apple's revenue fell about 4%. That was about $90.8 billion for the quarter, but that also still beat the analyst recommendation of $90.3 billion. We also saw that Apple's shares gained as much as 8% despite the reduction in revenue quarter on quarter. So we're seeing Apple, the tech giant, doing what it does best. It is constantly posting record high quarters in these growth markets, and its India story is something to be tracked too.
Well, record high numbers and indeed Apple's plans to come to India. Very interesting story. Thanks so much for joining us. Viewers, it's time to slip into a short break for now, but please stay tuned because we have lots more lined up for you on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, what?
Welcome back. You're watching The Reporter on NDTV Profit, and now it's time to shift our focus to the election buzz. The Gandhis have opted out of their bastion Amethi as Rahul Gandhi filed his nomination from Raebareli. In fact, Rahul Gandhi was expected to make an all-out bid to win Amethi back after his mother Sonia Gandhi vacated the seat. Now, will this move work in Rahul Gandhi's favour? My colleague Tanishq Punjabi joins us with more on this. Tanishq, what does this entail for Rahul Gandhi and Congress, and how can it change the trajectory of these elections?
We are right now outside the Congress office in Raebareli, and you can of course see there is of course a lot of people, lot of Karyakartas who have gathered here. Rahul Gandhi has filed his nomination. Along with him, of course, was Priyanka Gandhi, Mallikarjun Kharge, Robert Vadra, Sonia Gandhi. His whole family was there. Rahul Gandhi, after filing his nomination, there was a roadshow, show of strength that happened here at the Congress office in Raebareli. From here, they went to the collectorate to file the nomination, and after the nomination, Rahul Gandhi came back here to his office, and now he has finally left the Congress central office in Raebareli. Remember, it was speculated that first Rahul Gandhi would be contesting from Amethi, but that did not happen, of course, leaving a chance for the BJP to attack the Congress, saying that now Rahul Gandhi got scared of fighting from Amethi. But it is KL Sharma who is fighting from Amethi against Smriti Irani, and Rahul Gandhi himself against Dinesh Pratap Singh of the BJP from Raebareli. Sonia Gandhi has been a member of parliament from Raebareli, and it is considered a Gandhi turf. Sonia Gandhi has been a member of parliament from Raebareli. It has been a Gandhi turf. Now again it is Rahul Gandhi, her son, who is contesting from here. Of course, there were speculations that Priyanka Gandhi might herself enter the poll battle, but that did not happen this time. But I would like to show you the scenes here at the Congress office. It is just not the Congress Karyakartas, but also Samajwadi Party Karyakartas that are present here, of course, showing a front of the India bloc. At the same point of time today, KL Sharma also filed his nomination from Amethi, and while KL Sharma was going to file his nomination, he also held a roadshow, and Priyanka Gandhi was there in a show of support of KL Sharma. He has been a Gandhi family confidant for a very long time, a Gandhi family loyalist for a very long time, and used to look after the affairs of Raebareli and Amethi.
Well, soon after the Congress made this announcement, Prime Minister Narendra Modi reacted, saying that Rahul Gandhi is scared of Amethi.
मैंने तो पहले ही कहा था कि इनकी बड़ी ने मैंने पार्लियामेंट में कहा था, तब तो चुनाव को 2 महीने की 3 महीने की देर थी। मैंने कहा था इनकी सबसे बड़ी नेता चुनाव लड़ने की हिम्मत नहीं करेगी, वो डर के मारे भाग जाएगी, और वो भाग करके राजस्थान गई और राजस्थान से राज्यसभा में आई, और हुआ भी यही। मैंने पहले ही बता दिया था कि शाहजादे वायनाड में हारने वाले हैं, और हार के डर से जैसे ही वायनाड में मतदान समाप्त होगा, वो दूसरी सीट खोजने लग जाएंगे। और अब दूसरी सीट पर भी उनके सारे चेले चपाटे कह रहे थे अमेठी आएंगे, अमेठी आएंगे, लेकिन अमेठी से भी इतना डर गए, इतने डर गए, वहां से भागकर अब रायबरेली में खोज रहे हैं रास्ता। ये लोग घूम कर सबको कहते हैं डरो मत, मैं भी आज उन्हें कहता हूं, और बड़े जी भर के कहता हूं, अरे डरो मत, भागो मत।
Well, interesting turn of events indeed happening in the election season. But let's take a look at another news coming in from the election buzz. Trouble mounts for former Karnataka Minister H.D. Revanna and his son Prajwal Revanna. A youth has now alleged that his mother was abducted after a video of her being allegedly tied and raped by Prajwal Revanna has emerged. I'm joined by my colleague Pratibha to tell us more on this.
With respect to the pen drive controversy that have been grabbing the spotlight in Karnataka with respect to JDS Lok Sabha candidate from Hassan, Mr. Prajwal Revanna, there are a lot of cases that are coming forward. Well, we already know about the first FIR that was registered in Hassan district, where one of the women complainants had suggested that she was sexually harassed by both Prajwal Revanna as well as his father, Mr. H.D. Revanna. She has also gone on to say that she was not just sexually harassed, but her daughter as well was privy to all the video calls that were done with Mr. Prajwal Revanna, where vulgar conversations were forcefully exchanged. Based on which the IPC section 354 was under that it was registered, this particular FIR, based on which the SIT also made its first move. The accused number 1 is H.D. Revanna, accused number 2, Mr. Prajwal Revanna. There is also another FIR that has come forward and registered at the SIT based on another woman's complaint, where she has suggested that it was Mr. Prajwal Revanna who misused his power and allegedly raped her when she went seeking a favor which involved a hostel seat for one of the girls there in Hassan district. And that is precisely when Prajwal Revanna allegedly threatened to kill her as well as her husband. He had also mentioned that he possessed a gun, and because of the fear of her life, she had to comply with his demands, and he allegedly raped her multiple times. He would call her several times, blackmailing her, stating that he would leak the video because he had already videographed the act. He would also allegedly video call her and ask her to strip several times. Because of this video and the blackmailing threat, as well as the threat to kill her as well as her husband, she did not really come forward to file a complaint. But now that the special investigation team is looking into this case, she has mustered the courage to come forward and file this complaint, based on which the second FIR has been registered. Now,
moving on, NDTV's Maria Shakil and Uma Sudhir spoke to Hyderabad MP and AIMIM Chief Asaduddin Owaisi on voter apathy in the first two phases of the 2024 Lok Sabha elections, and if there is any concern regarding that. Let's take a quick look at what the conversation was about.
That is a responsibility and a challenge for all political parties and also Election Commission of India. Because if you're holding elections in such severe heat, number one. Secondly, schools are closed, and the families want to go out. We are requesting the people that please wait till 13th, because the campaign ends on 11th, that is the Saturday, Sunday and then Monday. So people believe that, oh, we get 3 days off, let us go somewhere else. That is a big challenge for us. So yes, polling percentage has to be increased, and the other important point is that we have been requesting the Election Commission that in last 15-18 years there has been no communal riots or incidents in the Hyderabad Parliament constituency. Why is it that you are not reviewing majority of the polling stations are being classified as critical, as very sensitive, when there has been no incident? So, but unfortunately, the Election Commission, in their wisdom, have taken a decision that also has some sort of impact on the voting percentage. But yes, everyone will have to work hard, every political party, to ensure that people come out and vote. In fact, in my public meetings, I have been openly saying that even if you want to vote against me, please come out and vote against me. But please do, exercise your right to vote.
The voter list sanitization, whatever they call it, the maximum number of deletions perhaps have happened in your constituency. Both Mr. Feroz Khan, who was a BRS candidate from Nampally, as well as Madhvi Lata, have alleged that it's because of the kind of falsification of numbers that you have enjoyed an advantage in this constituency. How do you react to that?
See, if someone wants to do a self-goal and shoot in their leg, I cannot stop them, I welcome that. This particular Congress candidate, in October 2023, he had given that same number, 5 lakh odd. We went to the Election Commission and told them it's all rubbish, nonsense. There's no truth in it. Anyway, they did their own homework. They did their own exercise.
Well, that's all the time that we had for you on The Reporter, but please stay tuned to NDTV Profit for fresh news and updates along with our continuous coverage of the Lok Sabha elections 2024.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither.
Good morning and thanks so much for joining in. You're watching NDTV Profit and this is Ask Profit. My name is Alex Matthew. Let's take you through what's happening with the markets before we get to the queries that you have for us. And you've seen quite a bit of a drop in the last hour or so of trade, and you can see that a falling pattern on the screen intraday, of course, and you see the high point of the day early on in the session where you hit fresh life highs for the benchmark Nifty 50. At this juncture, we're trading at very close to the low point of the day, about 0.5% lower. In fact, let's also pull up the broader market gauges and you see that those two are also down about 0.33% at this point. You have the mid-cap index on the screen right now, but you also have the small-cap index that's losing about 0.33% or so. And so, understandably, the market breadth is tilted in favor of the declines at this juncture. In fact, let's look at some of the key contributors on the Nifty 50. And you will notice that a couple of the big names are pulling the benchmark lower. Right on the top of the declines, you see Reliance Industries as well as HDFC Bank that are contributing to most of the declines at this point. You also have Larsen & Toubro and TCS that are underperforming. At one point, you had the Bajaj twins that were doing particularly well in trade today. Bajaj Finance as well as Bajaj Finserv. Bajaj Finance, in fact, gaining at one point close to 7%, but it's now up just about 2.5% or 2.7%. In fact, let's pull up that intraday chart and see where it's currently trading. 2.7% or thereabouts is where Bajaj Finance is. And let's talk about that stock in more detail. But before we do, I want to go across to the technical expert that we have today, Rajat Bose, independent research analyst, is joining me on the show. Rajat, what do you make of this recent drop? Recent, I say, and by recent, I'm talking about the last hour or so. We've seen quite a precipitous fall. What do you make of the change in the market breadth?
Well, what I would say is that, see,
in my reckoning, 22,734 was the projected Fibonacci resistance levels. And we have seen that today, as well as two trading sessions back, we have seen 783 high and today 794 high, 22,794, I mean. So these two highs are only 10 points from each other. And unless you take out 22,734, that day also it couldn't, and today also it couldn't. So it is showing weakness. But one heartening thing is that now it has come very close to 20-day moving average as well as the 9-day moving average, which is 9-day is at 22,507 and 20-day moving average is at 22,455. So this 50-point range is actually a very crucial support zone. Unless it is taken out on the downside, the Nifty in late session might again show a surge. But whether it would cross, if you ask me if it would cross the 22,794, I have doubts, because this is a very critical resistance level. It is unlikely to be taken out in this manner. It has to be, it would start from below, and then during the day 22,800 is taken out. Then only we could have said that, yes, this could be a real breakout. And other thing is that there was a huge support from Bank Nifty on earlier occasions, but today already it has come down by 350 points. Even the Nifty Junior, that is also 305 points down. So there is some amount of profit taking and people are a bit apprehensive. So while I do not expect it to fall below 450, 22,450, at the same time, I don't even expect it to go beyond 22,800.
Okay, fair point. 22,800 is what you should watch out for in terms of levels. Of course, the Nifty 50 trading just above that 22,500 mark at this point, and again at the low point of the day. Let's talk about Bajaj Finance, because this is, according to me, one of the stocks of the day, despite the fact that is currently now significantly off the high point of the day, now up about 2.75% or thereabouts. Harsh is joining in to tell you about the implications of the regulatory update that we saw earlier today. The notification, of course, is that those consumer loans that were stopped, Harsh, are now restarted. What are the implications?
The implication, Alex, and we've been saying this since the morning, is not massive. In terms of AUM growth, what we are hearing from analysts as well as Citi putting out its note is that the growth number will just go to the upper band of the guidance. So 26 to 28% was the guidance. The fact that this has come in at the front end of the financial year, growth will be more even through the year, and therefore you will get a slightly higher growth number, just about 2% for this year. So maybe a 28% kind of a number AUM wise. But really the significant positive here is the fact that Bajaj Finance has been able to resolve these RBI issues in a span of 5 months. When I'm looking at all past precedents, HDFC Bank, Paytm may be an outlier, but HDFC Bank, Diners Club, MasterCard, they've all taken anything between 6 to maybe even 15 months to resolve their issues with the regulator. This 5-month kind of a shrunk timeline is a first off, and that is the key positive. Of course, the other one being the sentiment positive on Bajaj Finance. The stock had taken a bit of a beating as well, probably the sentiment turning positive. So those two possibly the key factors here. In terms of impact on your PNL, the Q4 numbers, profit before tax was impacted by 4% as a result of this particular embargo.
All right.
So maybe that will expand by 4% for the first 2 or 3 quarters, which may not have been anticipated by analysts.
Fair point. All right, Harsh, thanks so much for breaking that down for us. In fact, we've also got Ashish Kapoor, Chief Executive Officer of Invest Shop, joining in. Ashish, quick view on Bajaj Finance. What did you make of it? Of course, it's off the high point of the day today. Ashish, if you can hear me, what do you make of Bajaj Finance? It's off the high point of the day, but significant development?
Okay, we seem to be having a bit of an issue with Ashish Kapoor's line, and we will go back to him as and when we get to fix that. In the meanwhile, let me take a few questions.